interesting that we saw industrials, financials, tech bounce back on Friday, and so that was somewhat reassuring. As did Bitcoin, found some stabilization. What do you think about the market action?
Not surprising. I mean, February is the second worst month of the year, not only in terms of average price change, but also frequency of advance. This is a midterm election year. If you look at basically a compounded return day by day throughout the year, you tend to find that we end up in a soft pattern.
They are very large numbers, and a lot of folks come on the show and they say, maybe you don't need to make a bet on who's going to win and lose necessarily, but you can invest in what everybody's been calling the picks and shovels, right? The infrastructure. And some of that is in those places people have been rotating to, right? Industrials, for example, that service, or the grid, for example, various plays on that. Do you think that's a way to look as well at this whole situation?
It is a way to look, but if you do so, just make sure you know what the adoption policy is, what the diffusion policy is. There's two parts of AI. The one we mostly focus on, it is the frontier models, those working on AI. But monetization of these things we talked about is about something else completely. It's about those working with AI. How will adoption happen? Will it be even? Will it be fast? How inclusive will it be? So if you are in this space, make sure that you know what diffusion phenomenon you are betting on, because we may not get the sort of diffusion that a lot of people are assuming when they go to all these opportunities that we're talking about.
And Mohammed, when you talk about also looking for things that are sort of broken in the market, you gave one example there, things maybe that have been oversold indiscriminately. How do you sort of define broken more broadly, and how people try to look for those opportunities in the market?
So when you have massive volatility, and you've been talking about massive single name volatility, we also have quite a bit of index volatility. But when you have volatility, and that's one of the three themes for this year, what you're going to see is overreactions, both on the way up and the way down. So good stocks will sell indiscriminately, and bad stocks will go up. So you've got to be much more selective. And then there's the opportunity of completing markets. For example, if you are part of the surge into private credit in advanced economies, ask yourself, how am I competing in the market? You're not competing in the market. There's so much money going in there. If you want private credit, go to emerging economies, where
Good morning.
what market imperfection am I addressing? Or what overreaction am I addressing? And I think that you'll see this over it. It explains why the macro funds have had such a good January, is that is how they are wired. And I think that this year is going to be this year of volatility, in which there's going to be a lot of opportunities, but a lot of risks on the way up as well.
You mentioned macro, and you're historically a macro guy, so I do want to ask you about the two big reports this week. One on the job market that is coming on Wednesday, and one on consumer inflation that's coming Friday. And there too, do you think that perceptions of the U.S. economy are broken right now, or what do you think that folks are sort of getting wrong as we ramp up to that data?
So on the employment report, it's really striking.
All right. Good morning. Good morning. All right, let me just look through this. I posted this, but I didn't read. Okay, what Brett has to say. Macro data a lot this week. We knew that. CPI, PPI. Futures are down. We just went red. We just went red on the screen. We were green before.
Seeing, is it a supply issue in the labor market? Is it the demand issue? On inflation, it is critical that goods inflation doesn't go up too much as service inflation.
All right. Let's see. The New York FANGs, they look okay. They could look better. I did get assigned 500 shares of IWM on Friday. I had the 265 call. It closed 2 cents in the money. Got assigned shares. Took that off this morning. What's it doing right now? Let's see. Okay. IWM. Okay, it's just chopping around here. IWM. So I had 5 calls left, 265s. I wasn't paying attention on Friday. I keep telling everyone else to pay attention, and I don't pay attention. I mean, this is like the 3rd time in the last couple of years. The one thing about being assigned shares, if you, especially on a Friday, that of course you have to hold over the weekend. It's nothing to really panic about because even if it caused you to trade some margin, first thing they would do is take off the position you just put on. So anyway, got out of that this morning unscathed. It's one of the reasons why I like trading the S&P 500 big caps, because you can't get assigned. Every point that you are in the money, you either make $100 or you lose $1,000 per contract. $100 probably. My apologies. $100 per point for every option that you have in the money. So if you have 69.50s and we close at 69.51 and you have one contract, you make $100. If you close at 49.99, you don't make anything. You're still out of the money. Reverse is true for puts, of course. If you have 69.50 puts and we close at 69.49, you make $100 per contract. All right, we're starting to bounce here. I don't know what that was all about. Anyway,
Yeah, you take your victories when you can, Mohammed. I guess that's the takeaway from it. Great to see you. Thanks so much for joining us.
Thanks for having me, Julie.
Coming up on Yahoo Finance is opening bid. The host of Opening
okay,
Bid.
Bitcoin. What are you doing? Bitcoin's been flagging over the weekend. Just below 71,000. We're currently trading 69,000. Looking for that discount to fade away. I don't know how much longer this will be down here. Okay. The Brent talking about the software space and making some, I might do something here as far as selling some put credits. Implied volatility is pretty high. People have started selling puts down below. Let's look at IGV. IGV. Okay, enough of this crap this morning. Why do they feel a need? I'm not looking forward to Super Bowl talk. Okay, so Seattle won, right? I didn't even watch the Super Bowl. I didn't even watch. I'm too busy doing other things. I had so much to do. I didn't watch it. I was really surprised to see. I didn't realize that the Patriots had made it that far. I don't know why. I just assumed that they weren't doing that great since Brady left. But anyway, neither here nor there. I really don't care. Football has really kind of lost its luster. It's just changed so much. Okay, let's see who's talking here. Who's talking? Okay, futures are starting to bounce. We got 3 minutes to go. 3 minutes to go. We got about 10 stocks green on the NASDAQ 100 at the moment. 10 stocks. 10 stocks green, about 40 are declining, about 10 are advancing, the rest are unchanged, 40% unchanged on the NASDAQ 100 and DX. The Qs. Okay, we're inside the top part of Friday's candle. Okay, first 15 minutes, I'm not doing much of anything except reassessing the markets. We had a huge move on Friday. We'll see if we can maintain that strength or if we're going to fade back into Friday's price action. I'm not going to assume anything. I'm just going to wait. Yeah, I'm not going to comment. I'm not going to comment, even though I have already. Okay. Okay, getting ready for the opening. Oh, shoot. Let me get this going here. We're open. We're open. First 15 minutes, I'm not doing much of anything except taking profits off the table, reassessing the markets, looking for a trend after 9:45. Okay. Microsoft selling a bit. There goes Broadcom bouncing. All right, so there's New York FANGs are all over the place. The Qs are lower. Let me see. I sold IWM. Okay, good. IWM. If you're just joining us this morning, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, February the 9th. February is like the second worst month of the year. So just keep that in mind when you're going balls to the wall and buying stuff at the highs here. We've had quite a run on Friday. I did run a scan. I used Gemini. And what I did was, I don't know why we haven't done this before. Let me see what my history. Okay, so I asked Gemini to run a scan of stocks that are just crossing above the 60-minute 20 EMA. I'm looking for long setups. Okay, so Intel, ExxonMobil, let's look at these. Intel. Okay, Intel's off a little bit. Okay, so 60-minute XOM. Okay, XOM is trending, so is Chevron. Okay, Chevron is flat at the moment. Micron is lower. I do have puts on Micron. I'm looking for a little bit lower. If it bases here, that's fine too. If you have shares, I don't think you really have a whole much to think worry about Micron. I just have some puts. That's all. Let's see. Tesla's off a bit. There goes Nvidia. Okay, so Nvidia did move back above the 20 EMA. Okay. All right. So we're starting off the day. Pretty strong. You can see the volume down here. There's been puts being sold on Nvidia. Nvidia, been seeing puts being sold. I don't know, Money, if you've seen that too. Nvidia.
Oh my, I fear for Sydney Sweeney. I hope she makes it through unscathed. Matt, I'm looking at shares of Novo Nordisk and Hims and hers this morning. The drama continues. Novo Nordisk said that it was suing him.
Okay, cool. Thanks. Awesome. Okay, so puts being sold, prices above Nvidia, price above a rising 20 EMA, 60-minute, and daily. Thank you, Money. Appreciate it, as always.
I guess lower prices all seems pretty obvious. That's what they're looking to do, and more friendly. Right. I mean, as a boy from the great state of Ohio, where we used to frequent the Kroger, right? It seems pretty clean and very friendly. I see.
Doesn't Walmart have like mandated like happy greeters?
Okay, Apple's down. Meta's starting to move here. So Meta, let's see where Meta is. Meta. All right, Meta's trying to move above the 20 EMA.
CIO and Chief Market Strategist Keith Lerner is back with us here. And Keith, we haven't mentioned much that the Dow Jones Industrial Average went over 50,000 on Friday. When I was a kid, that would have been like headline news, Wall Street Journal, front page. Does it not really matter that much anymore?
It still matters, but I think in some ways, kind of when we started our conversation, like the New York, this kind of broadening trade that we're seeing domestically and globally has gotten lost so much because we're seeing like the S&P 500, which has such a concentration in tech, be relatively flat. Where underneath the surface, you're seeing some really, good action for the overall market. So it still matters, but maybe.
All right, Nvidia.
When you and I were a bit younger, and I had some black hair.
Okay, so keep that in mind. You got two of the New York FANG components ready to go, it looks like. Nvidia in much better shape. Well, I don't know. It's all debatable. Let's take a look at Meta. Daily bouncing at the 50-day. Okay, S&P is bounced back. We've still got 14 handles to go. I'm not in a big hurry.
Is the jobs data at this point is somewhat lagging. We know we have this kind of fiscal punch coming through or stimulus in this first quarter, and the market is clearly saying that it believes that transport's making a fresh high along with the Dow Jones as well. So, I mean, I guess that is the risk.
Okay, let's look at New York FANGs had gotten sold pretty aggressively. Okay, so we've got work to do. Apple's not helping. Okay, there goes Nvidia. Nvidia ripping now. Nvidia popping. Okay, Nvidia. Big move above the 50-day. Nvidia.
Well, it seems like it matters less and less. Like the Dow, maybe we had a great conversation with Rick Reeder about this on Friday. He pointed out, the people that are at risk in the job market just aren't as.
So Nvidia looking good.
GDP growth. I mean, as you're mentioning as well, Keith, right? Because we've got high net worth individuals doing all the spending, the giant, hyperscalers doing all the capex. The government is pouring stimulus into this economy. So even if we get larger unemployment, it's not going to mean a slowdown in GDP. And frankly, the interest rate tool isn't as effective. How important is the Fed for this market?
In the near term, I don't think it's the main driver. I think corporate profits are the main driver. That's the North Star of this bull market that we've been speaking about over the last year. And what we're seeing is forward earning estimates for the S&P are at a record high. But what's important is we're seeing that broaden to small caps and mid caps. We're seeing strength there. But we're also seeing that international emerging markets just had a strong uptick. And now maybe one comment on the job market as well. I know a lot of times we focus a lot on how much job growth there is from month to month. What's really important now.
Okay, so additional stocks that are above the 20 EMA. Let's see, Conoco, mostly energy names. ConocoPhillips. Okay, these continue to move higher. So just let your winners run. Okay. CVS, CVX. Okay, S&P is doing a nice job of returning back to a positive. Let's see what New York, what the S&P hedge flows look like. Okay, hedge flows. This is 0 day. Let's see what non-zero day. Non-zero day. 0 day. Okay. This is non-zero day. So 69.40 is resistance for the S&P 500.
The big movers, the gold, the Bitcoin, I guess software ETFs. Is there anything, Keith, that you think hasn't recovered yet that the market's overlooking? Maybe we should buy.
Mm-hmm. Oops. Oopsie.
Being about 40% above its 2-day moving average. So that's going to take some more time. There's still some structural drivers are there. On the software side, Matt, I think it's going to be one of the things where it's almost like gold, but the other side where the rubber band keeps getting stretched, and you'll have a snapback. I don't think it's going to be leadership because there's just it's something that's hard to disprove, even though the earning trends are relatively well. It's just getting a bit overdone. So at this point, I would say more broadly on tech, even though we have more than that exposure. On tech, the tech multiple has moved down from about 32 to about 22 multiple. So pretty sharp reset on fields in general. So the early trends are still the strongest in the market. So I would
Okay, watching hedge flows. We continue to rise here. Hedge flows. We had a huge move on Friday. We'll see if we get a bid here. More stocks going green. We started off with about 10. We're about 40 now. S&P still going here.
Which 6 months ago that would have been crypto. So I do think that's a change in the market dynamic, which has seen become very correlated. Okay, so I have 30 deltas, puts and calls set up. The reason I do this is for obvious reasons. One of the reasons I do this is because I want to see who's got the bid. Okay, if you can see who has the bid, and you couple that with the hedging flows, that helps out a great deal in seeing trends as they develop. Damn it. Send that to put side. And let me grab the call side. 30 deltas. 30 deltas are 69.55 right now. Okay, so trying to get back to green on the day. 69.40 is right overhead. 89 percentile below is 69.20. That's a 90 percentile. So we want to see positive gamma. Positive gamma will slow things down a bit. Keep things kind of sticky. We want to see more positive gamma.
especially right below. We want that positive gamma to be there. Dealers will buy dips and sell rips. Whereas once we drop below these purple levels here and we move into the reds, we get dealers start selling. Okay, so there's not a whole lot right now. It's purple. There is positive gamma for now below, which is good. We're pushing a bit higher. Watching the S&P at the moment. All right, so the markets are rising.
At Wells Fargo, we deploy capital strategically to help clients scale.
All right, so we filled the gap. Moving back up for now.
Watching some of the headlines from earlier this morning. Hey, Brandon.
Hey, good morning, Carl. As you highlighted, Hims cratering while Novo shares pop. The pharma giant filing a lawsuit this morning against the telehealth company, asking the court to permanently ban Hims from selling all compounded versions of its drugs, citing patent infringement. The FDA, which referred Hims to the DOJ on Friday, also threatened legal action. Now, in response over the weekend, Hims said they would pull their GLP-1 oral medicine that they announced only a few days prior. Novo in the complaint saying other pharmaceutical companies that wish to develop and make generic semaglutide products have applied for FDA approval. Novo's legal counsel telling me this is about patient safety.
Bitcoin moving a bit higher. Bitcoin moving a bit higher.
Hims airing a Super Bowl ad last night calling America's healthcare system broken, saying America's wealth gap is in fact a health gap. CEO Andrew
IWM, looking for that follow through. Had a nice little descending channel on the 60-minute. Okay, looking for a follow through.
Challenges for sure they have. Carl, Novo telling me they want the elaborate regulatory system back in place to crack down on mass compounding. A clean cut win though here. At its core, Hims is operating within a loophole of the law to offer personalized
S&P.
The language of the law needs to change, and Novo sees this lawsuit as their
Be nice to see the follow through rather than confuse the situation. We had this nice run up on Friday. That's the high that we were at there. That's the high. That pivot. Okay, 21 days there, 50 days below.
I wonder if you had thoughts on the Super Bowl last night. We've had some discussions this morning how it used to be a lot of beer ads and
Don't want to hear about the Super Bowl.
Gee, the stock's at a new high today, and they raised their dividend today. So pretty exciting to see this stock up about 50% in 1 year. So, I mean, if you're in that position, you did very, very well, way outpacing
It's also
the S&P.
It's also a story about diversifying your portfolio. Right?
Yeah,
You don't need to be just in U.S. stocks. You could be in foreign stocks. There's a
Right.
lot of momentum there.
Yeah, look, I'm a well wisher. I mean, I hope all the companies do well and all the folks do well for their 401ks and IRAs. James, great to see you, James Stemmert of Main Street Research. Thank you for being here. Coming up, the key levels to watch here on Wall Street.
Okay, watching that MACD below as well.
Mentioned gold and Bitcoin. Lot to look at right after just a quick break. We'll be right back.
Okay, pushing a bit higher. MACD is bullish.
Sometimes, you know, you could have done better. Same goes for where you invest.
Okay, S&P still moving higher.
Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Opening Bell. Want to take some key levels to watch, and right now, lead market technician Rick Ducat is with us, and he's looking at what we need to watch closely.
Okay, let's go see what's working here. We have only 129, 130 stocks advancing on the S&P 500. 130. On Friday, we had 400 and I want to say 70 at one point advancing. The Qs, we only have 29 stocks advancing. So this is telling me to just chill and wait for a trend. There goes Micron. Micron blasting off there. Micron just popped. Micron popped there, Frano. I know you're in Micron. NVIDIA still going. All right, NVIDIA. Yeah, I have calls too there, Brother Bill. I got calls on NVIDIA.
Some points to watch here, but you can see that our trend has moderated somewhat. We had a sharper, steeper trend in blue going up. Now it has somewhat lessened here. We have still an upward sloping trend line, but our white line going across our lows.
All right, NVIDIA is still moving.
Slope in this case. So now when we assess our other studies and our RSI, we can see a bit of bearish divergence here on the RSI. Price is grinding out higher and higher closes, but RSI is trending lower. So a bit of a mismatch, not exactly what you want to see if you're bullish, not a crystal ball that tells you a decline is coming, but it's showing that the pace of the gains is slowing down when we're already at these highs. So just some food for thought there to consider. When we do also finally look at our volume profiles,
NVIDIA on the move, so is Broadcom. Apple's off, Microsoft bouncing. Okay, let's keep an eye on NVIDIA. NVIDIA on the move. Okay, let's see.
Thank you so much for this chart. Okay, folks, now it's time for our market meetup panel. My pleasure to bring in George Silas, Senior Markets Correspondent, and Joe Mazzola.
Okay, so NVIDIA, the 20 EMA, we're coming up against some resistance now. We're above the 20 EMA on the 60-minute and the daily.
Yeah, that's a really interesting question, Nicole, because I think you have to look at different pockets and different sectors. If you kind of look at the Dow, just because of its industrial component,
NVIDIA.
The weighting and the price weighting, that looks really strong. But looking at the S&P and you kind of look below the surface, you see that communication services, tech, that's not really participating, although you got a nice bounce on Friday and it might be carrying.
Looks like shorts have covered on NVIDIA. S&P pulling back a bit.
Those aren't the generals you want leading the charge. And I think in order for us to maybe see all-time highs in the S&P 500, we need our participation a little bit more from tech. A couple things that have
got a lot of resistance overhead. Above 69.40.
CapEx AI spend, whether it's Google, whether it's Amazon, those are both companies that produce pretty good numbers, but just the follow through in terms of how investors responded to the CapEx spend. I think that's interesting, and I know George is going to talk a little bit about
NVIDIA ran from the open right around 184, almost 10 points already.
I think you make a great point about maybe having a little, having tech participate, because for all the decades I've been standing here,
Okay, additional stocks that are moving above the 20 EMA on the 60-minute. Ran a little scan. Intel just below. JP Morgan, the banks look really good too. The banks look good. JP Morgan fading a little bit into this. Wells Fargo dropped below the 20 EMA, but buyers came in and just pushed it back up. Let's see what PNC looks like. Bank of America on the watch list. Citigroup. PNC. Caterpillar also looked good. Caterpillar following through. Okay, Caterpillar following through.
That's showing some weakness. Transports, on the other hand, showing strength. So cyclical strength in the
Not yet.
transports
It's in the top part of Friday's price action. Caterpillar.
happening in the tech sector, and I agree with Joe too.
Oh, Caterpillar.
As we have growth participate, mega
Plug Power. Plug Power moving above the 20 EMA.
can happen any day because we're so close.
Okay, so it's just getting started. It's been on a downtrend, Plug Power, for the last few weeks. Looking for turning back up. Not really crazy about that chart. Okay, so we'll pass on Plug Power. Occidental Petroleum. Oxy. Okay, the one thing I do note is that we only have about 25 stocks advancing at the moment. We had about 40 at one point. We have 123 stocks advancing on the S&P. This is telling you to just take it easy at the moment.
But nonetheless, it's a tough market. It's very sloppy in terms of dispersion within the technology sector, but the value-oriented cyclical names, transports are performing well. That seems to be the case going forward, particularly because value has been outperforming growth. But unless the mega cap names pick up, it's going to be tough for the broader markets, absent the Dow, to break out.
And I'll add that Microsoft had a downgrade to hold at Melius Research with some threats from AI to hold from buy with a $430 price target, and saying that the business of Microsoft, the 360 business, faces threats from AI, meaning it needs to increase its capex markedly to keep pace with Google and Amazon.
S&P is still fading from the high today at the moment. Back to below. $10 down, 10 points down on the futures.
Really interesting comments this morning from Hats that you don't normally get
Micron pulling back.
Pre-warning of the job announcement on Wednesday. And remember, it is Wednesday this week. It was supposed to be Friday last week, got pushed to Wednesday, the non-farm payroll.
Okay, let's look at sectors again. Sectors, we want to see what is the strongest. XLB. Okay. XLC Communications, Meta, just pulled back, Meta, below the 50-day. Energy, still showing the most strength. Energy, financials trying to get above that bullish sloping 50-day. The banks, KRE, at the highs. Okay, industrials, XLI, in the upper part of Friday's price action. We had a big move on Friday, so to see a little bit of profit taking early on, not surprising. People who weren't paying attention on Friday saw a big run up in the evening into the close. They got off work. They looked at their brokerage account over the weekend. Oh, okay. So I made a lot of money on Friday. Let me take some profits on Friday. So once that initial selling dissipates, maybe we'll get a trend. All right. Caterpillar looks like it wants to keep going here. Caterpillar looks like it wants to keep going. Okay, let's go back and look at Cat. Cat looks like it's going to go here. I know, Bill, you like to trade this. I know Russell likes to short it from time to time. Caterpillar looks like it wants to go. Okay, let me take a look here. Earnings whispers. Caterpillar. Okay, Caterpillar did report good earnings. Okay, all four metrics green. They sold over 700 natural gas fired generators for a data center in Utah. That's just one. I imagine that's going to be a trend. Kohler also sells big gensets as well as GNRC. Okay, GNRC. Let's see what that looks like. That's trending. Okay.
Plus, cash management solutions, all designed for investors like you with unlimited
Markets bounced and now are just sitting here trying to figure out if we're going to fade this move or if we're going to hold up here. So bulls and bears are just sitting and watching. I'll do the same for now. Netflix is down again, down to $80. Netflix. What's Oracle doing? Oracle, Fran, I was saying Oracle was moving this morning off the low. I've had ORCX from over here back in October, right over here. This started to look like it was going to take off again. It's not a big position, but it's off quite a bit. Looking for this to turn back up. That's in my long-term account, so not worried about that one. I'll worry in maybe 10, 20 years from now. Most of these stocks will be higher, I'm sure. Oracle. Okay, you could trade ORCX as well. What are the nukes doing? Nukes. Okay. Oclo. All right, starting to bounce. Descending channel. What about the metals? Heavy metals. Rare earth metals. All right, that's starting to bounce. Critical CRML. Below the 50-day. S&P just sitting here. I'm not doing anything until the markets start trending again. Higher low, higher high. Chevron looks like it wants to do something here. Chevron. Okay, just trending. Chevron, I have the 180, 185 calls, spreads. Oclo.
Schwab has been with us for almost 25 years through purchasing of houses, opening
Microsoft. We'd like to see Microsoft at a minimum base. A V-shaped recovery would be nice too. A lot of puts being sold in the software space. Tech software. Okay, a lot of puts being sold. That's a good sign. Do I want to jump in right now and sell puts as well? Nah, not at the moment. I'll wait for the first little retracement. If we put in a higher low, then I'll sell some puts. Put credits. Microsoft dropped a lot more than I thought it was going to drop. We had to take that position off. This gap down. Very interesting. This is day 8 on the gap down. Okay, Microsoft.
We have plenty to hit on both here and abroad over the next hour. Very busy show, so here's a look at what is coming up. When it comes to the larger macro picture, one of our guests believes that the latest manufacturing data may represent an economic turning point here in the US. Find out why coming up shortly. In the morning trade, we will look at the latest story in the weight loss drug space. Hims and Hers pulling its generic Wegovy pill. And we'll also bring you an example trade for Spotify ahead of Tuesday morning's earnings report. But for now, let's take a look at where markets stand around half an hour into trading off the back of course, the Dow Jones crossing the 50K marker on Friday. We are now pulling back off those levels right now. We actually had a down day for the major averages, as we can see here. We've got the S&P 500 just really teetering around the flat line. It has been a little bit of a choppy start to kick off a fresh trading week. A very consequential one, of course, with the jobs, the CPI as well. We have a number of earnings reports to throw
IWM. Yeah, I had 500 shares assigned. I did take some. I did take some of them off. I had calls on Friday. I was taking half off. I wasn't paying attention. Didn't think we were going to close above 265. That was a huge move. That was a huge move on Friday. Into the close above 265. It closed right at 265.02.
Landslide victory for Takaichi. We have got the Takaichi trade back in action. We have some strength, though, coming through for dollar yen. We'll talk about that in just a little bit. Let's
look across to some of these futures products right now. We are seeing the 10-year at 421 at this stage. We are seeing some positioning heading into, of course, this big week with respect to the macro data. We've got the Dixie right now. It's pulling back. It's sitting at about 96, 97. We, of course, have seen that yen strength coming through for us this morning. We will get to that in a little bit. We've got gold, which is picking up. We're above the 5K marker right now. And, of course, Bitcoin, which continues to be a big story. We're still sub 70K right now on the cryptocurrency. So that's where things stand. That's the scorecard as we get up and running for a big week in trade. So let's get to Kevin Hinks now, who joins me.
Okay, Apple's still fading.
Good morning to you, Kevin. Obviously, we've seen this nice landslide victory for Sanae Takaichi, the Prime Minister over in Japan, at the weekend. The Takaichi trade back in focus, 57K on the Nikkei 225. But the interesting part,
Micron pulling back now. Micron.
this morning approaching 160. We're actually seeing that sitting at 155 right now. So it seems like they're giving a bit more credence in the growth story than.
Okay, let's look at some of these oil and gas names. Valero Refining. Valero closed down early in their California location, from what I understand. Valero, they had lots of penalties. It's funny, the government, this is not a political statement, but the government regulates Valero, but tells them they can't exit unless they pay fines. I guess they never thought they'd ever pay fines, but anyway, Valero's out of California, I believe. Valero, if I'm not mistaken, Valero.
But if you're looking for why that's happening, go no further than the Japan elections, Japan stock market up big
Okay,
overnight,
Valero,
rallying against the dollar. Yeah.
Benicia Refinery in California, full halt expected by April 26th. I thought they said that they closed it early.
Absolutely. I mean, we will be talking about the impact of the JGB yields on our U.S. Treasury market as
4 days ago.
later on with Kathy Jones of Fixed Income. Just want to talk to you about the stock market now, Kevin. Obviously, you've been doing this for a long time. You've seen, obviously, the Dow hitting.
Okay, so we know that they're going to close down. So the point is that Valero recovering from that little dip this morning. Valero might be a trade there if you're interested. All right, so NVIDIA, I'm not in a hurry to jump into the markets right now. We've got, okay, there goes the S&P. S&P on the move now. S&P on the move. Let's see if we can break out above the high of the day. All right, hedge flows, watching hedge flows here.
Some of them, like Coca-Cola, coming out with earnings this week, and other names, even in discretionary, like McDonald's, coming out with earnings this week. They both had great runs.
I would suggest taking a little slow this morning. We need to see more stocks start to advance. Friday, we had everything was advancing on Friday. Okay, so let's see, where is...
They're going to start looking awfully cheap. Now, for instance, today, you've got the S&P 500 trading right at unchanged on the day, but the equal weight S&P 500
sectors.
is 0.3%, and both of them are rallying, but you currently got 7 of the 11 segments in the S&P 500 lower.
Okay, S&P is on the move here. S&P.
7 out of 11 lower. Information technology, such a big section of that S&P 500. When you throw in, consumer discretionary, that's actually lower, but then it's energy, materials, and industrials are the other 3 sectors that are higher. So a pretty mixed day in terms of the weighted, but certainly the
semiconductors.
Still got it down about just more than 1/4%. So
semis trending
it's fascinating.
above the 20 EMA. Above the 20 EMA.
NVIDIA, Microsoft, Oracle on an upgrade today. Broadcom. It seems to be AMD. What it seems to be is they've looked at that CapEx spending from Google, Amazon, Meta, Microsoft.
figuring that's all got to go somewhere, and it looks like they're choosing some. If they're going to buy something on these dips, it's going to be, the Nvidias, the AMDs, and the Broadcoms, those that supplying the chips to those hyperscalers, Sam.
Chips rising. We got semiconductors looking good.
Beneficiaries of all this spending. I mean, $650 billion just from 4 companies this year. And while those stocks haven't actually gained post-earnings, we have seen the rest of the market somewhat cheering. But you make an interesting point. Very mixed as far as the Dow components today. Very mixed as far as the Max 7. Mixed across the memory space as well.
Okay, S&P trying to break higher. Let's get back to the S&P. S&P cash. I don't know what it is about her voice. It's just everything. All right. I'm sure she's a nice lady. Okay, Nvidia, semis look okay. Nvidia looking like it's going to produce a higher low here. Okay, puts are being sold down below, especially in the software space. So Microsoft probably going to see a follow through. I'm going to hesitate jumping into Microsoft. I do have some calls, so I'd like to see those rise for June expiration. Pretty far out of money for now. Microsoft. Okay, I have March calls. Microsoft have March calls, 420s.
And we think it's a big deal. However, there is another side to the productivity gains that you would expect. That is, okay, great. You've got the productivity improvement. Can you really expect that that's going to be a persistent tailwind?
S&P looking for that hedge flow to continue.
Your costs down, you manage your costs more effectively. Do your competitors do the same thing in a way that you actually drag aggregate selling prices lower? And so what you can get is the
Eli Lilly's up quite a bit this morning. Eli, I did notice that J&J looked really good. J&J. That's taking a break right now, but Eli Lilly is up. Eli Lilly. Okay, that gapped up. Merck. Merck, a little pullback. Looking for consolidation on Merck. Caterpillar just grinding along.
How expensive is value, Scott, at this point? Some of these new highs that are rolling in for names like Hilton.
Okay, so stocks that are advancing. AppLovin, Oracle is up 9.5%. Okay, this is showing signs of institutions.
Continuing to unfold here when you look at the sector performance year to date, it's so bifurcated. Tech is lagging, but then you look at energy, staples, materials, industrials have been surging. The bank indices have been surging and so forth. So, it's interesting because going into this year, we talked about the Elite 8 now versus the other 492. The other 492 going into this year are actually more expensive versus their own history than are the Elite 8. So essentially what's happening here is the market is increasingly paying forward for what we think will be an underlying phase of good news that is attributable to improving industrial production dynamics as well as the fiscal stimulus that's
looking for a higher high.
In the months ahead. So we think
S&P looking for a higher high. Kroger gapping up. No doubt earnings. Corning, GLW. GLW, Corning. Fiber optics, cables.
Broadly speaking, was taken as people take in sort of the terminal value of these businesses, given the potential encroachment of AI in so many different
Caterpillar, let's see. GLW, Corning.
We think we're in a pretty fair place right now, David. So in our
Robinhood from Friday. Robinhood continuation.
We think that's reasonable given what we know or think we know about the way this is going to play out. What I would remind is that, this is going to be very idiosyncratic within the software sector. Not all companies
Follow through day on Robinhood. Okay, Palantir. I don't doubt that the dip in Palantir is eventually going to get bought. Let's see, Palantir coming off the low. Software as a service. Robinhood Friday. Many of you talked about getting into Robinhood. I like the idea for a mean reversion trade. Robinhood has earnings. I was going to put it on the watch list. It has earnings Tuesday after the close. Tomorrow, Robinhood. Good morning, back. Core Scientific, that was on the watch list last week. Core Scientific. Their numbers look terrible, but chart looked okay. Core Scientific, CORZ. Back above the 50-day. RSI rising. Thank you, Mondo, for the reminder. Stochastics, RSI rising. Let me see. I think I have options on this one. Let me go check. Yes, I do. Okay, so that's up quite a bit this morning. I have the March 20 call, so we could probably get there in a week. Core Scientific. S&P taking its time. When you have positive gamma overhead and below, positive gamma is the purple, negative gamma is the red. Dealers are long. Okay, so dealers will buy these dips down into this area, like you can see happen this morning, and they'll sell into this rip, into this high, 69.40 up to 69.45 or so. So we are trying to cruise through this area at the moment. Corning, GLW is continuing. GLW, Corning continues. GLW. Okay. So they're going to be heavily involved in data centers, the build out. GLW. Okay. What else? Okay, futures taking off to the upside. Okay, new high. S&P new high. Yeah, Core Scientific, I like it. Riot. Okay, Riot or Mara. I always liked Riot. It had better price action off the low. MARA. Mara. They both look pretty much the same. S&P is moving. S&P new highs here. Intraday.
Altman told employees that ChatGPT is back to exceeding 10% monthly growth, says that they're preparing to launch a new model this week and highlight some of the momentum in OpenAI's coding product. It's also known as
S&P 500.
Roughly 50%, he says, from a week ago. One source telling me now a bit closer to 60% with 1.3 million.
Okay, what's GE look like? GE, General of Electric. What? Okay, GE following through. GE 20 EMA. So I can't emphasize enough that if you're going to swing trade, watch your 20 EMA. Let's see what Riot looks like. Riot. Okay, that looks good. Just transitioned above the 9, the 20 EMA. Riot looks like it could go some more. I like it. Riot.
Between those two companies, as you mentioned, Sarah, it has spilled into the public eye recently. In case you missed the Super Bowl ad, Anthropic ran this commercial that post-funded OpenAI's decision to run ads within ChatGPT. Altman last week responding and saying that the ads were deceptive, guys.
Yeah, Kate, obviously we're also keeping a close eye on the fundraising efforts of OpenAI. I know you've been reporting on that. Do we have any sense as to where an announcement, what the number could come in at?
So it's looking the next couple of weeks.
20 EMA turning up.
Is how one source described it. Round is oversubscribed.
Price above. Riot, watch Riot. Futures are moving. Futures are starting to move. Robinhood, that's a possible trade. You do have earnings tomorrow after the close. For the record, IRE is up. IREN turning up. Many of the Bitcoin related names have a heartbeat. Okay, so just if you have expectations that the markets are just going to rocket higher like Friday, I would temper those because we do have positive gamma overhead. That's slowing things down. All this is coming off. So we just went through this level right here. Okay, so buy the dip, sell the rip. Looks like that's what dealers are doing for now. Okay. S&P, we want to see this put and call positive gamma. As this purple or blue line rises, that's producing positive gamma. Okay, that means that calls are being bought, puts are being sold. That process creates positive gamma. Okay, so we want to see that continue. Puts being sold, calls being bought. All right, so we're starting to rise here. If you got any calls, you got a calls are bid at the moment. S&P calls are bid. And so you're going to see potentially some of this messaging come out while these two companies look to go public. We compared it to Uber and Lyft, but Anthropic here wants to say, we're not going to go after consumers in the same way. We are the enterprise business, and sort of messaging that to Wall Street as well. Yeah, I like SCHD.
American people left trash talking and competition between them, and why they're not coming.
Love that ETF. SCHD. Let's take a look at SCHD. SCHD. Yep. It's probably might base up here. Might base.
Next year in the Super Bowl. Yeah, it's interesting. Like the message. We'll see what happens. I mean, next year it could be it's dog years. Imagine where we are a year from now. But you're right. For a mainstream Super Bowl audience, those who are not on Twitter and X watching this back and forth and sort of the drama between these two, the bigger picture, the bigger issues for the American consumer, and most people are watching the Super Bowl, it's not enterprise spending. It is what you talked about, Sarah, and sort of the job disruption. So that's definitely conversation for another time.
Well, Anthropic's co-founder Dario Amodei certainly has had his thoughts on that, as we well know from his essay of a couple of weeks back. Don't think he wants to advertise that to all of America, at least not yet. I don't know. Kate, thank you. Kate, up next, Bitcoin is back below 70,000. Look at what is driving the volatility. We'll talk to former Barclays CEO Bob Diamond. He now leads.
Okay, so we continue to move here, continue to move up.
Apollo's earnings and what those results are signaling about investor sentiment, especially around exposure on both the credit and equity side to software as a service. And shares of IBM.
Okay, Corning continues. Caterpillar looking okay. Caterpillar, Riot above the 20 EMA. So there's a lot of moving parts to this market. Bitcoin's pulling back a little bit right now. Bitcoin. Yeah. So looking at the SCHD, the top 10 components, SCHD, let's take a look at that. Lockheed Martin. Okay, that's back above the 20 MA, rising. Texas Instruments, chips are pretty strong today. Micron moving back up. I took the puts off, Micron puts, I took it off. Basically flat. I don't like the way it's holding here. For holding puts, I want to see quick moves. This is still holding. Could eventually drop off, but I'll get back into it if that happens. Chevron, CVX, trending above the 20 MA. So there's no concern here. If it drops below the 20 MA and does something like this over here, below the 20 MA, then I'll get stopped out. But for now, I got the 180, 185 call verticals. Call spreads, those are doing just fine. ConocoPhillips, other stocks in the group, also rising. This is SCHD, the top 10 components. Verizon, okay, that's flagging at the moment. Verizon, Bristol Myers, this one's been lagging. That finally got something going here. Bristol Myers, okay, that got going last week. Okay, got into SCHD back on January 8th. Okay, as you may be aware, that first week of January, we shifted funds out of SPHD into SCHD. And we've been riding this trend for now. Okay, since January 8th. That's that breakout right there, right at 28. So this is up 11, 12%, 13%. Okay, continuing on. Merck is another one in the SCHD. Merck taking a break today. Altria, Mo. Coca-Cola pays big dividend. Been paying dividends for over 100 years or so. Home Depot. Okay, that's just kind of consolidating. All right, so this looks like it's going to consolidate this particular ETF up here, unless everything catches a bid. Okay, what's these stocks doing? Oracle's up 9%. Kroger up almost 7%. Kroger, what do they have? Earnings? Kroger. I'm not too crazy about the Kroger store. I don't know. It just looks dark. Doesn't look clean. Publix is like completely different. That's what we have down here. Publix and Kroger. We also have Lion, Food Lion. They're a little better. Food Lion. Food Lion's like in between. Publix is the cleanest though. Okay, Kroger. So what happened here? They don't report until March, so I don't know what happened with Kroger, but Kroger, that's not earnings related. Corning still looking very strong here. Corning breaking out to the upside. This is week number 3. Really, we started to break out 3 weeks ago. While the AI expenditures may be weighing down some of the companies like Meta and Google from, quick acceleration higher, the companies that provide products like GLW, what's TSSI doing? Rax, SMCI. Yeah, so GLW, fiber optics. That looks good. It's above the 20 MA, 60 minute.
And on top of that, they've been able to put an exchange. And that exchange started out with spot trading and perpetual futures trading in their native token, which is HYPE.
GLW. That looks good. I don't want to chase it up here. I'd like to see a little pullback like last week early. That's the last good entry. The entry comes where price action starts to move higher. You put a stop underneath the 20 MA. Chevron, same thing. Chevron, it's been bullish since back here in the second week of January. Continues higher. What's Valero doing? Valero above the 20 MA. Intel trying to get back above the 20 MA. Intel is very sluggish. Riot, blockchain. Riot above the 20 MA. Looking for that to follow through. Okay, it's still got a lot of work to do. Riot coming off the low. Above the 200-day, you got the 50-day overhead, 9 and 21-day. RSI is rising. MACD stochastics reset. Had some selling over the last couple of weeks as it cruised lower. Now you got buyers down here. I would think that institutions are buyers. Chevron. Okay, we talked about that. Chevron. Now, on Friday, the Dow Jones made a new all-time high. NVIDIA number 1 on the list. Microsoft number 2. Cisco. I think there's only 4 tech stocks, right? 4 tech stocks. Apple. There's Apple, NVIDIA, Microsoft, and Cisco. I think that's the only 4 tech stocks, right? Or is there 5? Is there 5? I don't know. Walmart. Walmart's taking a break. I would love to get into Walmart, but I just don't want to chase it. What else? What else? Walmart. Cisco continuation. Cisco is being bought, breaking out of a kind of an ugly base, but it broke out nonetheless above 80. It's up, what, about 8% now from the breakout? Cisco looks good. Coca-Cola, of course. Nike. Starbucks looked pretty interesting. Let's see what Starbucks looks like. Starbucks. That's rising. Starbucks. 20 EMA. Grinding higher. So I like it better if it was down here closer to 97. That's $2 premium you're paying up for. Might keep going. If it gets above 100 today, that would be interesting.
In December, I was at the Abu Dhabi Finance Week speaking, and it was all about
Okay, Verizon, Walmart, Apple pulling back.
Abu Dhabi wants to be the
Microsoft.
outside the U.S., and I think Larry Fink would talk about the U.S. being the center of tokenized asset trading.
Okay, Microsoft's still looking pretty good here. Microsoft. Okay, so one thing you should understand is that puts are being sold down here. They're starting to sell puts. All right, so doesn't mean that's it. It's going to move higher from here. It just means that some institutions or hedge funds are selling puts down here, looking for a push higher. That's what Brett was also talking about this morning. Okay, so down here at the bottom, seeing some signs that traders are now selling puts. IGV, the software ETF. You also got XSW. Slight favor to calls versus puts. Short pull, long call combo. Short put, long call combo. So maybe selling a put credit to finance a call on the software group. Not a bad idea. Caterpillar still going here. Caterpillar. Okay, let me take a look at Caterpillar. Caterpillar. 60-minute Caterpillar. All right, so this looks good. Microsoft turning the corner. Cat is too far away. Looks like it's going to keep going though. Caterpillar. There goes the S&P popping back up. Boeing, Goldman Sachs. Let's see, Boeing and Goldman Sachs. Boeing had dipped recently. Boeing looks pretty good. Boeing looks good for a recovery.
Kyndryl did spin out from IBM in 2021. It currently has a market cap of around $2.5 billion. We reached out to the company for comments. Shares are down right now, 53%, Carl.
We'll watch that with your help, Seema. Thank you, Seema Moni. Let's get a CNBC News update as well this morning with Mackenzie Sagalos. Hey, Mac.
Carl, Ghislaine Maxwell, the co-conspirator of late sex trafficker Jeffrey Epstein,
Epstein is due to appear before the House Oversight Committee for a deposition this morning. Her attorney told the committee she will invoke her Fifth Amendment right against self-incrimination and decline to answer questions. Maxwell is serving her 20-year sentence in a low-security prison.
Okay.
She's expected.
Yeah, they need to clean that place. Even Walmart's cleaner looking than Kroger.
Stay the course as he faces intensifying pressure to resign. The Scottish Labour Party leader called on him to step down over his decision to appoint Peter Mandelson as the U.S. ambassador. Mandelson is currently facing a probe over his ties to Jeffrey Epstein. And the Melania Trump documentary, Melania, fell sharply.
Any of the Kroger's down by you, John?
Despite adding 300 theaters, it came on a typically very slow Super Bowl weekend for the box office. Survival thriller Send Help led all films with $10 million. Sarah, sending it back to you.
Okay. Thank you, Mackenzie. When we come back, should investors be concerned about a renewed Sell America wave? Ruchir Sharma joins us with a new op-ed looking at where foreign money is actually flowing. Plus, programming note, do not miss Bank of America CEO Brian Moynihan.
Okay, so Boeing looks pretty good here. Boeing, do I want to sell put credits on Boeing? Boeing, let me take a look here. Boeing, PA. Boeing looks pretty good for a put credit, 222.50. 222.50. Boeing. 1,000%. They missed by 1,000%. They reported, what do they have? Like a one-time loss, one-time charge or something like that, Boeing? That's weird. Let me just check. I like using Gemini. I've been using Gemini more than Grok or ChatGPT. I find Grok tends to be not as accurate as I would like. Okay, let me see. Okay, let's see. Let me just ask Gemini here. I really like Gemini. Whoops, don't want that. Okay, I'll be right back. Give me 2 minutes. I just gotta let the cats in the house.
Depend on us for access to safe, affordable, and personalized care. Now, some important things to sort of break down on there. They initially offered this pill for $49. That is roughly $100 less than what Novo sells their pill, their Wegovy pill for under their Novo Care. This, you ask yourself, how is this possible, right? I'm reading these stories, and how can you just rip this drug off? Well, there is a loophole that has allowed Hims and Hers to make any kind of compounded drug that has faced a shortage. So that's how they found their success. The semaglutide, which is the active ingredient in Wegovy and Ozempic, faced shortages in both the U.S. and in Europe, where demand far outstripped supply in the early days of this GLP-1 boom. So Hims and Hers stepped in. But Novo Nordisk has ramped up its manufacturing capabilities. They even bought a manufacturer for more than $16 billion, and they've resolved any of these supply constraints. So that would then theoretically close this loophole that Hims and Hers has been using to make these compounded versions of the drug. Hence why Novo Nordisk said, we are going to sue you. The FDA also getting involved, saying they are taking what they are calling decisive steps to restrict these practices by compounding pharmacies because they are essentially advertising that they are a dupe of an FDA-approved drug when they are not, in fact, FDA-approved. Analysts weighing in, though, Sam, lowering price targets at Citi from $30 down to $16.50, which is just about 30 cents from where we are trading right now. They have a sell rating. They think that their plan is risky and aggressive and has a lot of legal risk. And then at B of A, they dropped their price target to 21 from 26. Again, we're at about 16.75. They keep an underperform rating. They are also citing the FDA, saying that they plan to pursue action against Hims and Hers for using active pharmaceuticals
All right, so Boeing looking good. Boeing. Okay, so here's what's going on with Boeing. I asked Gemini what the story is here. The $1.91 share loss reported by Boeing in the fourth quarter was the adjusted loss, which specifically excludes a large one-time gain that the company reported. Boeing actually reported a GAAP net profit of $8.22 billion, or $10.23 per share. Okay. So that's Boeing. Looks pretty good. Boeing looks pretty good. 20 EMA. I like it a lot, actually.
Certainly the stock prices representing that. So for me, I just feel like this is going to be further headwinds for HIMSS. I'm not sure what kind of catalyst they could get outside of the FDA, speaking globally of HIMSS. So I'm looking at the March 20th 15 strike puts. I'd like to get them at $1.40 or lower. Now, here's the kicker. I'm risking the entire premium. So we don't want to get overly crazy and load up on these puts. But I do believe that there's going to be a lot of downside pressure in the stock. I'd like to cash out when that underlying is at $10 or lower. I believe that for a while that HIMSS was going to be heavily suppressed in terms of price action. We've seen that since it's strong rally and basic triple top, and they've been kind of breaking down over the last 2 months. There's some really strong downside momentum. It would not surprise me that every rally in the stock continues to get faded here until they get to that $10 price range.
Okay, as we can see, HIMSS are selling off almost 30% right now off the back of this development.
Kroger, yeah. Everybody said the same thing. New CEO, that's good. Okay, so looking pretty good here. Pushing a bit higher, S&P.
Especially in the Dow, President Trump's now talking about 100,000 as the upside target in the Dow Jones. We'll see if that's going to happen. Again, with all the residual effects of, concerns in the Middle East, we still have the SCOTUS opinion due out on tariffs. A lot of concerns about the jobs data that's been delayed because of the brief government shutdown. So that's going to be a potential near-term catalyst as well. As long as the VIX stays under 20, I think the market can settle, try and rally. But if we continue to see the VIX spike and apply a lot of pressure on that $20 price, it's never good. Whenever we see volatility in the markets, it's never bullish. I would expect things, and I would expect traders to remain short-term. As an investor, I wouldn't be ready to buy in on dips just yet. And seeing the poor performance in the Mag 7 names, it rings a lot of alarms seeing, Microsoft, Meta, Amazon, and Google all crater off of earnings or shortly after earnings and not lifting as fast as we would normally see them come off their floors.
Yeah, it looked like the rest of the market had been cheering, though, on Friday, despite Alphabet and obviously Amazon lower in that session. Hey, Charles, always appreciate it. Thanks so much for joining us today. That is Charles.
All right, Boeing looks good. All right, let me just look at a couple other things with Boeing. All right, I'm thinking about selling some put credits. Let's see, scanners. Let's go to Boeing, BA. Okay, so calls are pretty expensive. Let's see where it's come from. It's probably come from over here on the left. All right, calls, puts were really expensive. Calls are starting to get expensive as people buy. So maybe selling a put credit to finance a call for Boeing. Boeing looks like it's going to keep going though. Boeing. Let me see what a put credit would go for. Boeing. Put credit down here, 222. Let's see if I can do something ridiculous like sell some put credits down here. 220. 220, 210, 220, 210. Let's see, 220, 225, 225, 220.
And just a couple up. Now I see 6 up and 5 down. So this market has firmed up and turned back to the 500 up about.
Okay, I just sold some 225, 220 put verticals for Boeing.
Which tells me the leadership has taken back over, and all you got to do is look at the visualize. You see NVIDIA, you see Microsoft, Oracle, Palantir. All the leaders are back in charge of this market.
February. All right, Boeing, BA, 225, 220 put. Credit. What is going on here? Okay. Oh, it's in the wrong spot. That's why. What is going on? Okay. And those expire on 20 March.
I think what Workday and AppLovin do are two different things. They're both in software, so they're in that sector. But again, I see Salesforce, is only off about 0.9%. AppLovin, much bigger than that, up 12%.
Okay, futures continue to rise. It's looking good.
We're going to see some volatility in some of these names. I said very early, the end of last year, at the beginning of this year, 2026 is going to be the year of winners and losers in AI. And I think you're starting to see that play out. I think some of the names, if you look at the software sector, there's names that are recovering.
All right, so Boeing, that is a Boeing. 20 Delta.
Some of the better, more high quality names are starting to recover here, like Microsoft, solidly back above $410. So I think there's going to be winners and losers, Sam. I think some companies are going to do it better than others and be set up in better places.
Yeah, and I mean, I'm seeing some of the broker calls as well. I mean, Morgan Stanley seeing AI opportunities after this sell-off. Software team sees attractive entry points for the group. They've talked about Microsoft, Salesforce, ServiceNow, Snowflake. So we are certainly starting to see some of the winners and the losers emerging. Hey, Kevin, thank you so much for that. Turning our attention to international headlines now. Prime Minister Sanae Takaichi claiming a landslide victory in Sunday's snap election. Her ruling Liberal Democratic Party getting the backing of voters to secure a supermajority in the lower house. It now means Takaichi is able to pursue her agenda, including more fiscal spending and a cut to sales tax on food. Japanese stocks rallying to a record high with the Nikkei 225 crossing the 57K mark for the first time. But what was unexpected was the yen actually strengthening.
Okay, Boeing. Futures back up. Okay, let's see. Riot turning up. Looking for Riot to continue. Looking for Riot to get back into near the 20s. All right.
Shares in Samsung jumping after a report the company will soon start mass production of the HBM4 memory chips, which will be used for NVIDIA's their Rubin AI accelerators. And Samsung will reportedly ramp up production later this month and plans to start shipping the chips as early as next week, following the Lunar New Year holiday.
Looking for about 30% return on Riot.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay, so Riot, I'm just looking at this one, setting up trade for those of you who are interested. Putting a stop down here below 14. Okay.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Not insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. We are back on Morning Trade Live, but still Spotify.
Okay, Riot. I got a trade on Riot now. Okay. Averaging in this morning.
So what's the story here? Let's go inside out of Spotify with Ken Leon, who's the Global Director of Industry and Equity Research, CFRA. Very good morning to you, Ken. Hope you had a nice weekend. Happy Monday to you. Just looking at Spotify. All right, you've got a buy rating here. Price target 685, I believe. What gets us there? What are you thinking?
Okay, so looking better. Okay, Chevron. I will say this is a little unusual only in that February tends to be one of the worst months of the year. So given what happened Friday, the reversal, we're looking for the S&P to continue higher. But I'm very cautious, so I'm not going to put a lot of money to work. For example, I just started the position in Riot this morning with one of our members mentioning it. Looking for Bitcoin to come off the lows. So I am very cautious. So what I'm doing here is I'll put a stop underneath 14, maybe 13.75. It's about $1. It's about $1 dollar stop. Okay, futures continue to rise here.
Ken, I mean, I'm just looking at this chart, and I mean, you listened to my intro as well. I mean, certainly as far as how much it's come off here, I mean, going into this print. I mean, do you think investor sentiment has turned too negative recently?
Well, I think, investors, especially institutions, have looked at a basket of high-quality, large-cap stocks that have high valuations, and whether those high multiples are justified for what I described before, that's where the jury is out, and where Spotify has to do a couple things on their results, but also on their earnings call to really show that they're an exemplar play in the media space that has had so much disruption more on the video side.
Right. What do they say? I mean, what metric are you looking out for? What is the language that you're going to be really tuning into here?
remember, total addressable market of the world is still very large. They have algorithms that enables them to delight customers in all the major countries. We're also seeing from Spotify still the ability where they're beginning to get ad-supported revenue for their lower plans, and they got pricing power as they did a month or so ago, increasing the subscription plan on their premium to $12.99. But if you put it all together, I think if you're a mid-teen grower, you're going to have outsized growth for things such as EBITDA or pre-tax earnings. That's, I think, what's going to get the market excited. Balance sheet is great, but again, there's a big cloud over Spotify and other stocks like it as to whether you're willing to pay such a high multiple.
Yeah, and just very quickly, I mean, do they have to give up a convincing argument on what they're doing around AI? Because I know that's been a big focus for investors as well.
I think it's been embedded in their platform and the algorithms for some time. When you look at Spotify's, they're single focused on music streaming. There are other major competitors like YouTube or Apple Music, obviously are more diversified. So they got to be one or two steps ahead of these tough competitors. And I think that will satisfy investors. But I'd like to see 25-30% growth in the pre-tax earnings level, mostly because it's going to be very hard to grow the top line more than 15%.
We'll be watching. Thanks for breaking down those numbers for us. So really appreciate Ken Leon there, who's the Global Director Industry and Equity Research at CFRA. Appreciate your time. Let's trade it now with Tom White, host of Fast Market. Tom, I mean, this stock has been just getting beaten down. Ahead of this report card tomorrow, what would you look at as far as an example trade? What's the approach for Spotify?
Yeah, Sam, it's been that falling knife since hitting those all-time highs we saw last June. But if you overlay a Netflix chart, which is the leader in streaming, it looks about the same as far as the pullback that we've seen, down nearly 50% from those all-time highs. It's down nearly 30% just this year alone. So the bar is really low going into this report. The option market priced in a pretty hefty 9.5% move either way, about $40 on a one-day basis. So market's expecting a big move either to the upside or the downside on this one. If they look at monthly active users, those were up 11% last year.
Okay, we're still consolidating, grinding higher. We have positive gamma overhead, so that's why we're moving sort of slow.
Taking that into account, if you think maybe this thing is oversold, it's almost there on a technical basis with the RSI look really low at this point. You can still take a directional bias, but give yourself a little better probability.
Okay, Riot continues. S&P looking a little bit better. Okay. It's not downstairs?
Per spread with about $1,520 in risk. You've got a lot of risk, but that's all the way below the 360 level. Now the break even on this one just above 375 to the downside. That's going to be about 9% below the current share price. So about that one standard deviation move that the option market price did. But even if they do report a good earnings event, we've seen stocks sell off, even if guidance has been a little bit better. So this gives you that probability of finishing out of the money on that short 380 strike of about 72%. So it gives you that ability for the stock to go higher, stay where it is, or even go lower, and you can still be profitable on this control the bullish short.
Okay, Lobar, going into earnings, we'll be watching Spotify reporting it tomorrow. Thanks so much for the example trader for us this morning, Tom. All right, and we are seeing stocks regaining their footing for this morning's trade as we get underway for what is going to be a big week with some of that data. Thanks for joining us here at Morning Trade Live. I'm Sam Barnes. Download the Schwab Network app available in the Apple App Store. We've got Trading 360 with Marley up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power. future checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming locally and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. Schwab Network.
All right, Riot looking better. Caterpillar looking good. S&P continues higher. S&P.
Literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Hayden coming to you live from our Chicago headquarters. Lots of great stuff ahead in today's show for you. In our spotlight round, we'll talk to the CEO of Pagaya, joining us to talk about the company's latest quarter, its partnership with a buy now, pay later provider, and what lies ahead in 2026. And shares of Oracle rallying after an upgrade at D.A. Davidson, the firm saying that Oracle will live up to its obligations this year. George Tillis will break down that note for us and also have an example trade for us in our disruptor. And then in our 360 Spotlight, we'll highlight the recent volatility we've seen in gold and silver and what could drive market action for the first half of the year. Lots to get to, plus some other top stories, but let's see how the markets are faring as we start a new trading week on this Monday morning. We are in the green pretty firmly. The S&P trading up 0.5% at 69.65. The NASDAQ trading up 0.6 higher, 25,232.38 on the Dow. We are at 50,186. We have maintained that above 50,000 level, and the Russell 2000 trading 0.6 higher at 2687.06 this morning. The 10-year at 4.22. The dollar slightly. For gold, we're back above 5,000, up 2% today, 5,080. And crude oil is at $64.19 a barrel. That's up 1% this morning. And Bitcoin struggling to reclaim that 70,000 level. We are at 69,660. I do want to bring in Jenny Horn, the co-host of Next Gen Investing, to talk about one of the stocks on the move this morning. Talking about Kroger moving higher. They have ended their search for a new CEO. They've named someone, and the markets are happy about it.
The markets are definitely happy about it. And like you said, we finally got a replacement after about 11 months that we saw their previous CEO, who did have, significant tenure, 11 years at the company, did leave on various ethics and certain, legal obligations, but we won't get into that because really what the street...
VRLS.
This Walmart former executive Greg Foran as CEO. So he's been credited hugely with a lot of the turnaround, namely that we saw occur from 2014 all the way through 2019, and has been able to boast like a decent track record of like 20 consecutive quarters of comparable sales that were positive for Walmart, and also just the overall efficiencies that Walmart really underwent, as well as their fresh food initiative. So we know that right now they're not the first company, at least Kroger, that's been seeking some new leadership. We've seen it across the board. We've seen a lot of C-suite shakeup over the last several quarters, just because of the fact that if you are in any consumer-facing business, everyone is trying to figure out that recipe for success, what resonates with consumers that are trying to, be mindful of cost still, frankly. And so we've seen also recent leadership shakeup at Walmart, Target, just in the last several months. And so I think that is definitely a trend that has been consistent. But as we know from any CEO coming on, like Brian Niccol, for example, of course, moving from Chipotle to Starbucks, it's not necessarily a shoo-in that you're going to see instant success. Yes, I think that you hope for that in several quarters, but up 6% today, I do think this will be more of a long-term story because, again, the pricing environment right now is difficult when you are a grocer, especially second largest here in the United States, which is Kroger.
Well, and even more difficult, too, when Kroger's approach to all of this has been to try its best to resist passing any of these price increases on to its customers. It's done everything from offering promotions to even paper coupons and trying not to give it back to the customer. As far as anything that we know about this new CEO and his approach at Walmart, or I know he was at Air New Zealand after that, what is the street saying? Have you seen any commentary about his approach?
Well, so I was curious because I will say that the consensus rating from analysts right now is moderate buys or buy for Kroger, with around 8 to 12% upside potential based on the average price. But about half of analysts do have a buy, half have a hold. There's really no major sell ratings. But I was curious how that compared to, say, then again, its closest competition. Costco is actually still the clear favorite, but Walmart also very widely respected, highly rated, with the stock many say is considered priced in given all the right now upside compared to its peers. Kroger sitting at a healthy middle position with, again, positive sentiment, and Target facing the most skepticism despite many hold ratings. Many say that there could be more pain ahead. So Kroger sits very even in that list, which I think also speaks to some of its price performance. We're only up about 4% over the last 52 weeks, whereas like Walmart, for example, is pretty much at its all-time highs, which is astounding. So Street feels a bit more cautious on this name, but I think a new leader is definitely expected to be a positive catalyst.
Jenny, we appreciate you being with us to break down the move to the upside we're seeing in Kroger, up about 6% so far this morning. And that was Jenny Horn, host of Next Gen Investing. Do you want to bring Ted Thatcher into the conversation? Joining us this morning, president of Bright Lake Wealth Management. Ted, great to see you. Always great to have you with us on a Monday, especially a Monday that we have a sea of green going across the board. But I'd love to get your thoughts on the volatility that we saw last week and that we've continued to see throughout the year. It seems almost like vol is the name of the game right now, and how do you position around that?
Yeah, Marla, it's incredible. Already in the month of January, the VIX has spiked above 22 different times. Yeah, we mentioned last week the metals were still going through their flash crash. Anthropic released its, Claude plugins, and that caused software to again sort of be questioned and re-rated. We got those big earnings. Amazon, and we find out, of course, that AI CapEx is just way above expectations on top of already huge AI CapEx budgets. And so what has driven so much growth, those mega cap companies in 2025, now has reason to be questioned. And then, of course, after Amazon's dove on Thursday, we see the Dow hit an all-time high over 50,000 on Friday. And so the market is trying to find some, I think, firm footing. And with all the headlines, it's having a hard time doing it right now.
It certainly is, and some of it's even hard to make sense of, or find any sort of consensus opinion on. But you mentioned the AI spend, certainly was in focus, has been in focus the past 2 weeks with the big names that we got in these massive CapEx numbers. Do you think that a lot of the volatility that we're seeing, or most of it, could be tied to all of the uncertainty around this AI spend and liquidity, or is there something deeper sort of lurking in the macro backdrop?
The way I look at this specifically, I do think it is the market-driven process. What really is the largest industrial build-out in human history. It's going through a transformative time, and you can hear the commentary from Jensen and Zuckerberg and the other CEOs.
Oh boy.
Talking about just what level of transformation is happening right now, and the
markets, because the price tags are just so big, are having to digest that. And we do know that in 2025, we saw how much that concentration really did affect the markets. And so when the street has reason to question that spend and ask, hey, hold on, we are spending incredible numbers here. Are we really going to get the ROI, out of that? That's, I think, really what's caused the VIX to spike up in the way that it has this last week. Obviously, I don't.
Okay, S&P.
I think that it is digesting that, and hopefully we can turn the corner and talk about the fundamentals, the ROI that is on the horizon.
And so as we look at this and on these names, I haven't gotten to talk to you since we
Okay, nice follow through. Nice follow through so far. We got highs overhead, all-time highs overhead. Nice way to start the week. All-time highs. Okay, Boeing.
Wasn't getting reward for it because of the spend we're talking about. Let's start with Meta, though. I don't think that there is a company out there today that is using and getting the ROI out of AI in the way that Meta truly is. It's outstanding what they have done and already implemented in their ad platform. We saw ad impressions of 18% in Q4, huge earning beat because of it. And so I think that as we turn the corner, outside of the surprise release of the spend that we're seeing with a company like Meta, just that ROI alone, I think, is going to give the street a little bit of calm once it processes through. Now, in the case of Google, they've had obviously a huge run since the middle of last year. And of course, again, huge earnings beat, but a huge CapEx spend. And so at the end of the day, I think that the conversation does come back to the ROI on these things. And in the case of Meta and in the case of Google, we are seeing that. I mean, even search revenue is up, I think, 18 or so %. A huge beat regardless of the exact number. And I think that is what Sundar is going to be pointing to. Another huge company, of course, that has spent a ton to get their AWS services, stood up to stand under the AI, demand that exists today. What I like about Amazon and why I think it might be a good buying opportunity for investors is they have the same type of distribution, although in a different way, that we could relate or compare Facebook to. Think about how many daily active users are purchasing. I don't know about you, but I have boxes show up at my door every week, of course, from Amazon. And so they're going to, I think, be able to turn that AI CapEx spend into, greater efficiency on their selling platform, of course.
Boeing looks good. Boeing. S&P is still hanging here.
I'm never near daily delivery person. I use that for all my major. I don't want to admit it, but I'm with you. Yeah, right there. I mean, convenience, right? We don't have time for it. Let's talk about the software sell-off too, though, because this is such an important thing here. You mentioned Jensen Huang. I mean, he's really doing everything he can to sort of prevent this massive pivot away from software. He even went so far as to say that the AI replacing software companies was illogical. I mean, that was the word that he used. Do you agree with that sentiment? And how does SaaS survive this transition here?
Of course, it's hard to say anything super negative about Jensen. I respect him as a CEO. Obviously, he's built, I think, over the last several years, their market cap's increased.
Boeing.
$100 billion a month for multiple years now. He's an incredible mind. That said, of course, there's a lot of incentives there for him to speak highly of the software that runs on all their NVIDIA servers. The way I look at SaaS right now isn't so much this black or white, software is going away entirely and it's all going to be replaced by, agentic AI. It's more about where the value capture in the stack ends up flowing to. So much of the valuation, in a company like Salesforce.
Boeing looks good. Boeing.
Long-term 30x multiple on earnings. And, over the last year plus, we've seen that come down. And so, the way I see this crash down for SaaS isn't so much that it's a surprise. I think it's news that has kind of been on its way. The valuations on SaaS have come down. And so are the companies going away? No, I don't think that. I just think that the value is also going to be found in other areas. It's really hard for a SaaS company entirely to be able to speak to all the other, SaaS software that we see in businesses every day. What is much more useful, as I see it, for a business is to have something that is more centric, that can talk to Notion, that can talk to your Slack or your Teams profile, that can talk to your CRM, and bring it all together to be useful. And so just that natural flow of value, I think, will bleed a little bit from the software side over time.
Ted, always a pleasure to have you on the show. Great insight as usual. Ted Thatcher, president at Bright Lake Wealth Management. Thanks again for being with us this morning. We've got plenty more for you today to come on Trading 360. Next, it's the big three. We've got 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. Scott Bauer is joining us to take us through his trades for Pinterest, Micron, and Valero Energy. That's next on Trading 360 on Schwab Network.
The LOX may resume in less than a minute.
All right, we're just kind of consolidating here at the moment. Watching the S&P, stocks improving. Okay, it's 11:14 on the East Coast. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Monday, February 9th.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Oh, she's got your smile. Carl, yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. We have everything we need all in one place.
I can set up for college funds.
I've been learning about trading strategies. Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Invest your way with Schwab.
FLNC.
Peter, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, Schwab, they can do everything.
Boeing. Okay, Boeing. Looking good.
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat, of course, joining us to take us through the charts. Here to take us through the trades is Scott Bauer from Prosper Trading Academy. Scott, always great to have you with us. You would love your thoughts on our start to the week in the green, although the Dow dipping just slightly below the unchanged line right now. You may be looking for a bit of direction with all the data we've got coming out this week.
Yeah, I think we are going to trade pretty sideways until we get that jobs number and then CPI later in the week. Now that the big tech guys are behind us earnings-wise, there still are a lot of earnings ahead of us, but it seems like perhaps maybe the big market-moving ones are behind us. So now really the focus is on the eco data.
All right, so let's move into the big three then. Your first pick here does have earnings coming up this week. I think on Thursday they have their earnings, and they're pretty beaten down
so far this year, trading down more than 20%. Talking about Pinterest here, does that play into your thesis, Scott?
It does. And they are really
All right, what's NVIDIA doing? NVIDIA. All right, still flagging at the highs, NVIDIA. Okay. NVIDIA having a good day. S&P is squeezing. Looks like it wants to go some more.
So I'm just going to buy a simple call spread that expires this week, the 21-25 call spread. Try and pay about 55, 60 cents for that. I think that is a very inexpensive upside play. And, you know, that's all I can lose on this is what I paid for that spread. So really looking for some upside there in Pinterest.
All right, Rick, so are you seeing this potential move to the upside up to that 25-50-ish area that Scott was just highlighting?
It's certainly possible, and those are roughly the areas that I highlighted on my own chart as well. So kind of just to start out with why I think we could be breaking out, you could draw this trend line in blue here, extending downward. We've recently
Okay. So we've improved, but we've added about 100 more stocks, so about a 100% improvement over this morning. We had about 100 stocks advancing. Now we have 226 advancing, so we're almost 50% of the S&P rising. On Friday, all of the equal weight sectors were bullish. Tech was leading. This morning we see semiconductors showing signs of life. Okay, I took my puts off of Micron only because chips were bid. I didn't want to stay too long. Basically got out flat. So no longer have any puts on that. Just looking for Micron to continue along with all the other semiconductors.
Stopping point here, RSI, also very oversold here, extended to the downside, 24.4. So look for a breakout beyond that trend line and for the RSI to cross back out of the oversold area for bullish signals. Finally, our volume profile study, a little bit of trading down here. This kind of little small node has developed around 20, but up here is the important area, our point of control, our heaviest trading area of all, around 26. And then the volume really starts to pick up again around 25. So again, 25 really stands out to the upside as a longer-term area of resistance.
All right, and Scott, most of the sell side sort of in agreement with you here, despite being a little battered and being down more than 20% year to date. About 70% of the analysts who cover Pinterest are still bullish going into this earnings event. This next one, Micron, certainly not beaten down on the whole. I think in the last 12 months, their shares have more than quadrupled in value, but in the last week, we have seen an aggressive move to the downside.
Yeah, absolutely. And I look at Micron and maybe some of the others in the space.
All right, IWM on the move.
The huge rocket launch that we saw in many of these stocks to the upside definitely got overbought. I think we're in a buy the dip mode. And so in this case here, rather than buying upside call spreads or upside calls, what I'm doing at Micron is trying to sell a put spread that's looking for kind of that line in the sand. So selling next week's 375, 365 put spread. I'd love to collect about $4 for that. That gives me a break even at the end of next week is 371.
All right, Rick, so as we take a look at Micron.
Chevron moving higher.
Taking a look here that we talked about how much they've moved to the upside, but just in the last week or so, we have seen a more than 10% move to the downside. It does have a very different technical setup than what we just saw in the last chart.
Yeah, for sure. Very sharp rally to the upside here. We topped out at 455.50, and then a bit of a decline. So, it might feel...
Okay, the industrials on Friday, we mentioned in the weekend video, I didn't highlight it, but MACD on the industrials. Okay, MACD. Notice MACD has crossed. After a big fade on the industrials for several weeks, we finally breaking above 50,000. We're inside of the top of Friday's price action. So we're looking for this to continue. RSI pointing the way. So strength of trend is persistent. Some of the Dow industrials Boeing. Looking good, Boeing. Sold some put credits. That's on the closing print positions page. Okay, so I sold some 10 of these for $86 per contract, 20 deltas.
Finally, our volume profile study, we can see that the only really notable node that stands out right around here near 340 or so. That's the kind of biggest pocket of isolated trading activity until we start to get back down here once again near 240 or so. It can be hard to find good volume nodes when price is moving so quickly, as is the case with this stock, but we do have a small one there to consider.
All right, right now Micron is trading at 385.54. It is slightly lower on the day, down about 2.25%. But Scott, you brought us three very different charts today. The last one in the energy space, talking about Valero Energy, and they've just been steadily moving to the upside on this increased conversation about energy demand and how well positioned these utility companies are.
It is, and there's also, I think, some geopolitical risk and consequences in there as well. You know, just the overhang that something may or may not happen with Iran, but to me, VLO has just brought way too much to the upside. It's getting overbought. So, like I said, I think there is some geopolitical risk that could make this trade a bit riskier, but that's why I always trade options and I'm completely covered and know what my risk is. So I'm just buying a simple put spread that expires next week, 200, 190 put spread, pay about $2.50 for that. That is my risk to this spread, and I just think that we could see a big, quick downside move here if things just ease off a little bit.
All right, Rick, so I know you say we can always go higher, we can always go lower, but does the technical setup indicate that we could be moving in a downward, a potentially quick downward motion?
In all fairness, you could always go
IWM still going here.
Bizarrely crude oil futures, not to get into that, but what we've seen is a lot of energy rotation into this sector recently, and perhaps some of the moves are getting stretched a little bit thin. What we have here, a rising wedge type shape here that culminated with our highs near 204.14. Some levels of interest would be the highs and lows of today in this shorter term, kind of 204.14 and 200. Then also 185 here and 178 here, a notable high point and some of the relative lows at which we held a double bottom. So those are other supportive areas that you could see if we do start to give back some of this move finally as well to our gap that formed near 165. Worth at least mentioning, we're a good way off from that point here, but notable gaps, prominent gaps are often worth at least keeping track of on your charts. They are often filled and can come back into focus down the road. Not saying it's going to happen, just saying it can be worth watching. Our 5-day EMA in blue here, 197.37, is our short-term area where we might find some potential support. Our teal 21-day is at near 187, 188 right now. That would represent a break below our rather steep trend line to the upside here. Notice as well a little bit of bearish divergence on the RSI. Again, certainly it's not a guarantee that we're going to get a decline, but it's not what you want to see when a stock is kind of struggling to make more successive, significant new highs. We are also failing to re-enter the overbought area as well. What you would want to see would be for the RSI to go overbought and make new highs above its previous peak along with price, which we're not quite seeing right now, suggesting the pace of the gains is starting to wane somewhat. So finally, we have our volume areas here. The heaviest one comes in right around 185 or so, 184, 185. And then we see the activity drop off here near about 170, picks up again rather heavily near 160. So those are the standout areas from our volume profile study.
All right, and as we take a look at Valero, it is just slightly under pressure today, down about 2 tenths, but still trading at 202.25, very close to its 52-week high, which is just about $204. Scott, I want to thank you for being with us today for Big Three. Scott Bauer, CEO of Prosper Trading Academy, and of course, Rick Duquette, our lead market technician, for always being with us to break down the technicals. Coming up next, we are going to spotlight Pagaya. The CEO will join us
to walk us through the company's most recent earnings and tell us a bit more about its future. Stay with us.
Sometimes,
MSTU.
you could have done better.
RCAT.
Same goes for where you invest. Level up and invest smarter.
All right. Coming into lunch, we look like we're going to try to push a bit higher here. IWM's doing well. S&P pressing the highs of the day. S&P. Looks like another day. Looks like another one of those days.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed with knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
MSTU.
Kick off the morning with the data and the decisions moving market. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risks. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
MSTU.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight Pagaya after the company released its fourth quarter earnings. Joining us now, Gal Krubiner, the co-founder and CEO at Pagaya. Gal, great to have you with us this morning. Thank you for taking the time. If you wouldn't mind just starting by telling our viewers a bit about Pagaya and what it is you do.
So great to be here. Thank you very much, Marlene, for having me. So let's start with what Pagaya do. So Pagaya is a first mover AI technology that is essentially helping big lenders in the United States to be able to provide more loans.
All right, Boeing. I just marked up a chart. Okay, Boeing. All right, so Boeing looks pretty bullish. Looking for a follow through. Boeing.
That is already embedded into the systems of the country leading lenders, and that is allowing us to have a very big access to large amount of data, and therefore to help companies like LI Bank, US Bank, SoFi, Klarna, and even Lending Club to be able to approve more of these customers and to provide them a responsible ability to lend to these customers.
And Gal, let's talk about your fourth quarter earnings. Just got released a few hours ago, about 2 hours ago here. A significant beat on EPS, more than 125% higher than expectations. Small miss on revenue. Walk us through some of the takeaways here and what you want investors to take away from your report.
So I think what is
Bitcoin. All right, looking like that might rise a bit more. Bitcoin looks good. Okay, so Boeing, this is what I sold, the 225, 220 put. 20 deltas. Sold the 20 delta, bought the 15 delta. Looking for this to continue trending. RSI rising. MACD stochastics oversold. Volume shows institutions. Looks pretty good. S&P continues higher. Looking for more upside.
play a technology AI angle into the equity capital markets.
And now I want to really focus in on this turnaround in your GAAP net income. I was just looking at 2024. You said you weren't profitable. You had a loss of $401 million, up $81 million this year, and now projecting higher. What was the primary enabler of this turnaround and this massive growth that you saw?
A lot of hard work by an amazing team that didn't sleep nights and days, and it started from fixing the financials, turning out the unit economics, being able to price better with our customers on the value that we are actually bringing, onboarding new partners. If you think about Pagaya just 3-4 years ago, Klarna, Lending Club, Ally Bank were not the big users of our product, and now it's becoming really the way to go. And when different
5, 15, 30, and 60-minute futures timeframes are on buy signals, watching markets at highs here.
That was the big driver for the change, and what is allowing us to continue to grow over the cycle, irrespective of where the economy is. Sometimes we're going to be more leaning forward as we see better signs. Sometimes we're going to be a little bit more risk managers and a little bit more cautious. But all in all, as you know, technology companies are making a big shifting cycles and being able to grow through cycles, and that's really what we are playing towards.
And Pagaya is such a unique company in that it's not a lender, it's a tech platform that enables access to lenders through the power of AI, essentially. So
Microsoft continues to rise, looking good. Broadcom, the chips look really good today. Chips, NVIDIA has just been kind of hovering sideways after hitting the highs of the day.
So we know the network effect that is happening in Facebook and in Google and in so many technology companies. We took the same concept and we just brought it to the world of consumer credit. So what we have established is not to become a lender, to your point, or not to become investor, to your point, but to be that connectivity tissue in between these different worlds. And as such, we have an enormous amount of data through more than 31 different lenders that we are active in: auto loans, point of sale, personal loans. So we see.
Thanks for the shares in the trading room. Appreciate that.
To be much more accurate on our ability to price that risk to people that otherwise would have been overlooked, but actually have a very strong financial capabilities. And on the other side, it's the same. The people that are actually funding these loans are over 150 institutions, quite frankly, the most sophisticated institutions in the country. And the ability to have 30 lenders on the one hand side and 150 different investors on the other hand side is allowing our system and our technology to be able to capture all of that data and to influence of a pricing or an approval rate of a single person that goes into a branch in US Bank anywhere in Minnesota or in North Dakota or what have you. So it's a very good, I would say, way to show how AI could be actually very helpful to the people and actually provide a better outcome through the usage.
Okay, looks like we're going to trend a bit lower for now.
more than $3 trillion in loan applications since its inception.
Okay.
How does that scale benefit your lending partners and institutional investors? And also, what keeps those 30+ lending partners coming back to its relationship with Pagaya?
All right, so Bitcoin is just kind of grinding. Here we have Riot. Riot.
So when a customer comes through the door, it doesn't matter if it's online to SoFi or, as I mentioned before, to a branch in US Bank in Minnesota, their main objective is to say yes. That ask for a credit, we are going to be there and to provide it.
Riot. Bitcoin. Let's see what Bitcoin's doing. BTC, USD, Bitcoin. Trying to get above the 20 MA. The green line is the 20 MA on the 60-minute. The red dotted line is the 20 MA on the daily for reference when I'm looking at this chart. So we need to get a follow through here. Bitcoin needs to catch a bid just for the last 3 trading days. Not doing much.
mission for them to accomplish, and therefore they are coming to Pagaya. The other thing of the fintechs, it's the same. The ability to say yes to more customers as they are scouting through the internet for the best credit possible that they could have. If Pagaya could help these lenders to be more competitive on that front, they would come to Pagaya all day long.
Well, Cal, we appreciate you taking the time on the day you reported your earnings to be with us. Tell us more about Pagaya and some of your results and your outlook for the future. That's Cal Krubener, the co-founder and CEO at Pagaya. Coming up next, we have the disruptors. We'll be taking a look at Oracle after an upgrade at D.A. Davidson. That's next.
Chevron, just kind of everything is just sort of grinding along. Here's Chevron. Okay. So I think one of the biggest things that new traders have an issue with is, when do I take profits? I might get nervous. Well, as a rule, I like to watch the 20 EMA on the 60-minute. Something like Chevron is just kind of trending along. If it drops below the 20 EMA, that would stop me out of this position. I still have 180, 185 call verticals that look good. No reason to sell them. Now, once we get to 185, my calls will hit maximum profit. The only thing that would increase the profit once it hits 185 is if the volatility expands all of a sudden and the stock starts to rip higher. I might capture some of that, but I have to be pretty quick to take profits once it hits 185. But the point is that watching the 20 EMA on the 60-minute time frame is a great way to stick with the trade. Riot just turned the corner. Okay, it's above the 20 EMA, so this is a transition. Put a stop underneath 14. Look for this to continue. It's an early entry, 75 cents. I got in right around 14.50 or so. And looking for this to get back to 17. Fair value is around 17.50 or so. Back here, up in this range. So we're looking for prices to move higher on Riot and some of these blockchain and Bitcoin related names. What's IBIT look like? IBIT, IBIT, and not much there. MSTX. Starting to do something. MSTX. I do have some shares. They're pretty cheap. There's no reason to sell them. And they're only, they move like 25 cents a day. Oracle. This one's back above the 20 EMA. So this is a first transition. Looks like this is going to stick. Oracle. Fran, I don't know if you're paying attention here, but Oracle above the 20 EMA. The 20 EMA daily is just overhead at 167, around 167.50. This is an approximation using the 130 period EMA. That gives you an approximate level of the 20 EMA on a daily. Let's see what the 20 EMA on the daily is. 20 EMA on the daily is 172.58, 172. So it's off a little bit. Oracle.
And
21 EMA, 155.75, 155.75, 155.75. Okay. All right, the S&P is pushing a bit more. Set futures are at 69.90. Looks like we're just going to keep going here the way this is trading. Futures turning back. The hedge flow is turning back up. We're right up against the level here. Okay. we get above this, we could see 7,000 pretty quickly. All right, so if we move above this level right here, 69.70, we could start to see a grind up towards 7,000. Looks like that's what the markets want to do at the moment. Okay, Micron looking pretty good. So watching the S&P, if we can get above this node right here at 69.55, we can get through 69.70, sorry, 69.70. If we can get through that, watch your hedge flows turning up. If we get through that, we could see a cruise back up to toward 7,000. That'd be a nice treat for the bears. Sarcasm aside, the markets were very strong on Friday. Bitcoin starting to move higher. So yeah, if you use the 60-minute 20 MA, that helps you a lot with your entries and exits. Okay, here's Boeing. Boeing is a new position. All right, so I sold some put credits, going to buy some calls. Looking for this to continue higher. Kroger with a new CEO. Okay, so this is going to fade back, maybe fill the gap. Chevron, of course, just grinding along. Chevron. Boeing. All right, Caterpillar also looking good today. Caterpillar breaking out, big reversal off of 665. There goes the S&P starting to move now. S&P starting to move. Okay, you can clearly see that above this level here, above this level, we start to have less resistance to the upside. S&P continuation. All right, starting to move here. Okay, calls are bid. Calls are bid.
Now it's getting a little interesting here. A couple things, I think, in the context of OpenAI, they are pivoting as a business towards more of an advertising base.
Okay, nice rally here. Nice.
As well as the valuation reset, if you will, of Oracle relative to their field of
Okay.
from that business itself. Again, I think the market had really been positioning Oracle as one way to buy proxies.
S&P continuation.
Right now, it's starting to look interesting, at least from a technical standpoint, and some of the analysts too are looking at a potential share shift back to OpenAI from Google Gemini, because Google Gemini had really caught up significantly in terms of their position in AI inference as well as queries and tokenization of AI relationships. So with that said, D.A. Davidson is actually now looking at this as potentially bullish for Oracle, having pulled back significantly. They have a position now of a buy rate.
Futures continue to rally. 5, 15, 30, 60 minute time frames are all on buy signals. Looks good. S&P look good here. All right, we're ripping here above this level.
But like you said, they've been pretty beaten down. I mean, just year to date, down about 20%. So with that setup, how would you go about structuring an example trade here?
Yeah, I think some of the analyst ratings are inclined context of this makes sense. If you look at the low rating on the street, it's $155 or right around that level. If you look at the midpoint levels, $275. So with that said, I do think there's something happening in terms of dispersion within the AI ecosystem.
All right, nice little follow through there.
Taking up traction after being sold off aggressively as of late. Oracle's been selling off aggressively for a couple months now. So I think there's momentum, at least in the short term. If you look at the price action, there's a gap in the chart going back to a low pivot point last Thursday.
Okay, momentum still pretty bullish here.
Up to the 20-day moving average, which is around $165. So I'm going to play this bullish short-term swing trade, buy a long-haul butterfly spread with 4 days to expiration. So this is again expiring on Friday. I'm going to buy a 155 call, sell two 165s, which is at that 20-period moving average target. Then buy the 175 above that to tap it off. And altogether, it costs you about $2.50 a share or $250 a contract. So the whole premise behind the trade is to hit the target of 165. It's about $10 between now and expiration in 4 days. Your return is $3 for a dollar risk. So you get $750 in return for $250 of risk. If it does hit the 165, and then your max outlay is
All right, watching for a higher high.
put forth, which is $2.50 a share.
Don't forget the shippers, maritime shippers. Many of those look pretty good. Taiwan Semi, we'll look at that in a sec.
All right, well, right now, even with this 10% move to the upside, trading at 157.37 for Oracle. George, we appreciate you being with us to take us through that note from D.A. Davidson and also for the example trade that George Tillis. Coming up next, we've got our 360 round. We'll be looking at the recent volatility in gold and silver, what to make of that volatility in the metals market, how you could potentially play it. That's next.
Okay, stocks from the watch list. AAOI, Applied Optoelectronics, continuation. Looks like it's going to break out. Volume looks good. Apple, pull back today. Bank of America, all the banks look fairly good. Caterpillar following through. Campbell's Soup, looking for a follow through. Chevron, continuation. Dycom Industries breaking out to new highs. Diamondback Energies looking for a breakout. FedEx consolidating. JP Morgan pushing a bit higher. The banks look good. Lockheed Martin, nice little bounce and a follow through. That's the number one stock on the SCHD. Charles Schwab, high dividend ETFs that we have been talking about lately since January. Mondelez looking okay. Monster Beverages taking a break. Staples are taking a break. Northrop Grumman breaking higher. Pitney Bowes, inexpensive, looking for a follow through. Charles Schwab, SCHD, this ETF. Lockheed Martin is the number one position in that by weight. The shippers, Scorpio Tankers following through. TK Tankers following through. Taiwan Semiconductors breaking out. Taiwan Semi. Taiwan Semi looks good. Taiwan Semi.
Thanks, Marley. So January was a very historic month. At one point, you had silver prices up.
Okay, that looks good. Upbound Group, that's grinding higher. It's fairly inexpensive name. Looks pretty bullish. It's building the right side of the pattern. I would say it's probably going to see about 10% in the next few weeks. So slow grind. Wells Fargo dip that got bought. And Walmart. I'm looking for a base in Walmart. Still don't have my base that I'm looking for. Let's see what TJ Maxx looks like and the other retailers that I'm interested in. Sitting on top of the 50-day, Costco, BJ, Dollar Tree. Trying to get above that 50-day. Dollar General, Ross Stores. Okay, all these look good. Five Below breaking out. Five Below. Did I take it off the watch list? It should be. Oh, man, I can't believe I took it off. It's on the extended watch list, right? Five Below. Yeah, Five Below is on the extended watch list. Okay, looks like we're going to keep going. S&P looks like it wants to go. Mhm.
Some of the volatility, specifically in silver, is a bit of a red flag here. Like, let's separate this conversation. Do you see silver as a separate, more speculative market that shouldn't necessarily be viewed through the same lens as gold?
Sure, absolutely. Let me clarify with my brief comments earlier that I was speaking more on gold being over.
Okay, Five Below and Taiwan Semi. Taiwan Semi breaking out. Looks good. All right, there goes the S&P. Looks like it wants to keep going here. 5, 15, 30, 60 are still on buy signals. We got tick cumulative green. Okay, looking good.
Silver side, absolutely. Silver is no substitute for gold. In fact, I have a report on State Street's website titled as such. Silver is a lot more volatile than equities, let alone just gold. Silver has more frequent drawdown risk. It's also more of an industrial precious metals hybrid. About 70%, 60% of silver demand at the end consumer level is for industrial uses, particularly solar photovoltaic cells, Chinese industrial activity, and so forth. So I think gold is a little bit unique in that sense. It is your true left tail reserve asset. It is a low volatility asset. Of course, the prices among the two metals will correlate positively, but I do think that silver probably ran ahead of fundamentals. It should rebase higher here, but I agree when it was at $120, $130 an ounce intraday near the peaks in January, I felt it was a lot of paper derivatives and probably a little bit overbought, and gold was kind of getting dragged around by silver, but really they are different metals in that context.
And both of you in the notes that you sent.
All right, so futures looking good. Futures rising.
What do you anticipate for the metals as we get this new Fed chair and how the Fed may behave this year?
Well, I mean, I think it's generally going to be true that if the dollar declines, then that's probably a tailwind for gold. And so I would guess that it kind of comes down to how independent is Kevin Warsh and how much has he really.
All right, Boeing. Let's see. Back to Boeing. That looks good, Boeing. Back up to the highs. Riot. Rising, Riot. Okay, looks good. Possibly.
To you, but we only have about 30 seconds for your answer here. You pointed out historically gold performs very well after we get a Fed leadership change. Do you think that we will follow that same historical playbook this time, and if so, why?
All right, so continuation here looks good. Riot. Bitcoin is probably going to catch more of a bid here. It's grinding higher. It's been volatile lately. It can drop. You got to watch. If you're going to trade Bitcoin, you got to watch this thing because it can trade up substantially in 15, 20 minutes and then be back down again, 15, 20 minutes. So you have to really watch that one a lot. So some of the derivatives, like the miners like Riot or Mara, Strategy, that one's pretty cheap. So looking for a follow through there. All right. MSTU, what is that? Is that MicroStrategy? MSTU. MSTR leveraged. MSTU is leveraged. 2 times. That is flying there. Yeah, everybody threw away their Bitcoin. That one trader was down $2 billion.
Plus, cash management solutions, all designed for investors like you, with unlimited rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more.
Okay, so MSTU. All right, S&P breaking higher. Looks like they're going to run. Looks like they're going to run this.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
S&P continuation. Okay, we continue higher here. Okay, there's not a whole lot between here and 7,000. Looks like that's where they're headed. Watch the hedge flows here. Hedge flows at the highs. Oh, not a bad day. It's been the hedging flows have trended, so that's good. We're trending higher highs and higher lows. We don't get that very often. I just assume that this time of day we're probably going to see a top, see an A pivot soon. I don't want to chase it up here. All right, a little dip there, S&P. All right, so puts are starting to catch a bid here. Watch your positioning. Puts are starting to catch a little bid. S&P is at the highs, watching for a little pullback. It's all a matter of hedging at this point because we're at highs. We've come a long way from 69.20, 50 points. That was a pretty decent run up. Okay, we're up 43 handles at the moment. Hopefully we can hold on to this. So IWM, new high of the day. Thank you, Mondo.
Higher by 0.8%. Here's the roadmap for today's show. We'll look at example option strategies for Spotify. It's got earnings due before the bell tomorrow. Plus, a team from Polio will be along with new sentiment data on Coca-Cola, and Datadog is also on our radar today. Now that we've got the roadmap for today's trading action, it is time to bring in my co-host. You've got Tom White in our Chicago studio, and Kevin Hinks joining us live from the CBOE. As you know, we've got you covered from exchange to exchange and beyond. All right, guys. In the weekend, we got two key data points that seem to be like these will be the signature things that will capture trader attention. The monthly payroll report plus CPI on Friday. We also have a slew of some earnings coming in. Tom, what matters most?
I'm think it's going to be the CPI data. The jobs data, we understand that it's weak. You look at the ADP that came out last week, that came in below expectations. The JOLTS numbers weak. Weekly jobless claims kind of jumped up from the previous week also. So I think the understanding is that, hey, the jobs market's weak at this point, and the market knows that, and it continues to move higher. You're seeing the extension of Friday's rally here today. So I think you're going to look at those inflationary data numbers, 2.5% on year-over-year numbers for both the headline and core. That'll be key. 0.3% gains month on month is what is expected. If we get anything to the downside from those numbers, that would maybe, I don't know if it's going to be a positive, but if you look at what the market's pricing in right now as far as rate cuts goes, with GDP numbers continuing to be strong at this point, consumer spending being strong, productivity levels starting to ramp up, even though we've had a lot of layoffs recently. That Challenger job cuts number was weak also last week. So, yeah, I think you're going to start focusing on inflation, because that is what the Fed members that are kind of pounding the table on no more rate cuts for this year are saying, that, hey, inflation's more important than the jobs market, because we understand the job market's weak at this point. So, yeah, I think that's going to be the biggest focus, that along with earnings this week.
Okay, Kevin, what's your take? What matters the most this week?
Well, it's hard for me not to say that any week where we get non-farm payroll data and unemployment data is the biggest data point of the week, because I think that's the biggest data point of the month. Any month that we get that number. So with the 4 readings that we got at the labor market last week, all of them weaker than expected, I think that puts higher focus on the non-farm payroll number. Why? Right now, the expectations are for around 67,000 jobs and an unemployment rate of 4.4%. That would be counter to the 4 numbers we got last week. So I think the market would take a lot of comfort in that. Once you get through that, and don't sleep on retail sales tomorrow morning that we're going to get out. They're looking for a 0.4 increase in retail sales. That would be a nice number, showing the health of the U.S. consumer. Pretty consistent health. So I'm looking for retail sales, then non-farm payrolls, of course. And then, yes, when we get to the end of the week, CPI will be crucial. And here's the thing, and I was talking to Sam Bottis and you earlier about this exact topic. If these numbers that we get, 3 of the top 6 data points this week, if these numbers come in close or at consensus, that's going to be pretty positive for the overall market, because it would show good, solid jobs, unemployment not moving up, and inflation coming down both in wages and in the CPI data. So it could be a pretty good data week if these numbers come in as advertised, Diane.
Okay, good data week if they come in as advertised. All right, let's talk about some individual names. Let's talk about the micro front. You got Oracle in focus today. You have some opposing views around it.
Intel, slow mover, but got positive bias here, bullish bias. Okay, Micron. Yeah, it's a good thing I got rid of those puts. Micron's still going. Chips are strong today. Chips.
Well, I think if you take a look at Oracle, you get an upgrade today, price target 180, then you get a downgrade, price target of 160. I mean, this stock's down 54% from those record highs that we saw in the fall. And this is all about capital raise. 45 to $50 billion they expect to raise in 2026 to help build out their data centers. So I think that the market's kind of reflective of, the analyst community at this point. And nobody really knows for sure, this debt that they're taking on, maybe it pays off, but this is going to be a long process at this point. And I think that's why investors are still nervous. I mean, this thing, besides the 10% jump you're seeing today, this has been a falling knife since those all-time highs in September. And then on the Microsoft front, too little too late on that downgrade. We had a downgrade last week also on Microsoft. They put a $390 price target on this, and they think that that the ramp up in CapEx spend that Microsoft has to use to compete against the Google Alphabet, to compete against the Amazons and Meta platforms, that's going to take a hit to the free cash flow. That's going to be a concern moving forward. And then on the software side, we're seeing a resurgence in software stocks today, whether it's Oracle, Palantir, CRM. And
All right, Brett, I'll be on at 1 p.m., so we'll tune into that.
Microsoft has in that specific sector. You're seeing that big jump that we saw on Friday getting extended here today for some of these names. But yeah, I think the market's kind of brushing this off because maybe that downgrade that this Melius analyst came out with is already baked into the shares because the stock has been just hammered.
That's a good point. And then, Kevin, I'm curious to know your thoughts on that, whether it's Oracle or Microsoft, especially the point about Oracle, where it is getting some love, but at the same time, not everybody's on board with it, even with the challenging chart it's been.
Well, for those two stocks individually, Microsoft and Oracle, they were both beat up severely. I mean, Microsoft got down to $390 and some change before rallying back up. But I think what Tom mentioned is the real story of the day. And that
All right. I'm not expecting much upside from this point. Maybe BNC pivots.
ServiceNow, Crouch, they're all rallying today. They're all strong. And if you're bullish on this market right now, you love today's action because that left side of the heat map is what's bringing this market back. The equal weight S&P is basically unchanged, with the rest of the S&P up about 0.5%. So that left side of the heat map rallying stocks, and you love that because that's the leadership that got us here and has frankly failed us lately, taking charge of this market. So this is, in bigger picture, a big software recovery, Diane.
Okay, looks good. All right, we're at the highs, looking for a fade at this point. S&P looking for a fade, so don't chase anything up here. Okay, S&P starting to fade a bit.
Yeah, over the weekend when him and hers came out and said, "Hey, we're not going to keep selling this pill."
This time of day, typically we see ABCD patterns. The A pivot will start to show up.
Mass marketing cheaper, unapproved copies of the drug maker's new Wegovy obesity pill, asking the court to permanently ban him.
I mean, you're taking it to a different place here by listening to what Jensen said and trying to extrapolate that and say, well, that's why I bought more Oracle as the stock's been in a real bad period.
But why has it been in a bad period? It's been in a bad period because of this perception that AI is a bubble and that it's not profitable, and all of these cash flows that are being invested are not going to have a return. Do bear in mind what Jensen said, that all of these tokens are profitable right now, that every incremental investment is something that there is a return on. And it was based on those statements that I said. And again, Oracle is in the crosshairs of people saying that this is a bubble.
It was down 11% last week. Was Oracle. The target today got cut at Bernstein.
Jim Lebenthal bought more Oracle.
From 339, so it's still well above where it is now.
Don't blink, right? Because it's up 11% today. And I do think a lot of this has to do with the interview on Friday with Jensen and Brad, but particularly what Jensen Huang said, that these tokens are profitable right now. And he drew a distinction to the late 1990s. Remember this with dark fiber, and saying they knew at the time that wasn't generating revenue.
Well, that's what I asked about the PTSD that a lot of investors have, which is why there's so much trepidation around the whole story about all the spending, about some of the circular deals, about what's taking place in software. It's like, we've seen this movie before. We know how it ended last time. Things could be quote unquote.
Okay, markets are just kind of sitting here.
The scenes look the same. That
Dark fiber
didn't turn out well, by the way.
Dark fiber didn't turn out well.
It around the earth like 5 times more than you needed it.
If you go back to Oracle, if you believe the numbers in 2028, it's trading at something like 14 times earnings. And I'm going to tell you, for that growth rate, it's a bargain to buy it here. But you have to believe those earnings. If you believe AI is a bubble, you're not going to believe the 28 numbers for Oracle are even remotely feasible. If, however, you listen to what Jensen Huang said on Friday and what Brad Gerstner said as well, you're going to say to yourself, yeah, I believe. And one more thing, if you look at what OpenAI is doing right now, not just with the monetizable contracts that it's bringing in, but with the funds that it's raising, that $1.2 trillion becomes more realistic when you see that they're raising somewhere between $50 to $100 billion right now.
But you not only bought more Oracle. I mean, you must have been just cruising down those slopes in France. Wind's just blowing through your hair. You're feeling great about yourself. You're having your fondue and après ski, and you're like, I'm not only going to buy more Oracle, I'm just going to lay it all on the line, and I'm going to buy more Adobe too.
Well, you know, I'm going to be very honest here. I watch the show when I'm not on. And I thought the conversations last week were tremendous in this software apocalypse, which wasn't. Listen, I'm complimenting you guys. Take the compliment. In this software apocalypse, which was not just last week. And I listened to everybody, and I totally agreed with all of us who were saying this is overblown. And if I look at Adobe, I know I've said this many times this year, but I'm going to say it again. How many PDFs, you, the average viewer, how many PDFs have you opened just this morning? Adobe is not getting replaced anytime soon by Anthropic or anything else. Well, yeah, but this is what makes a market, and you can disagree with it. That's fine. You understand my stance.
S&P breaking higher again.
Adobe is not getting replaced. No CTO is going to their CEO today and saying, let's replace PDFs.
Let's go there, because if you talk about 13 times, there are those who would say that's completely justified, and arguably the multiple needs to go even lower. As you talk about the apocalypse in software, which is down 22% year to date. We know it's been in a tailspin. I asked Brad Gerstner why investors have been selling those stocks. I want to listen to that because it plays, Jimmy, right into exactly what you're saying.
I'm not penalizing them because they're missing their numbers today. I'm just putting it in the too hard bucket because I can't predict those future numbers. So the only way that reverses, Scott, is those companies have to accelerate their core revenues and show that they are beneficiaries of AI. The companies that do that, Databricks is accelerating their core revenues. I think this quarter they grew over 60%. Snowflake, ClickHouse, these are companies that are accelerating their core revenues because AI relies on them. I think they'll do fine, but application software where I can't see into the future, they're going to.
You didn't say your stock by name.
Okay, S&P is at the high. I don't think we're going to move much higher. If we do, that's great, but I would assume that we've hit the highs of the day for now. We've ran up over more than 50 points off of this low over here.
In the future, there's a tremendous opacity around that, and that's
30 points off of this low. Lows of the day, we're down here. 69.50. Okay, that's nice. We're up 43 handles at the moment.
And I see that continuing. Those are the projections, by the way. Brad's right. He's absolutely right. And I thought he put it extremely well. If it gets harder to predict what these earnings per share
Oh, we're starting to fade a bit.
versus 3, 4, 5 years ago, then the multiple should come down.
Isn't it already harder? His point is that we're already
in the
here.
stock. It's already in the stock. The stock's multiple has gone from 30 to 13 in 3 years.
What if 13's still too high?
That's the market. Steve thinks it's too expensive. I think it's too cheap.
I just think
30 to 13, man. I
have a bucket like that. That's too hard. Let me move on to something else. But here's why Adobe can be replaced.
But then I want to get Brent into it.
Right. Microsoft is an operating system. That's much harder to replace. But Adobe is not. Adobe is a security software to protect your documents. Now, instead of paying a license fee for everybody sitting in your company, you can design that same security by using Claude or whatever. You're going to do it. And that's why you can't find the
You're
stock here.
absolutely not.
Why wouldn't
Because you're not going to take the reputational risk that all of a sudden your document looks like it's written in Sanskrit when you send it to an important client. You're not going to take that risk. AI
I use
is not there.
DocuSign all the time.
There are many who think that all this that's happened in software has been.
All right. Nice day. Nice day.
The note out today says Salesforce and Service.
A lot of people were looking for a big move lower as we start the week, but we had so much momentum clearly buying on Friday. It was nice to see the follow through as a confirmation. We're at the high of the day, so I wouldn't be surprised to see a little fade from up at the highs, ABCD pattern. Okay, I'm going to take a few minute break and I'll be right back.
What is going on here? Here's what he said about the opportunity.
We are addressing the largest software opportunity in history. For the very first time, software is not just a tool. A tool is like Excel. Now software uses tools. So these AIs use Excel. And so I think the opportunity for this new era of software is incredible.
Bryn, I'll have you react to that.
Yeah, I mean, I think that we are at this inflection point. I agree with Steve. There are some things that are too hard, but I think that when you do look at the ServiceNows, the CRMs, the Salesforce, I mean, Databricks is private. There is a tremendous amount of opportunity, but I do not think it's going to be V-shaped because I do still think people are going to continue to question, is this in the too hard bucket? I wouldn't be buying IGV. I think it has I don't like the lumpiness of how it makes up. I think it comes down to also, if you look at Microsoft and OpenAI. And so if you look at both of their remaining performance operations, way too much is reliant on OpenAI. And so Sam Altman, I think, is masterful at fundraising, but I think the market is saying we are going to vote against both of you companies because we think there may be a better alternative than OpenAI, and you both have hitched your wagons to them. And so to me, that's going to continue to be with those software companies, why they're going to be penalized. But I do think, especially like a ServiceNow, when you had Bill McDermott, actually, I think he bought 20 million shares the week ago. That is going to be one of those companies that you just have to have, and they have a strong moat.
For the entire software industry, I agree with Bryn. I don't think we are at an all clear moment. I don't think it's going to be V-shaped. The technology is going to continue to advance. Just look at what we heard last week from Anthropic and the disruption it caused to the financial data service providers as it specifically relates. And I think what you have to do here is be very idiosyncratic. Jimmy, you talked a lot about Oracle. You made one mistake. You didn't mention last week's debt offering. And if you talk to fixed income managers, that is where there was comfort that you could actually go in and buy Oracle. The CDS tightened on Oracle the most since April of 2021. The demand for the $20 billion high investment grade offering, not high yield, which a lot of people, myself included, have worried, are they going to fall to high yield? Investment grade, $25 billion, $129 billion in demand. That's a record. So right now, what you're seeing from a lot of the hyperscalers, we heard this morning, Alphabet, they are going to offer $15 billion in debt. Meta did $30 billion. Very strong demand. The hyperscalers are getting strong demand for that investment grade paper from fixed income managers. And that's where you get the comfort on Oracle. But universally, I don't think you can have it on with Bryn.
How about what, the upset in software has, the tentacles kind of spread everywhere. Private credit, we talked a lot about those names, which were under some pretty heavy selling pressure last midweek. For a couple of days there where they were down significantly because, they've lended a fair amount of money to these software companies. Which
Watch S&P starting to fade now.
Bryn, because you bought more of the Blue Owl Technology Finance, OTF. Tell me more.
Yeah, I mean, to me, where I think IGV is somewhat in the too hard bucket, buying OTF, especially after earnings last week, if you listen to Mark Lipschultz, this stock is overdone. These are pristine loans. Of course, they'll have write-offs. It's loans. But when the analyst asked Mark specifically about this portfolio, if there are any concerns, Mark said, not only do I not see a red light or a yellow light, we see a green light, that these are high-quality companies. These are not venture debt. These are billion-dollar revenue per year with 300 million EBITDA. There's a huge equity cushion. And so if you buy it right here, once again, the yield is based on the book value, the original book value, which is around 17. You're getting around a 13% yield on this today. So to me, this is a great way to play technology. I get a really high yield, and over the next year or so, I think we'll get really nice capital appreciation as Blue Owl's underwriting standards show themselves that they're just not willy-nilly writing these loans. And I think the market's really wrong, especially on this stock here.
Okay, Weiss, what do you think about all this?
You know, it's. I think they're going to be fine, and I think what people are not focusing on here is that a number of the companies in that Blue Owl is lending to are going to have IPOs, and so I think that all the private equity firms are poised to outperform.
All right, S&P, just a little dip there.
Massive pipelines, and they're going to come.
Pretty strong move today.
You're not going to have a great market that's going to go to Ed Yardini's target without
Individual stocks. We have 230 stocks advancing on the S&P 500, 50 on the Qs, a little bit over 50%. 51 stocks are advancing. IWM, about 700 stocks advancing at highs.
Significant wealth there, so I'm not really concerned about it.
You guys want to talk about Bitcoin and what's been happening with that? Let's take a look. Well, we can stay there for a minute because the stock is moving, and you know maybe it's in part on Brin's move, maybe it's in part on Weiss, the narrative that you have around some of these. You got a last thought here as we look at.
I mean, it's the signature of what I mentioned at the top of the show. It's deleveraging. It's the reduction of utilizing debt within the market. I think there was a lot of margin calls, and we saw a cascading effect of all of that. And ultimately, it led to a print of 60,000 in Bitcoin. Steve knows better than I. Brin knows better than I where it goes from here. But generally, what tends to happen, as you and I discussed last week about the silver market, is when you have that type of deleveraging, people leave the market for a temporary or extended period of time.
About this, what we're looking at.
All right, Micron at the high of the day, a little fade. The stocks are starting to fade a little bit off the highs. Let's see, Riot off the high of the day.
Let's talk about Bitcoin because I started talking about Bitcoin, but then mentioned Blue Owl in the move, and that's we went back.
Nvidia trying to push a bit higher. Nvidia.
Can we look at Bitcoin now, please? Bitcoin now. Okay, there we go. Bitcoin 69, so we're under 70. Brin, you bought for the high bit.
Yeah, I think that what's going to come out, I've talked about the yen, the leverage in crypto, what you saw to Joe's point, the leverage in gold and silver. What was happening in crypto felt like a massive washout and this ripple effect. So I just think it was overdone. So I took the opportunity on Friday to add to the position. So I'm a long-term holder, buy low, sell high. I don't buy into, if you go on like X or something, the bear narrative is out of control. I just think this was a good old-fashioned massive margin pull that I think we'll find out, let's say, when all the 13Fs come out, what actually happened here. But to me, it does feel like this is something really over-levered, got overdone, and so added to the position. Nothing more than that.
Okay, I mean, Bernstein today says nothing's broken in Bitcoin, that the current price action is a mere crisis of confidence. Nothing broke, no skeletons will show up. The Bitcoin bear case is the weakest in its history. The Bitcoin bear case is the weakest in its history, according to Bernstein. Do you agree with that? I feel like it's the exact opposite of that. People think now it's the exact opposite of that. Like the bear case around it feels like it has more legs.
Yeah.
It feels like it's maybe more than.
Always feels that way when a stock or a asset is sold off dramatically. It's like Microsoft. It felt like it was never going to turn. Microsoft finally turning back up on day 8.
My too hard bucket, Brad. This is in the impossible bucket. And the reason I say that is that nobody's been able to tell me what the intrinsic value is here. Nobody's able to tell me what the business use cases are. You can make something up like blockchain technology and security, but that's BS. We've seen so many of these, Bitcoin wallets stolen. So I think what you've also seen, and I mentioned this a few weeks ago, you've seen some of the Bitcoin holders who incorrectly thought this was a store of value move into gold. So now they're in gold, and this is a massive drawdown.
That's kind of my point. It's like, oh, it's digital gold, it's digital gold, it's digital gold, until gold looks pretty good, and then, well, gold is gold.
Yeah, gold is gold, and gold will always be gold. There's no there. Now, it should bounce because Bryn's right. A lot of it margin calls, a lot of it, just momentum players. Momentum's been dead for a while. They finally threw in the towel and sold it. So theoretically, you should get a bounce, but you need mana. You need $100,000 Dow to see this go up a lot higher.
All right, so let's take a break. I've got Jimmy making a move. Excuse me. I've got Weiss has sold a couple, at least sold a well-known name. He trimmed another. It was on Friday. We never got to it. And then Joe is buying more of a name we need to tell you about, too. Do that when we come back.
Trump wants rates down. Who's going to pick a guy probably who's going to bring rates down? Because I know you're seeing it.
All right, I'm watching the S&P 500. I got to step away for about 10 minutes. I have to make some phone calls and transfer some money and do a few other things. So I'm going to be off the mic for about 10 minutes. I should be back 12:45 at the latest. Okay, I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, February the 9th, 12:28 p.m. Give me about 10, 15 minutes. I got to make some phone calls.
Resilience isn't hidden in code. Real resilience is about you, your team, and the moves you make when the stakes are high. That's why Veeam builds the tools to sharpen your instincts, accelerate your actions, amplify your impact in real time. The only time that matters. Because without you, your grit and your determination, resilience is just a buzzword. Real resilience is personal.
Oh, now this guy's going that way. Now I'm getting the lay of the land. Valets can be a big test for a young homeowner turning into their parents. There's an overflow lot somewhere in the vicinity. The garage is full. They go to the auxiliary. He said, my garage is full. They go to the overflow. I heard him. I was right here. So stand quiet. I bet you guys have driven some great cars, huh?
Progressive can't protect you from becoming your parents, but we can protect your home and auto when you bundle with us.
I think you might have brought the wrong car. We had the red convertible.
Under the ServiceNow AI platform automates everyday workflows, and when your people aren't bogged down by the small stuff, they can focus on
We're launch people.
the big stuff. Companies everywhere bought into AI. Problem is, nothing works yet. That was not me. Only the ServiceNow AI platform breaks down the walls. It integrates anything in your workflow.
Any data source in with the AI Control Tower, we can finally manage all our AI.
The ServiceNow AI platform lets you connect and control everything to put AI to work for your people. Let's see here. On the check.
Easy as if everybody just moves down one. No. Okay. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
With the easy-to-wear Freestyle Libre 3 Plus sensor, tracking your glucose can be more affordable and personal. Now, more people pay $0 for their Freestyle Libre systems than other CGMs. This is progress. Try the #1 CGM in the U.S. for free today.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg ETF IQ. I'm Scarlett Boom, allocating right now.
And it's time for today's drill down where we focus on one ETF.
Eric, what do you got?
Katie, you teased it earlier. We're going to talk sports today. This is the latest attempt to try to ETFize sports. Fans came out, I don't know, 5 or 6 years ago, had to liquidate. There was one before that. So we'll see if third time's a charm here, work for airlines. So this is Gabelli Opportunities. It's an active fund picking sports stocks, basically like teams and also the media. You can see here the fee is 0. Interesting. Now it's a waiver. In a year, it's 90, but for now, they have a waiver to try to get people in the door, I guess. You can see it's very low assets, but it just opened. I mean, it's literally just came out this year, 13 million. Let's look at the holdings here. You'll recognize some of these holdings. Some you won't, but some you will. Liberty, Madison Square Garden, of course, Atlanta Braves, Manchester United. See what Walt Disney, that would be more of the media, Madison Square Garden again. Then we've got some other stuff down here, Ferrari. You get the idea. So let's look at the performance. This thing is 75% communication sector stocks. So I figure we should compare it to the market at whole, but that's really the sector it's going to have to be. So right now it's down a bit compared to the market. It'll have to get that up. These active funds, Katie, and the thematic funds, typically they need a shiny object moment to get some looks.
All right, Eric, thank you. Joining us to talk about this ETF, I'm pleased to say, is Chris Morangi. He is co-CIO of Value over at Gabelli Funds. Chris, great to have you with us.
Very good timing with the Super Bowl yesterday. Maybe that's our shiny object moment.
Well, that's exactly what I was going to say. I mean, you think about potential catalysts here. Talk to us about how that lands within this portfolio, which, I mean, you take a look at your top industry groups, entertainment, media, software.
So obviously no publicly listed NFL teams, but we do benefit on the media partners side of the house. We do own Comcast, for example, which did quite well, both between the Olympics on NBC and with Peacock. So they're a beneficiary. The bigger event, however, is the biggest media event in the world, and that comes with the World Cup. Football, known to the rest of the world. And that we think will increase the interest in soccer here in the U.S.
So these are publicly traded companies, but if you were to, and you could, get a hold of some private companies, is that something you would consider?
No, we're looking, there are plenty of other funds, firms that do that. We're trying to differentiate ourselves, total liquidity, which is what we're offering here, and transparency.
So this would be what we call a member of the Lazarus list, where somebody goes and resurrects an ETF idea that didn't make it. Now this happened twice, right? So what makes you think you can make it successful where the other people failed?
So when I started covering the media industry 23 years ago, I was serendipitous in that I covered the Dolan companies, which of course had the Madison Square Garden companies, and then Liberty Media, which sprang forth Formula One, the Braves, and Live Nation. So there's a lot more public companies today than there were many years ago, and we've been investing in these companies. Our clients have been investing in these companies for over 20 years.
And it's interesting, if I go down the list here of your holdings, I don't necessarily see DraftKings or Flutter, which owns FanDuel. Was that a conscious decision?
Yeah, and, we obviously are trying to apply, this is active advantages, as Eric mentioned, and we are trying to apply our value lens to that. Obviously, a lot of controversy around those betting names, and, it could be investments in the future. They aren't today.
How are you hedging currency exposure if you are investing in companies overseas?
So we're not doing that today. Obviously, foreign companies, including and especially the foreign listed soccer clubs, are in this fund, but not something we've done to date.
What's the stock in here people will be surprised that it's doing so well?
Well, actually, one of the stocks that may be surprising is Rogers Communications, one of our larger holdings, and actually sports assets. They own the Blue Jays, the Raptors, and the Maple Leafs, of course, as well as the football club in Toronto. It's about half the value of that otherwise telecommunications converged operator. And we think that those sports assets are probably going to come public as a standalone entity sometime this year. So it's a little bit of a hidden sports play.
And so, as Eric mentioned, I mean, you just launched this fund. It's scarcely more than a month old, but who did you launch it for? When you were, putting this together, what intended audience did you have in mind?
So this was really supposed to be a retail product for the average person who's got a brokerage account who wants to pick up on what the ultra wealthy have been doing for many, many years, obviously, and benefiting from the growth in sports. One thing that surprised me is the number of calls we've gotten from family offices. Because just about every family office out there wants to participate If you've got enough money, if you're big enough, you can participate directly through an LP stake or buying the whole team. Or you can participate in a private equity fund for big fees. A lot of them are interested in a diversified portfolio for, as we said, zero fees. At least for now.
Would you consider adding a company like KKR, which has just acquired Arctos Partners?
Something that we've looked at. Obviously, there are some derivative plays that we're considering. So that would be one. CVC, another publicly traded private equity firm, has a big interest in sports for all the same reasons that we do.
All right, Chris, really interesting fund. Hope to have you back in a couple months to talk about it, especially as we get closer to that World Cup. That is Chris Merigy of Gabelli Funds. Now, coming up last week, we spoke exclusively to Vanguard CEO Salim Ramji, and since then, we've learned that he's poaching talent from his rivals. A busy man. We'll give you the details next. This is ETFIQ on Bloomberg.
Oh, now this guy's going that way. HIMC. Now I'm getting the lay of the land. Valets could be a big test for a young homeowner trying to get their appearance. There's an overflow lot somewhere in the vicinity. The garage is full. They go to the auxiliary. He said, my garage is full. They go to the overflow. I heard him. I was right here. So stand quiet. I bet you guys have driven some great cars, huh?
Progressive can't protect you from becoming your parents, but we can protect your home and auto when you bundle with us.
You might have brought the wrong car. We had the red convertible.
Companies everywhere bought into AI. Problem is,
HIMC.
that was not me. Only the ServiceNow AI platform breaks down the rules. It integrates anything in your workflow.
Any data source, and with the AI Control Tower, we can finally manage all our AI.
The ServiceNow AI platform lets you connect and control everything to put AI to work for your people. Let's see it. On the check.
Easiest if everybody just moves down one. No, okay. Your daughter's turning 9 today, and your company's merger is turning on you. Time
HIMC.
isn't on your side,
MSTU.
but the team is. Specialists who know data, strategy, finance.
Man, we have on what? Hi,
HIMS.
everyone. The
THU.
A team that knows you can't enjoy your daughter's big day, worried about your company's reputation. Deloitte. Together makes progress.
All right, for my parents out there that are looking to increase their health, a great and easy way to do that is with Step One Foods. Step One Foods was founded by a preventative cardiologist and proven at Mayo Clinic to help people lower cholesterol through real food. Each product serving is designed to deliver effective amounts of whole food fiber, plant sterols, antioxidants, and omega-3s, nutrients that are proven to support healthy cholesterol levels as well as overall metabolic health. Step One Foods.
You might be tempted to let Taco Bell's Big Less value you go to your head. Because 10 indulgences for $3 or less makes you feel fancy. Like you might think you need cloth napkins. Well, you don't. Just use the ones that come in the bag. Don't let the nuts go to your head.
Hello, I'm Sam Grant with National Hardware Mobile Home Parts in Florence and Conway. When you need to repair your mobile home, we have everything you need to do the job. Doors, windows, tubs, water heaters, plumbing and electrical, sheetrock, understood. Want to have a new look? 14 to 16 wide carpet. Economical, all-wood kitchen cabinets. Beautiful colored metal roofs, heating and air conditioning. No one beats our prices. Financing available to qualified customers. National Hardware Mobile Home Parts, Florence and Conway.
Appreciate that question. Can somebody ask interesting questions?
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
MSTU.
We're just about halfway through the trading day in New York. I'm Norma Linda. Let's take a look at your midday movers. First up, Novo Nordisk said it's suing telehealth firm Hims & Hers for making knockoffs of its obesity medicines, even as Hims & Hers scrapped plans to sell a copycat version of the Wegovy pill. The lawsuit targets not only Hims' copycat pill, but also shots that mimic Novo's Wegovy and Ozempic medications, with Novo arguing that the knockoff products are putting patients' health and well-being at risk. Shares of Novo Nordisk are climbing while Hims & Hers plunges to its lowest level since 2024. Meanwhile, Volair is soaring for its biggest intraday gain on record after Transocean agreed to acquire the offshore drilling firm in an all-stock transaction valued at approximately $5.8 billion. Shares of Transocean have reversed early session declines, rising to their highest level since 2024. And lastly, Eli Lilly has agreed to buy closely held U.S. biotech Orna Therapeutics for up to $2.4 billion in cash to expand its pipeline beyond the obesity drugs that found. Orna is developing treatments for autoimmune diseases such as rheumatoid arthritis and multiple sclerosis. This deal includes upfront payments and subsequent payouts based on meeting certain milestones. Those are your midday movers. I'm Nora Melinda.
All right, now let's get you to the ETF life cycle, where we walk you through the three main stages of ETFs, from initial filing to final farewell. Step one is the filing. The paperwork is in for the VanEck Digital Native Economy ETF. The fund will include companies that make the majority of their money from online finance, online marketplaces, digital sports betting, and video games. Step two is the launch. The ProShares CoinDesk 20 crypto ETF began trading last week, right as Bitcoin went on its wild ride, plunging to $60,000 before rebounding back above $70,000. Ticker KRYP tracks the top 20 cryptocurrencies by market cap, using swaps, futures, and other derivatives instead of directly owning the assets. And for some, the final stage is farewell. Goldman Sachs shutting down GBXB, its homegrown U.S. large cap offer 2 ETF. The move comes a couple of months after Goldman paid $2 billion to buy Innovator Capital Management, which of course specializes in those defined outcome ETFs and give Goldman an entire lineup of funds, limiting downside risk while capping upside potential.
Yeah, it's going to be interesting to see that deal finally close. But let's keep this life cycle conversation going with Aga Kuplinska. She is SVP of Product Development over at Tidal. Aga, it's great to have you with us. So you think about these ETFs that are launching, coming to market.
All right, S&P is fading.
Such as Tidal. So with that in mind, talk us through some of the early trends that you're seeing start to develop in 2026.
It's a pleasure to be here. Thank you for having me. So from Tidal's perspective, and this is not unique to our observations, the entire ETF ecosystem can probably see that active strategies continue to dominate the overall ETF market. Looking at last couple of years, in 2024, almost 80% of all new product launches were active ETFs, and that number is even higher in 2025. Then derivative-based strategies are one of the biggest product development trends right now, especially options overlays to generate income. New product launches exploded in the last couple of years as well, with among strategies where derivative income is the core objective. There were 50 launches in 2024, more than 100 in 2025, and Tidal accounted for almost half of that. We currently run
Okay, VWAP price above, Micron, Riot. Stock's pulling back a bit. Riot headed a bit higher.
The market is going through overlay everything phase, where issuers can take almost any underlying and layer on the options.
Apple's still fading. Apple.
This includes enhancing income on already income producing assets or adding income to spaces that were traditionally not known.
Futures still up 38 handles, but fading off the best levels of the session. Looking for BNC pivots. If you don't know what I'm talking about,
Income remains the number one selling point in 2026. So demand for yield never goes away among investors, especially in uncertain markets where when growth is uncertain, that added benefit of income seems to resonate well with investors. And this all started, with simple cover call strategies. They've been around for years, and white space is getting harder to find. So when we would say no, is typically when something's been done or been done multiple times. The next wave of innovation in sort of options overlays is more about outcome-oriented strategies around, for example, like income stability objectives or risk controls. So that's where we see the most innovations taking place.
And I get asked this when I travel around and meet with different people. I'll occasionally get asked, hey, how can I launch an ETF? I have this great idea. And usually I recommend one of the 3 white label issuers. And usually I give Mike Venuto's number, who is your colleague. What do you need to get an ETF launched? Like, Like how much money and can anybody do it? How does that work?
So it really depends on the complexity of the strategy. On our platform, all the different underpinning services are sort of a la carte menu. So depending on the existing resources of an issuer and what it's needed, if this is an active, passive, does it need an index, how complex is the strategy, what sort of rules are in scope for monitoring, is there an existing RIA in place, who is the sponsor, so all this sort of informs our sort of ETF strategy that we then work with our partners on. How much does it cost? Like, it really depends. It depends on the existing resources of the issuers. It could be, anything from $250,000 per an ETF up. It really depends.
That's really interesting. That was going to be my question as to how much I would need in hand when it comes to the actual cost of launching the fund. And you mentioned some figures there. How has that changed over time? If we had been having this conversation 5-10 years ago, have we seen those costs compress?
I would say some yes and some not. As the ETF vehicle invites more complex products, for example, the usage of derivatives, I would say on these type of products, the costs still remain relatively high. But, your typical long-only equity portfolio with a sub-advisor or sponsor that already has all these sort of resources in place in order to bring a product to the marketplace and manage it on an ongoing basis, I would say the cost could have been compressing.
All right, Aga, really interesting conversation. Appreciate you taking the time for us over at ETF IQ. That is Aga Kuplinska of Title Financial Group. Now, we're going to take a look at the juicy stories in the ETF industry where we flow and tell. Today, we are focused on Vanguard and its CEO, Salim Ramji. Bloomberg reporting that in the past few months, Ramji has made at least 10 senior hires from companies including BlackRock, which is his former employer, as well as Goldman and Fidelity. Bloomberg's Lakia Tapulu joins us now. She, of course, reported on this story. So, Lakia, I said in the newsletter somewhat cheekily that it's busy down in Valley Forge. So, walk us through what the idea is here. What is he bringing on these people exactly to do?
All right, Bitcoin on the move.
He will look at his external network for talents, and that has been really very well received at Vanguard. That traditionally just promoted people from its own brands. I think the hires now are across the board. So there are people in wealth, there are people in advice, there are ETFs. General counsel is new, so like there's a lot happening. There's a lot of people that he's bringing in, and they're all in key positions at the company.
Okay, live screen. Okay.
This is a real change from what Vanguard has always been like, because it was, I don't want to say it was internal and inward looking, but it has its own ethos.
Absolutely. That's why I call the book The Bogle Effect and not the Vanguard Effect, because ultimately Vanguard is going to be run by people who went to business school and want to get profits. Bogle was the anomaly in physics. This guy was different. And when he was there and he passed the keys over to the CEOs, he hated that it grew so much. He was like, we're too big, $4 trillion. Are you kidding me? Now they're like 10. Anyway, I think it might just be impossible to keep the Bogle DNA that intact when you're growing at this speed.
I think though also we're talking about a company that has like over 20,000 employees. I don't know that 50 hires would make that big a difference, but I think the fact they're in key positions does show something about the direction, which is, we're over 10 trillion now. Maybe we need some specific expertise to run the areas where we want to grow.
Has Salim Ramji really put his stamp on the company?
In a way, I think he has. Although it's a big company and Bogle's stamp will be everlasting there. He's embraced this a lot. He's been very well received by the staff, which I think everyone was pretty morbid about before he joined, being an outsider. So I think he's slowly putting his stamp there.
All right, good stuff. Really appreciate your joining us with this. And of course, it's a story that we would focus really here on ETF IQ. It's kind of tailor-made for us. Bloomberg's Lakia Topolu joining us on Vanguard CEO Ramji, poaching from Goldman, from BlackRock for some key roles. Coming up on ETF IQ, it's time for our IQ test, where Joel Weber puts our ETF knowledge to the test. Here's a sneak peek at one of the questions.
All right, I'm trying to read that, but I have to read another piece here. Reminder,
All right, let's look at software stocks, IGV. All right, so software looks good. We got puts being sold down below. All right, IGV. We got Brett coming on.
What exactly do they stand for? Why won't they say it out loud? Let me tell you what Patriot Mobile stands for. They stand for the lives of the unborn. They stand for the Second Amendment and the right to protect yourself and your family. They stand for our veterans and first responders who sacrifice so much for our freedom. Make the switch to Patriot Mobile today and support a company that doesn't just say they stand for something, but one that stands for the things that matter the most.
Your daughter's turning 92, and your company's headed to There's no one to obey. Strategy, finance.
The dream team.
We are. Deloitte. Together makes progress.
Thank you, Mondo. Looks good. IRE. All right, nice coming off the low. Double bottom, IRE. Double bottom.
It's more than a feeling. It's a bond. Experience everything a Mercedes-Benz SUV has to offer today.
Bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, market.
All right, IRE. This is a good risk reward here. I'd put a stop underneath this level right here. Okay, stop and go from there. Stop.
Jonathan, Lisa, Anne Marie, and Mike will bring you crucial data and expert analysis at terminal speed. What we're seeing is simply
Okay, R1.
the January jobs report.
R1, 50-day.
Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld along with Scarlett Fu and Eric Alshunas. And it's time for IQ Test for Bloomberg's Joel Weber. It's going to see whether Scarlett, Eric, and I really know our stuff when it comes to ETFs. Joel co-hosts the Trillions podcast with Eric. He's also the head of games at Bloomberg. And Joel, let's do it.
Let's continue the fun, shall we? All right, last week was pretty strong. We'll see how this week goes, though. Which of the following NASDAQ-linked ETFs has seen the largest outflows year to date? Before you answer this, I'm curious, Eric, how confident are you that you know the answer to this?
This one's pretty good. This one's tough. I'm going to say I'm 70% confident.
70%, okay.
I have no idea, so I'm going to just say, let's go with one. A, sorry.
We're going to go with A.
I'm
Katie?
going to go with D just because I know it's the biggest
Okay.
ETF.
Okay.
Believe it or not, I'm going to go with C.
Wow.
Okay. All right, guess what? We only have one winner.
Oh my God.
Yeah, that will comes up with it.
Let's
And
end it
I
here.
think that ends a streak for someone, but keeps someone else's streak alive.
Wow, this is amazing. This is
I
really
told you I messed with the trivia guys by getting cocky.
Eric is so
Okay, this looks good, IRE. IRE. All right, so we need to see this push higher. So we'll look at the 60-minute too. All right. All right, we got currently having a B pivot situation. We already put in the A pivot high of the day. We're still up 36 handles looking for B and C pivots.
I'm going to say B, 12%.
Eric, B is correct. C is the close.
Okay.
He's
right.
There you go.
I'm the captain now. I'll tell you it's ready.
60-minute, just moving above the 20 EMA now.
Do you know what globally? It's probably going to be
Slightly small.
Let's say less than that.
9.
Yeah, 10%.
Okay.
Final question. I love this one. Huddle Capital's new UFO disclosure ETF. Wow. UFOD is pretty far. A, Northrop Grumman. B, Momentum Holdings. C, General Electric.
Intraday, I would use stop underneath this if you're just getting started on IRE or any position where you have the 20 MA.
B. Airtrade.
Momentum Holdings. What's the ticker Momentum?
LITE's been looking good too. Almost put that on the watch list.
Apparently, all these stocks are already incorporating alien technology, but we don't even know if aliens exist. So that's why I looked at the holdings, and because I thought I saw aluminum at first. That's how I remembered A.
There you go. Yeah. All right. Way to be ahead of it. But you know, we've seen a little rejection. I'm really mixed results. If you like playing futures, there's more. Bloomberg.com/pointed on the website where you can play with some leverages and some hedges to really juice your scores.
We can add that to this game as well.
You know, I asked how confident he was, and you know, it really threw him for
Yeah, do it 3 times that
we'll
one.
see how it goes next week.
Next week. Joel Evers, so fun as always. Joel is the head of games, which is probably the coolest title that we have.
Okay, IRE.
Programming note though, because of the President's Day holiday, we'll be back on Thursday, February 19th. Don't miss us too much because that does it for Bloomberg ETF IQ, the TV show. I'm Katie Greifeld, along with Scarlett Q and Eric Balchunas, and this is Bloomberg.
All right, Chandra. Okay, good. Good to see you. All right, so S&P continues to back off of the high of the day. All right, you should be out of your calls by now. Okay, so IRE turning the corner, 20 EMA, just moving above the 20 EMA. All right, so we should see potentially move back towards the 10, 11 range, somewhere around there. Riots at the highs, riot.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
All right, let's take a look at Boeing. Boeing. All right, this looks good. We sold some put credits on Boeing for March. Those are already up on the day. Okay, as Boeing looks good. Boeing looking good. S&P 500 watching hedge flows. Hedge flows dropped off. So this could turn out to be a very large sine wave, up and down, up and down. Okay. NVIDIA is still hanging out there near just north of 192. 190, 140 rather, 194, 140. Microsoft making a nice go of it. Okay, we got Brent starting here. Oh, that's not Brent. That's
Let's let people kind of filter in.
JT.
How's everybody doing this morning? Technically, it's afternoon because I've eaten lunch. According to the Marine Corps, that's the period where it changes from morning to afternoon. So if you ever have to deal with this, which you probably never will, and you're walking down the street and you greet somebody and you say, "Good morning, sir," and it's like 1:15, and he gets on your ass because he just wants to be a hard ass and be like, "It's afternoon," and you be like, my apologies, sir. I have not yet eaten lunch. It is still morning for me. And then he feels like an ass, and then you get to walk away feeling superior because you haven't eaten lunch yet. And he's an officer.
All right. So Brett's not on today. It's JT. I'll listen to what he has to say for a few minutes.
Yeah, a little fun there. How's everybody doing today? Cool. So let's kind of talk a little bit broadly. So what we've seen kind of in the last couple of days, really over the weekend, and we kind of touched on this in, I believe, one of the PM notes. I think it was Thursday or Friday. Bitcoin, we did see a little bit of stabilization in Bitcoin. Not only that, we held 60 fairly strongly, and then rejected pretty higher, and then we actually broke pretty strongly earlier today. So kind of taking a look at the 2 minutes here. Yeah, you can see right here, we were holding this 69 pretty much all morning from the open, and then once we broke, and we just really broke strongly. If you were paying attention to like where the market was in 70 and knowing that 70,100, excuse me, is kind of that level that's kind of in the ether that people are talking about right now. This was potentially a really strong trade to just kind of like be long Bitcoin. You did see a lot of kind of correlation with some of the other crypto related assets. So if we take a look at, if we take a look at IBIT, obviously we're going to see exactly the same kind of pattern, right? Because it's the same thing. That break got us into 40, and you can see we're kind of holding 40, pushing 41. I think I'm short 50 puts now. I rolled my 55s down and out. Obviously lost some premium there on those, but I'm actually reducing my cost basis. So all in all, that's relatively good. So that's kind of where I'm sitting with my Bitcoin position. I have it in IBIT directly. In short puts. I will never take assignment of the shares. I will basically always manage that position so that I never take assignment. It will always be a margin style position. This just gets me some of that exposure. If we get, a huge rally, if we kind of pull back to the 1 day chart, remember I said 50-ish is my kind of like baseline. If we start rallying stronger and we get some of this momentum, we could see, some of these 60s or 70s, right? Because we need to remember a lot of where we're at. While we did have the tech sell-off, while we did have some of this Bitcoin sell-off, and we have seen like Master and some of the others, or MicroStrategy, have some pullbacks there. Overall, what regime are we in? We're in a very crypto-friendly regime politically and globally, right? We're seeing de-riskifying assets across the nation. We just saw China talk about that, which I'll pull up a link to in a minute. And we're seeing just people in general looking at commodities and other assets in general. So seeing more exposure here makes a lot of sense. It's hard to expect that Bitcoin is going to continue falling at these kind of levels, for me at least, with this kind of crypto-friendly atmosphere politically. And in general, you can see holding the 40s in the 35s has been pretty strong. This has been kind of a consolidation point. So I'd like to see some type of rally here. So this is kind of where I'm sitting with the crypto stuff and where I'm at. But it's rough because I'm actually underwater, right? Because I'm $10 underwater. So this will be a difficult position to kind of manage, but it'll be fun. Somebody mentioned offline on Discord. So the offline status on Discord, it is always offline. It is never online. And that's simply because in order to be online, you have to toggle it to online. And then it just stays online because it's a lot like my porch light. I never turn the thing off, right? So I'm just the kind of guy who just never turns the porch light on and comes into a dark house. It's a terrible thing, but that's also how Discord works for me. If you have a question for me ever, just send the question and I'll respond to it as soon as I get it. Or like the type of question it is, I try to triage them when I can, but sometimes I miss them. So yeah, kind of looking at that. Now we did have somebody talk
Bitcoin's
about
still pushing a bit higher, so I'd be
this is
scaling
very
into some Bitcoin
early.
perhaps.
I
That
was-
looks pretty
I
good.
was very I don't ever like MicroStrategy. It's not my thing because of what they do. They did end up having very bad earnings. They did not.
Okay, we're almost at 250 stocks advancing, so that would be 50% of the S&P 500. More than 50% of the Qs are bid.
I don't like them. They had bad earnings. The stock went down. I like to see that personally, but I didn't get to make any money off of that because my dislike of them is not in the asset of willing to buy against people who just buy crypto and not know anything.
Okay, let's look at the New York Stock Exchange. Always a good idea.
It is, Charles. This is the doom section.
Making new highs. New York Stock Exchange making new highs.
Right now, we're talking about some of the things we talked about last week, which is crypto. That's kind of one of the areas of like risk-on assets. And then we're going to go into Trace a little bit. We're going to talk about what we kind of saw in Trace today, and then kind of how that's set up. And there were some expectations there for Trace as well that we're kind of getting into. So you see how we talk about a little bit of rally in crypto, how we talked about that kind of last week. We're kind of recovering that. We're seeing that even with MicroStrategy down, we are seeing it recover a little bit. This is due to the strength of Bitcoin, right? If Bitcoin rallies, MicroStrategy will rally. Its fault is not Bitcoin itself. Its fault is in its payout structures and stuff like that, in my opinion. Again, that's where I put my particular trade at. Now, kind of looking in general, we can see that the small caps are still absolutely monstrously strong, right? We're still well above the 200-day moving average. I think the IWM, the small caps are like 8% on the year to date. Let's actually, we can just check this. Yeah, 7.25% year to date. That's fantastic. Year to date, that high. I mean, when you look at IBW, we don't even have 0.5% towards us, right? So the equities here are really getting hammered, and that's part of that is going to be due to, right, this big downtrend that we saw from the tech sell-off, right? And then to kind of like not to kind of beat down on that, we can see Microsoft here really is where a big portion of that happened, right? This was not just the sell-off. They had fantastic earnings. They had, beats and raises on their EPS and revenue numbers. It was where the revenue is coming from, where the revenue growth was. It pulled back some of that AI narrative, and it was part of what started some of that firestorm.
All right, just listening to JT over at Spot Gamma.
$100 essentially.
Okay, he's rambling.
This is very, very big portion.
Hopefully he gets.
When you take a look at,
he's talking Microsoft. That's okay.
Top to bottom, it's $20, right? Like it's a significant difference. And while we're talking, a $500 stock, NVIDIA is no slouch at a $200 stock. Like, these are still very, very large moves. Earnings obviously did play a big role into that, but that's a big, big issue. What are we seeing now? Well, we're seeing tech rally strongly. We're seeing that not just here. We're seeing that.
Okay, New York Stock Exchange Composite. When you're in doubt, you're in fear, or whatever. See what the New York Stock Exchange has to say. Is it breaking out the new highs like it's doing right now? What's the 60-minute doing? Look at it, 60 minutes since Friday. 20 EMA is up and to the right. 20 EMA is up and to the right. So this is looking really strong. Okay, so if you check the daily, you check the 20 EMA on the 60-minute. If those two are setting up, you'll see a move through the 20 EMA. 20 EMA will be moving up and to the right on the 60-minute. Daily will be above its 9 and 21 day. So you want to be buying dips. You don't want to buy it up here, obviously. But a lot of stocks on the NYSE look strong. Let's go see what those are. NYSE, Rig's on the move, so it's buying somebody. I forget who it was. Was mentioned earlier. Chris, I believe, mentioning Rig.
What I like to refer to as post-earnings announcement drift, right? So it had its earnings, and then it continues to drift higher. We're seeing some of that fade back a little bit now. Notice it did not have much of a pullback during the tech sell-off on Thursdays and Friday, right? Those positions were still kind of chasing that momentum. We're seeing some of that unwind now, so it's kind of hard to tell where Apple's going to sit kind of like in this kind of short-term next couple of days when we're coming into this OPEX position, February 20th, 11 days from now. So it could fade a little bit more. It's tough to tell. But this is pretty much one of the strongest tech stocks that we've seen right now. held through the sell-off. And
So rig is looking good. Rig looking good.
will continue. That's tough to see.
Okay, breaking out.
Kind of going off of that, we've seen the tech kind of come out with its earnings. We're shifting gears a little bit. We've already seen some of the AI data centers kind of announce their earnings, but there are still some that are still left. EMU reports their earnings. They reported December, and they will report. I thought they reported much earlier around this time frame. This is not showing where their earnings are. They should be reporting sometime soon, if I remember correctly, because they don't report in April, if I remember correctly, because they would be completely missing in Q1 or Q4. So it's different, but we've still got a lot that's still there. Let's see, what else was the other one? CoreWeave still had its big kind of rally off of NVIDIA dumping more money into it, right? But its earnings are coming up in the next couple of weeks, right? The end of February here. I believe SanDisk just had its earnings, so we're kind of stable there. March. Trader's telling me March. Okay, cool. I was like, this isn't right. It's supposed to report at end of Q1, but it wasn't showing up where it was supposed to be. Yeah. It's like March. It should be like March 20th, right? Like March 18th, somewhere around that range. It's what I thought they would normally report on. What's this one at? That one is March 20th. So last year was March 20th. So probably that week is where I would expect, which is really close to that earnings. Now, again, why does this kind of matter? This gets into that tech story, right? So what do we got going on with tech? Well, not only do we have the AI supply chain, we're constantly pushing AI, data centers, AI, but we also have a lack of production of just consumer grade retail style CPU RAM. Now, how's this going to impact things? Well, your makers of computers, Dell's, those companies, when they make those PCs, are going to have to raise those rates. We saw recently, I think this weekend or last week, at the end of last week, NVIDIA is talking about reducing
Transocean buying Valaris for $5.8 billion.
Simply because the cost of RAM is going to be too much. It's going to cost the card to get too expensive. People aren't going to necessarily buy it, and we don't have enough there, right? So this is going to cause like a lot of different twists within the overall AI data center. Speaking of an AI product or an AI related company or AI data center related company.
All right, so the deal creates the largest publicly traded offshore drilling contractors. Okay, that looks good.
Power generation units. Just power generating units are absolutely crushing things because why? We need power to generate, or we need power for AI data centers, right? Like it just kind of makes sense. But if you were into this type of industry, you probably wouldn't have noticed how big this particular move is. It gets pretty big. How wide this kind of
Okay, so people buying rig in anticipation of this getting approved in the next few months. So this one's been trading below $5 forever. Seems like since last year or 2024 rather, it dropped below $5. Starting to turn. This looks pretty good.
We can see these kind of pullbacks, but we can weather these kind of pullbacks pretty strongly at this point. And if you kind of zoom out, you're seeing this kind of like clear consolidation where you get this kind of top end. Now, does that mean we're going to trend lower? Not necessarily by any means, right? And I'll show an example of that in just a moment, right? All it takes is a little bit more push and there could be another leg. And that's what everybody in the market is scared of. That's what we're seeing right now. While everybody piled out of tech, tech's now down like 15%. Hey, tech's a value now at 15% lower. Let's pile back in. And all of a sudden it gains 6 more percent, right? Like it's rallying very strongly. It's only
rig. All right, so rig looks good.
A stronger leg higher. And that's kind of where we're seeing the talking heads start to transition some of their conversations. Is like, well, what's next? Is it really going to be a pullback down here to this SMA? Or are we just going to go sideways for a little while, let our averages essentially catch back up, and then we're going to have another leg, right? This is really where the start of conversations started to come in. Now, we've also known in the last couple of days, Kevin Warsh appears not only to be the nominee, but he's going to be being pushed through. Obviously, there's some political stuff still going on there with regards to that. He's not even out of the committee yet, essentially. But Trump has nominated him, essentially. He's put his backing behind him. It's hard to see him like turn around 180 for no reason. So let's go ahead and assume that he's going to be pushed forward. Well, if he's going to be pushed forward, what are we looking at? Well, while Warsh was in the Gov, he was a very much hawkish individual. So why would? Well, he doesn't necessarily have to have the entire rate curve come down. If we cut and the other end of the curve, the long end of the curve in this case, is much steeper, let's say 200, 250 basis points, that's going to provide a lot of lending relief to banks. Banks are going to be very comfortable lending into these kinds of regimes where they could guarantee this kind of basis transition, where they could have basically take the front end of these kinds of loans and then mortgage them out, or not mortgage them, but essentially be able to carry them out to the longer end of the curve and basically bridging that basis points for them. We're seeing banks rally strongly on this, right? We're seeing, I think JP Morgan topped at 320 earlier today. What's it at now? 322, so it's even higher today. And we're kind of seeing this element kind of pick up. Now, JP Morgan had good earnings. Again, one of those things kind of going into the tech sell-off, kind of into the other areas, was this kind of pullback that we saw, right? So there's a lot going on into the markets that we've seen coming into today. We had that big Vanna rally. We had all that other area that we were coming into, but what happened kind of starting today? Well, coming into today, just looking at Trace from the morning, there's a couple of really strong areas that kind of picked out. So this is our open right here, right? Now, in general, we can't really
Just listening to JT over at Spot Gamma.
A bit bigger for you. When they're all at the same level, that doesn't mean they're equal. You can see the values here are different. So this is 4, this is 5, this is 8 million, right? So don't be misled by that. This is just me trying to make it a little bit bigger for you. And in general, I'm just going to do that because if I do it this way, then it won't jump around a whole bunch on the chart. Let me also move this bar and this camera. Cool. All right, and then we're going to go ahead and move our heat maps in there. Cool. So now we can kind of see where the market was kind of positioning wise today. Now, right around us, you can see this really nice cluster of relative positive gamma that we had. This is really, really strong. In general, what do you expect around this? Well, in the open, with strong clusters of positive gamma on both sides, if you don't have a strong direction from hero delta, you just kind of expect some choppiness. The bottom end's probably going to be this kind of 6,900 area, where this upper end, not being this outer one right now, it's going to be here, right? And what you want to see develop is you want to see these positions typically develop, right? Push higher, you would expect this 69.35 level to start giving you resistance, right? That's what our expectations are. Market open, here we go. So as we kind of get into that, I'm just going to click forward a couple of ticks. We can see right away positions develop, right? We saw this positive position. You can see it was positive here with the little flags. 10 minutes ago, it was 1.2 million. 30 minutes ago, you can see how it changes that, right? It's now negative. Well, how do we get negative gamma from positive gamma? That means that traders were consuming gamma, right? They turned the market negative gamma. How do you consume gamma? Well, you buy it, right? So if they're buying gamma, they're buying options, they're long options, we should expect to see our hero signal show that exactly, right? And we do see it. We'll go see that in a second. But this is what we were kind of seeing, right? Now, once we start getting this kind of strong buying, what do we expect now? Well, right now, we expect some type of overhead kind of resistance at the 6950 level. But this is negative gamma here. It's kind of slippery. We could expect some kind of change here at 6940 because it's not quite full negative. Like it's not as strong in magnitude. It's much less. It's only 327K as opposed to, 2 million, right? So this position.
All right, rig looks good.
start shifting. So
Let's
go ahead
see,
and watch that.
Boeing still hang.
Bam, it moved all the way strong negative.
Was that a low tick alert? Had a low tick alert? Looks like a low tick alert. S&P dropping off.
People buying calls or buying puts, right? We can see that in just a second. Now we're getting some of this kind of consolidation point from where we were, and we get that kind of positive gamma kind of supportive element, compressing realized volatility. Hero again transitions higher, and then we get starting up into that upper leg. Now, this is where I thought it was kind of interesting, particularly kind of around this point. I'm going to zoom out the strike plot because I'm going to take it back to a more natural look for me. So right here, this looks a little different than the previous one, right? We've got this strong positive gamma and then this kind of like pocket here that kind of settles in, right? Now, obviously, this is an imbalance.
We're still up 30 handles on the day, 31 handles.
Necessarily like this whole like lots of positive gamma, there's just a random bunch of negative gamma and a bunch of positive gamma above it. It's going to price itself according to supply and demand based on those demand functions, right? That means they're going to open or close the bid or the ask as needed to kind of get these material positions going. What do we expect, though, when we get into positive gamma? The same thing we expected as we descended here. Compression of realized volatility. After we get that compression of realized volatility, we want to see what Hero is doing in general. If it's still strong, we can continue in the positive direction. We get this move here. We have not just one strike, we have multiple strikes to kind of absorb us. This is a good potential to potentially keep that long and not cut it, like I've told you guys potentially before, might be a good area to cut. This is one of those ones where you want to kind of let gamma kind of materialize a little further and see if you can get into that pocket and get, another 5-6 handles out of it.
Okay, ABCD pattern.
Risk reward scenario. So balancing.
We're looking for B now. We're looking for a B pivot.
Now, this is different than.
If you don't know what I'm talking about, you're a new member. I'm looking for this pattern right here, ABCD pattern. This is A up here right now. Okay, A.
They're different. Now, if we zoom the strike plot out here, sorry, wrong one. Let's not do that one. Let's do this one. We want to see the gamma up higher. This is also different than this triangular peak gamma, which is different than this like break and fall into kind of.
All right, let's see what hedge flows look like.
Right. This gamma is gamma that all realized volatility just compresses. It just feels like price is going nowhere, but like grinding somehow higher. Your short call that you thought was safe is somehow just magically becoming more and more in the money, and you're just frustrated with it because you just wanted it to expire, and it was perfectly fine if you'd have closed it 20 minutes ago, right? It's one of those situations. Now, those are the three differences in the gamma that we have here. Watch what happens as we interact with these 2 points. We're going to pull up, do a little bit of grind, and then we get up into that pocket, right? Now, same concept, we're grinding, but look, we've got another little pocket potentially developing. Market's doing the same thing. It's just adjusting its position higher as we go. This is not a market that you want to fade yet. The positions are just scrolling higher and nothing here is showing you. No hero signal here is showing you that there's downside trend. You've got positive gamma surrounding you all around. So you expect realized volatility to compress. It has been compressing. All the things are telling you that, okay, it could turn on me, but I don't necessarily think it will right now. So I'm just going to hold and be patient. And then we start to see some of the areas where that's not necessarily the case. We start to see hero trend lower. We did get our compression and realized volatility, right? We did get exactly what we wanted, but now hero's not necessarily going with us. We have this big spike pattern that we don't necessarily like. This is one of those that you could reject lower from. So this is one of those risk reward scenarios where like, where do I really think we're going to go? This is where I typically recommend, hey, this is where you probably want to cut some of your strength in your position. You want to have some of that like reduction in deltas. So if you're like long 3 contracts, maybe you only want to do 1, or you want to fly off a position, things like that. What do we see? We see this continued kind of like falling lower trajectory. So if you were long options that 30, 40 minutes ago, not only did you lose, what is that, 6, 7 handles of delta, you also lost 45 minutes of theta just dragging that long option when you had those risk events, when you had that profile that's like, okay, this is not necessarily a profile I want to be long into, right? So these are kind of how I was looking at trace today, kind of going into this morning. I didn't have an ES position strictly. What I do have, though, is I have a covered put position in IVW. So I'm short 100 shares, and for every 100 shares I'm short, I'm also short the 125 put. Now, I chose the in the money put because I'm expecting us to kind of rally strongly over the next couple of days in general. We got a pretty good move already today. Oops, sorry, that was the wrong way to go. We got a pretty good move already today, kind of grinding into that.
Just listening to JT over at Spot Gamma.
Sorry. You see where
Futures
148
currently fading, hedge flows turning down.
41. So we're up pretty strongly in the day. This is the same thing as like SPY. It's just the iShares version of it, much smaller overall. So there's a lot of like little value that you can use here to kind of like pick up some of these little tips and tricks. Now, what was kind of interesting today, and I've told people a lot about this in general, especially the last couple of sessions, I prefer to look at the equities ticker. I'm going to move my camera.
Microsoft.
I prefer to look at the equities ticker.
Nice rally on Microsoft. It's up at the highs at the moment. Software being way oversold. If you've been around for the last few weeks, you know that software got way oversold. Microsoft reported earnings. That dropped off. Gap down. This is day 8 using a Lee Star thought process. Looking for all the indicators to get recycled and turn up. We're looking for puts to get sold. We're seeing some of that.
Indicates that S&P 500 is not leading today's momentum. And if you were a member over the last couple of days and you were only watching S&P 500, that was fantastic because S&P 500 was leading you everywhere you went to go. Let's turn on the calls now, and you'll notice that the axes are going to shift here in a second once they load in. But once they do, actually, I might have to actually like change away. Let's just refresh. Boom, there they go. Okay. Now you can see, let me get these kind of set the same way I had them. That's pretty close. Cool. You can see right here, let's change the color. That's not going to work. You guys are going to be able to see that. Okay, purple. So S&P 500 options are selling off. Market's going sideways. S&P equities are going sideways. Market's not really doing anything, right? Now, the market did strongly sell off down here.
Valet.
Slightly low.
K-View.
Only slightly low.
Cleveland Cliffs gap down this morning.
To understand the difference
Snap, KD. These are the New York Stock Exchange.
One could be in control of the market.
Okay, BBAI turning. BBAI is a possible trade there too. It's fairly inexpensive. Just, buy 100 shares, just sit on it, buy 1,000 shares, whatever your thing is. Oracle coming off the low. Oracle's up 16 points. Oracle looking good.
Well, you need to have some understanding of volatility.
Off the low. So several analysts talking about a buy down here. Portfolio managers buying the dip down here.
Is the boost from SPX and Tech Boost visible?
Jim Lebenthal and I think Joe T said that he was buying too. Like to see this higher by the end of the year.
Not only was it kind of covered there,
in the 300s would be nice.
It wasn't just in the 500 ticker. It was actually going to be mostly seen in the equities ticker. Because that's where you expect tech sell-off to kind of go to buy into it, right? When you're going to buy volatility, you want to buy it in the thing that's cheap. A big sell-off, it means it's cheap at that point, right? How to interpret hero flow alerts and how to add hero flow alerts on Trace for SPX. So you can't add the flow alerts onto Trace as far as I know. Hero Trace, the Trace is just meant to be essentially the heat map and the positions that you see. The reason we add hero on this is so that you have some reference of what the Hero ticker is doing within the candle itself. However, Hero in general, you're going to want to use a better charting package for it because you're going to want the more responsive elements of a standard chart, right? And that's why we don't add a whole bunch of features to Hero within Trace, is because when you're looking at Hero, we want you to be using the Hero tool, not the Trace tool. It's really not designed for that. It's designed for the heat map and the bar charts there. That's not forever. We're going to be improving that over time, but that's just kind of where the tech is available right now. We essentially, like, in order to have something better, we have to build something better, and that just takes a lot of time. And as everybody knows, we like to build stuff, so that's not scary. In the Hero upgrade, the EMA indicator 9 displays as a vertical line.
Okay, starting to rally a little bit here.
By total all. I'll take a look at it, Michael.
Be nice to see this rally back up to the highs. All right, so this looks like it could be about to form a B pivot. Okay, we're looking for a B pivot.
That should be within the trading package itself, so it's probably something.
Okay, VWAP is right here. Here's VWAP.
Pick up in somewhere. What is the magnitude, or what is the relationship?
Sorry.
Between magnitude of gamma
Here's VWAP.
and the concentration of gamma levels? I asked Brent why it mattered if you saw gamma at single-digit levels at a strike versus sometimes 200 million. Should you be skeptical of 2 million versus 200 million? So here's the honest answer. If your flow for the day is 200 million worth of gamma relative, then the 2 million gamma strike.
Nice rally back up.
Right. If your flow is like inside, like it feels like molasses because nobody is actively buying or actively selling. It just feels like you're just kind of being pulled around the grocery store by mom holding her hand the whole time. However, the net effects of all of it are pretty consistent. Now, the issues come in. Let me go to the trace image real quick. The issues come in where you have this, 30 million gamma position, and then everything else around it is just nothing, right? Now, typically you'll see that when the position is outsized for the overall volume. And most times you see that are like in the capping.
Watch MACD. Watch
It's a
MACD.
very, very concentrated position. It's very, very concentrated. Tons of contracts, all at that one set of strikes, all in that seemingly known area. And what do we typically see? Just compression of realized volatility around that patch, right? And anytime you get really strong gamma relative to the volume of the market, you get that extra compression, right? It feels like it's even worse than before. So that's kind of the difference. Does it strongly matter? It only matters when the volume doesn't match. So if the volume's matching what you're seeing, everything typically goes. Now that's a very hard thing to gauge, but like I kind of showed you here, I was showing you basically the chart of what the expectations were as we went through them. I didn't look at anything beyond this point right here. This is just all the things that I have learned over time to tell you what you should expect as I push this button right 3 more times, right? And then I can tell you what you should expect the next time, right? We got the same pattern we had below. If we expect Hero flow higher, we expect to kind of break into that little valley, settle down. Otherwise, we expect to fall and find that resistance to the low side, right? In this case, we broke higher. We already know this one, right? And then once we get to the point where it's a different kind of position, this is different, right? This has a peak. This is a lot harder for us to break through. We would need to see extra momentum, right? So at no point am I strongly looking at the fact that this is 30 million gamma, right? This is just me relating the overall flow from the markets and from what you've seen just in the time. You can do this the exact same way. It seems like it's a magic trick. I promise you it's not. It's just understanding all of this in relation to what Hero is showing you at any given point in time and what price action is showing you and what price action should be. So hopefully that helps you there with understanding like magnitude versus like percentiles, right? Now, the 99 percentile versus 97 percentile, those are just historical values. That means that this is the most amount of gamma where it's in the 97th percentile or 99th percentile of all gamma that we've seen, right? It's the 97th highest amount. Now we've seen every strike, top to bottom, every day for 2 years, right? So there is a weighting on this to be the last 30 or 60 or 90 days, I believe. But again, it's still like a percent of gamma, right? In general, what do you expect with strong positive gamma? Compressed realized volatility. You expect market to just kind of grind into it. What do you expect with strong negative gamma? Well, if it's an outlying bar or you have that interspersed bar where you're positive, negative, positive, that fishbone pattern, you expect some choppiness. That's different than just you expect to go to that strike and sit there, right? It's a different kind of concept. Yeah, Zam, I'll show you the trace settings. I believe these are also in Discord though. So if you want those, you can also look there. There's really nothing special about these. I like low. I keep it on 500 always. I never change my trace hero. If I want to look at the other hero, I go to the other hero chart. I keep my color scale and I keep my contour lines on, and then I only use 30-day look back. That's what I look like.
Watching for an ABCD pattern on the S&P.
For me, trader, 2 million or 200 million, it doesn't matter. Both tell me something. What matters to
Riot continues its path higher. Riot.
How far away is that 200 million gamma? Is it even within implied volatility time frame, right? That matters more to me. Like this right here is 48 million gamma, but I don't know if right now, as of this point in time, which was 11 something, 12 something, if the 70-15 strike was even at 15 delta, right? I don't know.
Microsoft.
One standard deviation.
Microsoft shares MSFU continues to push higher. Microsoft. I like the idea of trading some Microsoft, scaling into Microsoft.
I'm just not, because it's outside of where the expected market is for me, right? Because I'm going to look at implied volatility more. The data source is different than the exchanges. We have 13, 12. We have more than 8, but less than 16 of all exchanges for the options data. There's like some pluses and minuses, and there's like some fancy ways to dot the I's and cross the T's. But a lot of the exchanges, the bulk of the volume. Basically everything that's currently available, we have that. But the data source, it comes from not just them, but it comes from multiple entities. There's a lot of different entities that are available for data. Yeah, I have no idea, trader. I appreciate that. I have no idea why Brent likes me. It just works for that. Yeah, Alberto. So here's the settings right here. They're very simple. They're also in the Discord, so you can grab them there. They should be pinned there, and if they're not, just ping me in the Discord because that's on me because they should be pinned there. And then the color settings are here. This is just going to get messy though. These are defaults, so I don't think I've changed anything ever because I picked the defaults. So I have an advantage. Why low versus auto? Why low versus auto? This is a great question. Why low versus auto? Because you see that giant bar of purple gamma right there at the top of the chart right here? This big cluster of nastiness. You see this thing right here? If I go to auto, it's going to wash it out slightly for me. And I want low because for me, the contrast pops better. I see it more visually. This strike was more important to me in low than it was in auto. Now the auto is balanced based on the total magnitude of everything. It's a great auto. It's more akin to it's gonna be more akin to like the medium or high depending on the actual strike. I just like auto because you get this really strong action right here, right? You get these really good contour lines. The 6930 level has been interesting to me for days now, and it keeps popping up with this nice positioning here every single day. So I constantly want to see if like, is it going to be interacting today? Can I take a long off of it like today, or can I fade back to it, which I probably won't get the opportunity to because of this bar right here, right? But it's been one of those, and I can only see that for me in the low settings, so that's the one I picked. But I encourage you to pick the one that you like the most. I have hundreds and hundreds and hundreds of hours in this before you guys got to see it, so I have my preferences well before, right? What do the contour lines tell us? So the contour lines on Trace are meant to tell you that at this particular wavy line, there is a significant difference in the change in Y values. How big that difference is, I don't know necessarily because it's automatic, but it's significant. It's automatically driven. And we can always see them be those kinds of areas where we get some of these kinds of interactions with price. We can also see, like, if you zoom in, they will update to the values that are currently on the chart. Now, why I like that particularly is because it highlights something that we can't necessarily replicate on our own. And it's this kind of, I wasn't prepared to kind of like come up with the words for this kind of like Monte Carlo-like expression where we get this strong, like, okay, it kind of matches our expectations of where price should be and where we should start seeing some reactions. It's really quite good the way it works, but that's how it's developed. When you change your zoom, the lines will change as well. So just be aware of that. They're not static unless you're at the exact same setting. So this is the settings I pick typically. 2 and 3 are typically the ones I pick. And I turn 0 DT off typically. Okay, what do we got, Scott? We got a couple more. I saw a bunch pop in here. With Hero dropping so precipitously, do you expect the market to start heading south soon? So we kind of talked about that just a minute ago.
Here's Microsoft turning on the 60-minute.
Or is it equities, right?
Okay, so this could come back a little bit, but we're looking for a follow through.
Correct. Hero 500.
Software stocks oversold.
You saw earlier. Remember, that's not what's been really controlling the move. Now, it did control probably the biggest portion of this down move, right? Because more volume was weighted there. But the move higher actually wasn't from that. We saw earlier it was from more.
All right, I'm going to tune out. JT's talk about stuff that I'm familiar with, so I'm going to go ahead and exit.
It just depends.
All right, so nothing against JT, but I prefer when Brent is on. Okay. All right, so Microsoft looking pretty good for a change in direction. Okay, S&P 500. We're looking for moves above the 20 EMA. Now, this is something that you can do very easily yourself. Okay, so let's see. Let me go back to Google. This is something you can do yourself, right? So Google AI mode. I go to history. Okay, so what I did was ask Google. What I asked was Google, please, or Gemini, please give me. Where are you? Okay, please find the stocks that have crossed above the 20 EMA on the 60-minute time frame chart on Thursday and Friday. Okay, so Thursday and Friday, that was before the open. So I wanted to see what stocks looked good. NVIDIA popped up, Diamondback, Intel, and so forth. And then I went down here and I said, why don't you update it for U.S. companies only, right? So it did that. So this is finding the stocks that are moving above the 20 EMA. Okay, so let's take a look. So Intel is one stock that moved above the 20 EMA. The reason I like this is because I'm looking for swing trades. Okay, so if I bought this morning, this is looking good. 20 EMA trending. So I'm looking for that 20 EMA to be trending on a 60-minute. All right, so look, I want to see that 20 EMA trending. What are some other names? Okay, so ExxonMobil, Chevron, Capital One, ConocoPhillips rather. Okay, so let's look at those. Let's look at the Chevron trending above the 20 EMA. So my stop is the trailing 20 EMA. Drop below that, I'm out. Okay, I have the 180, 185 call vertical. If you've been around for the last week, you know that I've been trading Chevron since the January 3rd pop, the gap up after Maduro was taken by the U.S. government, U.S. military rather. It dipped the following 2 days. Once it moved back above the 20 EMA, that was my cue to jump and to add some more shares. So we added, instead of shares, I added the 60-65 call vertical. Then I rolled up to the 65-70 call vertical, then the 70-75 call vertical, 75 to 80 call vertical. As this keeps rising, I just keep rolling these up. And 75, 80, now I'm in the 80, 85 call vertical. At some point, this is going to crap out, but I've been making profits all along for the past few weeks, right? So that's what this is showing you. Okay, I'm looking for stocks that move above the 20 EMA on a 60-minute time frame. Why do I do that? Why do I do that? I could just do the daily, right? I could. Gets a little bit more, I don't know, gets more to my preference. Okay, my preference is to take the daily. Okay, you look at this and you go, oh man, that's looking really extended. Have you ever had that experience where, wow, this looks really extended? I can't buy this up here. And you wind up missing a trade, right? How many times have we seen that when Lee Star was here? God rest his soul. When he was here, he would trade Home Depot. And there was a couple of times back in the day on Home Depot that some of you may have caught, I missed, where Home Depot, let's see, I think it was about 6 years ago, actually. Over here, Home Depot went from 122 to 256, and it just kept going. Consolidated, kept going. Consolidated, kept going, and finally topped out at 380, right? Then it consolidated again on the weekly, ran back up to 426. Right now, it's moving back up to the top of the range. So the reason I like I like to use the 60-minute is first I look at the weekly, then I look at the daily, and then I look at the 60-minute. Is the 60-minute set up? No. You see what's going on here? I would not buy this. It has to get back above the 20 MA. It's just the way I like to trade, swing trades. So once it moves above the 20 EMA, the volume will pick up. We'll be above the 20 EMA on the daily already, that dotted red line, and I'm ready to go. So let's look at a few more. Okay, so I went through this and I said, there's a couple here, and then I asked it to update again. Can you rescan now that the market is open? Okay, so Gemini rescanned it, and still the same charts are coming up. Intel, ExxonMobil, JP Morgan, ConocoPhillips, GE, Goldman Sachs, Boeing, CVX, Chevron, Oxy, Occidental Petroleum, and Energy Transfer. Let's look at ET. I didn't look at that one yet. ET. Okay, ET. All right, so that's consolidating at the highs. That you might pass on this one, right? But I would look at the 20 EMA on the 60-minute. All right, so I'd probably pass on this too for now. So once this starts to trend again, it'll look like this over here. See where it was consolidating before? Flat 20 EMA, both on the daily and the 6-minute. I wouldn't take this trade. It's not until it starts to slope upward, price takes to the upside, takes out 1633. Then I can start trading this again on a swing time frame. This is probably one of the best things I can think of as a new trader, or even as a skilled trader, to start utilizing. You don't have to do it the same way I do, but I do suggest that this is a good idea, a good strategy. Watch what happens when price moves above the 20 EMA. Once the 20 EMA starts to slope upward, that's when you get long. Look for consolidation periods where we don't make much progress. This doesn't mean sell it. It just means sit tight. Keeps rising. Consolidation, holds the 20 EMA. Keeps rising, holds the 20 EMA. this is probably going to break out because the whole sector, this is Energy Transfer, the whole sector is bullish. Here's the XLE. All right. So XES, Oil and Equipment Services, moving higher. Okay. RIG, we just talked about RIG. Transocean posted in the trading room early this morning before the open. Transocean acquiring Valaris, making Transocean the largest offshore drilling contractor at this time. So RIG continues. Do you want to buy it up here? It's a $5 stock. Maybe. I bought the $4 call because I'm expecting this could pull back, but I bought out in September knowing that theta won't be affected as much. As if it pulls back a little bit, if RIG pulls back a little bit towards the 20 MA, no sweat. It'll probably be fine. Theta won't kill me as much as it would if I had 2 weeks until expiration or this Friday till expiration. Okay, so I have the $4 call. So I'm deep in the money. So I want this to trade like shares, right? So the deeper you are in the money, the more it trades like shares. So I started with 500 shares. I'll go higher. I'll add to it if I need to. But right now, this is just 5 calls, rather. 5 calls. All right, so that's equivalent 500 shares. And if it continues, I'll double up my position and we'll go from there. But using the 60-minute is a very effective tool. Check something that you've traded recently. What was it doing? Look at Microsoft. Microsoft, when it gapped down, did it immediately get back above the 20 MA like over here? No, it didn't. It gapped down. It got rejected, kept moving. So that told you there was still a lot of distribution. Okay, now we got a move back above the 20 MA. So this is more than likely at the first stage of a reversal. So if we get a move higher here, this would be a great entry. Okay, maybe you want it to come back a little bit. You could also trade MSFU. All right, MSFU is another potential trade. Okay, $30 to control for every 100 shares of Microsoft. Control it at $30. See if this can make it back to 40. Okay. Make 30%. Can we make 30% on this? $10%, 20%. All right, so S&P just sitting here. All right, so we got a B pivot, obvious B pivot now. Here's VWAP. Go back and look at any stock that you've traded recently. Did you lose on the trade? Were you bullish? Were you bearish? What were you? And then look at the 60-minute 20 EMA. See what it tells you. Because you get so focused on the short time frames that you miss, or rather the daily time frame that you miss a position. Here's Chevron again. All right, a lot of times I would look at this and say, oh, I don't want to chase this. I'm going to wait for the next dip. Well, luckily we got in back on January the 3rd, and now we can just keep riding the trend. All right, ride the trend. Cut these losses quickly. We've been in this since January 3rd. We just keep rolling up from 160, 165 call spreads. We now have 180, 185 call spreads. S&P is pulling back a little bit now. Oh boy, hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, February the 9th. We've had a really great 2 days. S&P, nice reversal on Friday. I thought for sure we're going to get rejected at the 50-day and we would see more downside. Didn't happen. We had the most, I think it was 3.3% was the drawdown. 3.3% is what we had. I erased that. Did I erase it? Okay, no, I didn't. I took the shading off, but this is what I was looking at. 3.3% from the all-time high down to the 67.80. Bounce back above the 50-day. Now, what do you see? I see a range. I think people are going to get frustrated. A lot of people are going to be looking for a break above 7,000. That'd be great if we see it, but I don't see that happening. I think we're going to bang around in this for a while. This is going to be a big range. Okay. I think we're just going to pop around in here between these two levels. Okay, if that happens, the breakout, that's great. All right, RSI is still rising. It never got oversold, so that's good. RSI is rising. Okay, we had 5 distribution days. We have an accumulation day, looks like. All right, we had 5 distribution days. Now we have an accumulation day. Stochastics has turned up. Stochastics turning up. So that's telling you to look for closes in the upper half of the daily range by design. Okay. MACD is turning as a function of price. You can see the histogram is turning up. S&P does look like it could continue, but I wouldn't be surprised to see it get rejected at the 7,000 level again. Earnings have been good. So let's take a look at that. Okay, let's go take a look. Please score earnings for this period. Jan through February. Please score S&P 500. S&P 500. Okay. Let's see what ChatGPT has to say. I mean, you'd have to do this the hard way. This is not ChatGPT. This is Gemini. You'd have to do this the hard way. You'd have to go looking at a bunch of different documents. Now you can double check yourself, but all I'm interested in is, what are the approximately 59% of companies have reported. All right. So I have taken it a little bit easier this earnings for iron condors. For earnings, I usually take quite a few. January we did quite a few. November we did even more. But last couple of weeks ago we took Microsoft, and that one stung. That was a loss. Okay, and I even took puts on this. Microsoft here. So that was a $2,400 loss total, including some puts that I had to reduce my losses. But that was a loser. Generally, I take a lot of iron condors during earnings, but this time I was a little bit slower. So what I'm doing, rather than taking a neutral position on earnings, companies like Microsoft, companies like Boeing, for example, I took a Boeing put credit because I could clearly see that Boeing looks like it's going to continue this trend higher. All right, now it could come back a little bit, but as long as it stays up here inside the Bollinger Bands, above the 20-day is good. $880 credit. I sold 10 of these. I sold the 20 delta and bought the 15 delta for a credit, 225, 220. The 20 delta is telling me I have a 20% probability of being tested, 80% that I won't, and I like the 80%. So rather than taking iron condors, I've decided for this earnings, because software was so oversold, tech had gotten hit, the FANG stocks got hit. Okay, I'm going to take less risk. I don't want anybody in the trading room following what I'm doing to take the same amount of risk. I'm okay with the risk, but it still stings. It takes away from your profits, obviously. So I've had this happen before. You have maybe 1 or 2 of these out of every 10 that you take. I just felt like the probabilities were much higher for this earnings season, given the sell-off that we saw over the last 8 days. Now this might stabilize. but I'm just doing credit spreads at the moment. So that's my reasoning behind it. I think it's a pretty sound reason to do it and trade accordingly. All right, here's junk bonds. Okay, this is another thing we like to look at, junk bonds. What are junk bonds doing? I learned this from a friend that's in the is a bond trader. Now, remember, bonds are twice the size of the S&P 500, twice the size of the equity market, I should say. The bond market, you got sovereign debt, you've got other countries, you've got the U.S. treasuries. The bond market dwarfs the equity market. So you want to pay attention to the bond market. And in this case, specifically, we're looking at the risky side of the bond market, junk bonds, okay? This was made famous by Michael Milliken and Ivan Boesky back in the day. In the 80s, they got convicted for insider trading. Michael Milliken was considered the junk bond king. These bonds represent companies that have a hard time finding or funding their operations on day to day, so they have to take more risk. They take higher interest rate loans to finance operations. As such, when this is moving higher, these traders are telling you through price action that they're not afraid of the markets melting down like they did over here in October and November, right? Middle of September, this melted down and dropped precipitously, and the markets pulled back at the same time. If you look at the same time frame, S&P 500 pulled back quite a bit. October, November, again in October into November, these were big pullbacks. Doesn't happen immediately, but you want to pay attention to junk bonds. Okay, pay attention to what junk bonds are doing. Up is bullish, down is bearish. The degree to which this moves can tell you a lot about what your expectations should be. Now, the other thing I usually check right after I check junk bonds is what is the New York Stock Exchange doing? Now, we know the New York Stock Exchange is breaking out. Okay, it's currently trading near the highs of the day. So it's not seeing a lot of profit taking at the highs. That's good. That's good. We broke above 50,000 on the Dow Industrials. Now, this is only 30 stocks, obviously, but we broke above 50,000 for the first time, new all-time highs on the Dow Jones. 30 stocks, four to five of them are tech stocks. The rest are non-tech related. We made a new all-time high. All right, so junk bonds, New York Stock Exchange, industrials, all telling you the same thing. Now, let's go see what sectors look like. Sectors. Okay, let's see if we can. The first thing I want to do is check the small caps. Small cap sectors were very strong. Okay, so here is consumer staples. That's defensive. Here is consumer discretionary. That's things that you don't need that you could do without. If this is moving higher, that's bullish for the markets. Energy, higher, above the 10 EMA. This is the weekly time frame. You want to catch the weekly when prices move above the 10 EMA weekly and the 10 EMA turn up and to the right. This can keep you into a trade a lot longer. Okay, here's financials at the highs. All of these weekly time frames. Now, healthcare and utilities are lagging a bit. Healthcare is below the 10 EMA, so I wouldn't trade small cap healthcare. Small cap industrials at the highs. Small cap materials at the highs. Small cap technology at the highs. Small cap and utilities, like I said, are lagging a bit, but note the 10 EMA is still up and to the right. So we got 8 of 9 sectors that are looking pretty bullish. Of those 9 sectors, 2 of them are lagging a bit, healthcare and utilities. Staples seeing a little bit of profit taking. So that's pretty good. That's telling you we could see more upside, and most likely will. Let's look at the S&P 500 big cap sectors, and I need to get all of the equal weight sectors. Let's see. No, I don't want that. Core tools. Let's look here. Dynamic. Market summary. Okay. Industries. At the end of the week, it gives you a rundown of all of the sectors. Why does that disappear? Where is it? Equal weight sectors. Market analysis. Sector drill down. Okay, sectors. Okay, this is okay, but I want to see the equal weighted. So we can clearly see that technology is doing good today. Technology. Okay, bouncing. All right, so we got the 60-minute again. We're above the 20 EMA 60-minute for the last 2 days. So this looks good. Junk bonds, New York Stock Exchange, Dow Jones, all of these are bullish. Sectors, small cap sectors look good. Industrials look good. Industrials making new highs. This really bugs me. Where is the equal weight sectors? Equal weight. Nah, that's not going to do me anything. Market analysis, scooter. Breath. New highs. New lows. U.S. sectors. Equal weight. Here we go. Cool. At the end of the week, these were all green. Right now we got utilities, financials. Those are down a little bit. Okay, so that looks good. Okay, so equal weight consumer communication services, equal weight communication services, trying to get back above the 50-day. What's real estate doing? Real estate. All right, real estate looking pretty interesting. Okay, equal weight real estate. Okay. Industrials. S&P equal weight. Okay, so taking the weight off of the Apple and Netflix weakness, we take the weight off of that. You got the S&P 500 equal weight higher. On the weekend, I was checking this out too. This was like really, really nice signal. Here's the S&P. I have a different equal weight chart that I like to look at. Okay, you can see we're breaking out the new highs. This is the S&P equal weight. These stocks on the left make up more than 33%, 37% at the latest tally, 37% of the S&P 500. So when these move in either direction, that has a direct impact. When they're all moving higher, the equal weight, that's helping the equal weight. All right, the number of stocks above the 20-day are also rising. All of these things point to potential follow-through. Let's go see what breadth looks like. Actually, before we do that, let's go look at XII, the ARCA Institutional Index. This is what institutions have in their core portfolios. Okay, green elder stick today. Okay, CCI is rising. Okay, the XII has 75 stocks that are most commonly held in institutions' core portfolios. I'm sure you're familiar with most of these, if not all of them. All right, so this is a bit in a big sideways range. Okay, big sideways range just needs to break out. It's just something else I would look at. Okay, let's go look at breadth. Breadth, we want to see all of these moving higher. Currently, we're seeing a hook. Bullish, but a hook, higher highs, higher lows. A little hook right now is telling you that we have no follow through. We're consolidating at the moment. big caps, mid caps, small caps, and NASDAQ looks a little better at the moment. NASDAQ. There goes Microsoft. Microsoft is catching a bid. Microsoft catching a bid here, folks. There goes Microsoft. Microsoft is going. Looks good. Okay, Apple has started to turn too. If you like Apple on the dip, I like buying the dips. Apple on the dip looks good here. Rally cap is on. Apple dips are getting bought. Into Thursday, for the previous, before Thursday last week, the previous 2 weeks to that, I was taking some profits off the table, and I was funneling some profits into SCHD, the ETF. Okay, that's consolidating right now. I'm expecting that this is probably going to hold on to the strength. Number one position here is Lockheed Martin. Okay, so you have two things going on here. You've got the ETF, which pays a very high dividend 4 times a year, quarterly. I also have SPHD. I want you to look at January too. Look at January right here. Okay, here's January, where prices broke out and started trending. January, the first week of January. That's why I rolled from SPHD some of my funds to SCHD. But as luck would have it, everything took off. The ETF, noted for its positioning in defensive names, also took off to the upside. So that looked really good. Defensive as in consumer staples, energy, healthcare, utilities. So those look good. That's bullish. I mean, we're just hanging out here at the highs. We got breadth. Let's look at the let's look at the New York Stock Exchange again. Okay, the McClellan volume oscillator is telling you pretty much what we're seeing is that price action should be kind of choppy. We're trying to make it through the current range. 7,000 is the top of the range. I showed you the S&P chart where I was anticipating that we're probably going to hit that 7,000 level and maybe continue to trend. If we break out, that's great. It'll be because of earnings most likely or some other news. Microsoft's still going. All right, New York Stock Exchange, we want to look at the number of stocks making new highs, and we want to subtract the number of stocks making new lows. And right now, you can see we're still above the zero line. That black line is rising. New York Stock Exchange advanced decline is making new all-time highs. You know that New York Stock Exchange is breaking out to new all-time highs anyway, but it's doing on advancing stocks. Advancing stocks are outweighing declining stocks. So this is all bullish. I don't see anything to be upset or to be nervous about. I kind of belabored this a few minutes, but if you just go through this process, 5 or 10 minutes a day, you can get a good sense of where the market's going to be. So you don't wake up in the morning, the markets are down 40 handles and you're like freaking out. Now, I won't say that Thursday wasn't distressing, because I know that there were people out there that weren't listening to what I was saying. Maybe they were in positions where they weren't quite in profit. I was taking options off that expired last Friday and this Friday. I'm rolling options out, 3-4 months. I want options to be out in March, April at the earliest right now, unless it's a short term. Now I took some rig 4 calls, looking for rig to continue higher. I bought those earlier. Okay, rig 4 calls. I bought those this morning when rig was trading in this area. Okay, Transocean will acquire Valaris. Okay, they are also an offshore drilling platform contractor. A rig acquiring Valaris would make it the largest out there. I think BP Amoco is another one, right? BP Amoco used to be British Petroleum. I think Amoco bought British Petroleum. I don't know if they inherited they have to inherit the warrant to take care of any future problems with that wellhead that died. What was it, the Horizon? What was the name of that? Mark Wahlberg was in that movie. Deep Horizon or whatever it was. Yeah, I think they're still responsible if there's any problems with that wellhead. That's a great movie. I like Mark Wahlberg. He's a man's man. I liked him in Patriots Day. The Patriots Day, where he does the Boston bombing. That was a great movie. Anyway, we got the Apple turning bid. We got shorts covering now. Apple. Somebody probably took some profits on Apple. That's turned back up now. That's good to know. That's good to know, Mondo. Thanks. Deepwater Horizon disaster, BP operated drilling rig. Da, 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 da. Deepwater Horizon. All right, so S&P looks like it wants to go some more here. Okay, S&P, we're going to go. LETSGO. Maybe some lottos. Is this going to grind? We're right back up to the highs. All right, so we got an ABCD pattern. It looks like an ABCD pattern for now. Okay. All right, VWAP. There's a C pivot right there. ABCD pattern. Reason why ABCD patterns work is because you have the West Coast traders, among other things. You have West Coast traders that get up early in the morning. Some of them get up at 5, 6 o'clock in the morning. They're ready for the 6:30 open of the New York Stock Exchange. 9:30 our time, 6:30 their time. They can trade the first maybe couple hours, depending on how far their work is. Maybe they work from home or nearby. They can stop working at 8:30, get in their car, go to work. Okay, so they can work for a couple of hours. And a lot of times we'll see that's the strongest part of the market day, that first few hours of the trading day. And then we cruise into lunch after about 11 o'clock, 12 o'clock, we cruise into lunch. And the East Coast traders like myself take lunch or whatever. They take positions off like Frano did before. She took some calls off when she left. And, we fade a little bit. And then at some point, if we still have a bullish thesis, which I just got finished outlining, we might get a B pivot. Once we see that B pivot, we start to look for C. And we keep an eye on MACD. You can see MACD down below. Needs to cross up, as I'm saying, for the bulls. Okay, so it is currently, MACD is currently rising. Volume, we need to see volume pick up. And maybe a test of D, which is way up here, potentially. If you just go through this process, once you get used to it, it only takes about 5 minutes. What are junk bonds doing? What's the New York Stock Exchange doing? What's breadth? If the New York Stock Exchange is breaking out, you got a pretty good shot that the markets are going to continue that direction. If it's melting down and losing the 9 and 21 day, then you know to be a little bit more cautious. What's your 60-minute 20 MA? Whatever you're trading, what's the 60-minute 20 MA saying? Okay. So here's Apple, for example. Apple, here's a 60-minute 20 MA. Okay, it's still below the 20 MA. I personally like to see it get back above the 20 MA. Stocks like Microsoft. Microsoft moved above the 20 EMA on the 60-minute time frame. Okay, so once you see these things set up, you can take a good trade. Now, here you go. Microsoft, first day back above the 20 MA. Following through. Actually, I think we might have closed above the 20 MA. 1, 2, 3, 4, 5, right? Yeah, we have, well, whatever. The point is that we're above the 20 MA. Your stop can be 405, 404, right here. Okay, so that's where I would put my stop. Okay, so I wouldn't buy Microsoft at the moment because it's at the high of the day. But let's say we start off the day, 20 MA is up here, and we start off the day right around here. Okay. That'll be my stop, rather. Okay. Let's say we start off the day and we're here tomorrow. Okay. Let's say we start off when we look like this. Okay, I put my stop underneath. I'll start with the underneath the last couple of hours of the day, but then I'll shift it up at some point. I'll shift it up underneath tomorrow's opening candle, most likely. I'll watch for this 20 MA to start running up. Once this 20 MA starts to roll upward, I now have a trailing stop that will continue to do this, hopefully. All right. If we continue to do that, that 20 MA, which is colored green. Okay, at 20 EMA. So Microsoft looks good, in other words. Okay, so tomorrow, if this starts off like this, the 20 EMA starts to turn upward more steeply. I can just keep moving my stop along that 20 EMA, and hopefully prices will just keep going. Okay, and we can get up here pretty quickly. So that's what I'm thinking. This is day 8. Microsoft looks like it's going to continue higher, and we got the S&P turning higher as well. All right, so there you go. 5 minutes, junk bonds. What's junk doing? Junk is higher. What's the New York Stock Exchange doing? It's breaking out at highs. What's the Dow Jones Dow Jones doing? Dow Jones is breaking out. What's the, I said the New York Stock Exchange. What is the S&P 500 doing? S&P, okay, moving higher. It's above the 50-day moving average, above the 9 and 21-day. Volume is looking good. Today's volume will show up after today's close. All right, so the markets continue. S&P is going. Looks good here. ABCD pattern. Oh, here we go. Here we go. Nice little pop here. Options are, the calls are being bid. Calls are bid. Nice follow through here. S&P. Let's see, where are we here? S&P. 69.78. IRDX, 69.78, looking good. All right, so ABCD pattern, looking good. S&P 500. Okay, we don't have to worry about this anymore. 50 days right there. S&P 500 looks good. All right, let's look at hedge flows and see what that's doing. I was telling you before that if we got above these levels here, there wasn't a whole lot that's going to hold us back. Okay, so we're moving above those levels. Hedge flows continue to rise. Okay, that looks good. Can we keep going here? All right.
CCHH.
Positive gamma up to about 69.90. Positive gamma to 69.85. Positive gamma. ABCD pattern. All right, we continue to grind higher. Looks like we're going to go some more. Hedge flows continue to rise. Bum, bum, bum. CRML's got a bid, CRML. Okay, we continue to rise here, or what are we going to do? What are we going to do? What are they going to do when they come for you, bad boys? I hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is February the 9th, Monday. We've got an hour and 30 minutes to go. Beautiful, beautiful. It does feel a little stretched up here, I will say. I'm looking at the 69.85s, 69.90s. They're still bid. I'm just watching the options. Oh boy, what a day, huh? Could have been a lot worse. Thursday, man, we got such a gift on Friday. I can't tell you. A lot of people were DMing me. I can always tell when people are I can always tell when people are not happy about the markets. You know, I get DMs for various different reasons. You know, when the markets tend to get crazy, I tend to like step back and try to relax more and not get so stressed out. Once we start to see changes in the bias, we can see, in this case, we're watching hedge flows. There was really nothing slowing us down overhead. A little bit of positive gamma through the day here as we cruise up against the highs. It looks like we're going to fade a little bit. So there really wasn't much here. You can see in the morning we started fading. If we go back to the morning, 9:30, just scroll back to 9:30. Okay, 9:30. You can see we're opening and the hedge flows, that purple line starts to rise, telling you to look for a follow through, then quickly turns back down. We say, nope, let's just take it easy. Then we get a higher low. Now we start to look a bit better, higher high. We can see that if you look at the left panel there, the histogram, you can see how that's changing. You see how this level right here started to build at 69.70? Somebody was selling there. The purple indicates the dealer is long. The markets are short. So they're thinking that's going to be the high of the day. We start to cruise up to it, and what happens? We hit that level, and we start to see that level shift upward. You see how it shifted upward right there? I told you have more upside potential. We just keep going, and then we dip a little bit. Hedge flows turn back down. These positions over here sell off. They close those positions. And then we start to get hedge flows that turn back up again. And now we're starting to make higher highs and higher lows. So right now we're looking for another higher high, or do we stall right here? Watch that hedge flow line. That'll tell you if the buy sell algo is going to stop right here or if it's going to keep going. Okay, watch that hedge flow. Now what I'd like to do is go over to Hero, just check that out, zoom into it. Okay, so we know that we want, if you're bullish, you want positive gamma. What's positive gamma? If you sell a put below, everybody knows that if you sell puts, that creates a floor underneath the markets. Now, if they sell enough puts, that definitely creates a floor. You know, if institutions, if portfolio managers start selling puts below, they're pretty confident that the market's going to move higher. It doesn't mean they know they have 100% guarantee, but they start selling. Other people see it, they start to sell. Now, right now, you can see that the calls are being sold. The orange is starting to drop at the highs, and the blue line's starting to dip as well. Now, this is real time. This is the hedging impact of options. This is the hedging impact you're looking at, what the dealer's having to do. Okay, dealers selling calls and buying puts. Okay, positive gamma is created when you sell puts below and you buy calls. Negative gamma is created when calls are sold and puts are bought. Calls sold, puts bought. Just remember those lines have to go up. Both of these lines have to go up to be bullish. They go down when you're bearish. Now this is real time. This could, this could be too close to the action for you. You maybe only want to swing. So I would suggest looking at the 60-minute time frame, like I like to do, and use that instead. Okay, so let's look at the S&P on the 60-minute. If you want to swing trade it, it's a bit extended. Would you agree? The 20 EMA is the green line. So we're pretty extended away from that 20 EMA. We're in a big range, which you should see as potential resistance overhead, 7,000. Okay, so if we get up here, more than likely, I would not be buying calls up here right now. I'm thinking that this is we're going to run into some resistance in this zone, and that we could come back to the center point, or we could even come back all the way to the low. Hopefully we don't do that, because that would mean we'd be losing the 50-day. So I'm thinking we're going to stay up here close to the 20 EMA. If it comes up, the 20 EMA races up here to 69.50 tomorrow, and we bounce off of it and start to move higher, it's a possibility we could follow through and break out. Now, if we break out above 7,000, I don't need to tell you how bullish that would be. What would be the catalyst for that? Well, we got CPI and PPI this week, right? Maybe that does it. I don't know. So we're watching the 60-minute S&P. Now let's just out of curiosity, let's look at the 60-minute New York Stock Exchange. 2,400 components. 70% are U.S.-based companies' stocks. About 25% are ADRs, American Depository Receipt, international companies. And about 5% are REITs. At least that's what it was a couple of weeks ago, a month ago. So here we are, New York Stock Exchange. Is that bullish? It's rising, it's bullish. Look at the 20 MA. That's nearly a straight line there. That's crazy. Let's look at the industrials. Dow Industrials, INDU. Okay. If you're a swing trader, I know it's extended. You're probably thinking, should I take profits up here? Yeah, maybe you take profits on half. But this looks really strong. 30 stocks on the industrials. Let's go take a look at some of the names on the list. See how they're doing on the Dow Jones. Only 30 stocks. Who's the number one? Most up. Microsoft. Woo, Microsoft's cooking now. NVIDIA. Cisco. Okay, tech is definitely in play. Cisco, I think I saw Brother Bill talking about Cisco. The banks, the industrials. Okay, CRM, services, Verizon, telecom, oil and gas, energy, AXP, credit cards, financials, and Boeing, which we sold a credit spread on. We sold a put credit on this one, looking for this to continue higher. Okay, so Boeing looks pretty good. All right, S&P is turning back up again. Are we going to make another shot to the highs? We're pretty extended up here, but it looks like a day to torch the bears. S&P. ABCD pattern on S&P. Wow, wouldn't it be something if they blew right through 7,000 today? I don't see the reasoning behind it, but it'd be interesting. Where is my... financials? Okay, let's see what we're going to do here. I'll turn the tick lady on. I know Mondo likes the tick lady. Oh boy, what a day. S&P. Yeah, the momentum has slowed, so I'm not sure. Yeah, you wouldn't want to buy calls up here. Looks like we're going to keep going, though. If you're holding on to some calls, maybe you want to hold on to a few.
Sources familiar with House Democrats' plans. Betsy Meyer, now speaking, says full expensing tax law changes will benefit the economy.
Okay, Chevron's near the high of the day. Looking good, looking good. Sing it, Janice. Nokia.
Everybody, this is Dodo J Trump. You're behind the markets. If you're a real day trader, go real time.
Okay, we're fading off the high. Okay, right now I wouldn't do anything with the S&P. Let's look at some other things, though. What's the hedge flows doing? Hedge flows, they're starting to turn. S&P. Okay. All right, so these are some of the catalysts that we could be looking for. Market factors, momentum, revenue, growth is all bullish on the large caps, but it's on low volume. That's one thing to concern ourselves with. Okay, breadth, New York Stock Exchange, advancing 58%, declining 39%, bullish percent, NYSE, new highs, new lows, sentiment, U.S. sectors, technology is definitely leading today's. Stocks, bonds, crude oil, GDP, 5.38, gross domestic product, inflation, PPI continues to hover right around this area. I went into the store the other day, $13.99 for a dozen
So just a reminder for your schedule for tomorrow.
grass-fed organic eggs,
At 4 p.m. Eastern.
free range. I was like, what?
CCHH.
Had some other ones for $9.99. So eggs definitely popped. I guess that has to do with the cold snap that we had, right? Maybe. Hopefully that can rectify itself. Leading index. Okay. Unemployment is hovering right around 4.4%. That's not bad. Housing starts slowing a bit. Rate of change is kind of flatline. Manufacturing, that's rising.
CCHH.
That's good. We want to see manufacturing improving. Services, flat. Industrial production, that looks okay. Okay, so that's good. Comp, industrials, equities. Anything stand out here? Dow transports are down a little bit. NASDAQ 100, change 253 points, 1%.
Myron says monetary policy should be achieved.
NASDAQ 100. Okay, NASDAQ 100. We had more than 50 stocks. Currently, we have 53 stocks advancing on the NASDAQ 100. The Qs, derivative, 53 stocks advancing on the S&P 500. We've improved. We went from 100 stocks, about 100 stocks advancing at the open this morning, currently at 270, more than 50% of, I think it was 58% of the S&P is rising and bullish. New York Stock Exchange looks good. So all in all, not a bad day. Not a bad day. We are fading from the high of the day, not surprisingly. S&P fading a bit from the highs. Can we get one more leg higher? Be ready. Be ready with something like 69.80 is just outside, out of the money, 69.80, 85, 90, something like that. I like to have calls and puts ready, on the ready. Okay, I can get rid of this. I think you know where the 50-day is. 21-day, 50-day. Okay, S&P fading a bit. The 60-minute looks pretty strong. 60-minute. Bitcoin, big Big tell on Bitcoin. That is giving us a risk on signal. Bitcoin giving us risk on. So buying some Riot or some IBIT or some of the other BBAI, not BBAI, some of the other Bitcoin related names, not a bad idea. Mara, etc. See what they had to say here on Bloomberg. Okay. So Bitcoin doing well.
So there are ways to help as far as subsidized housing, like Section 8 or something like that. But ultimately, what it comes down to is cost of living is rising so much, and it's more so than the cost of actual housing. That workforce housing or free market housing stays pretty stable. It grows slowly, but it stays a little bit independent from macroeconomics because you get a lot of friction in mobility. People aren't moving a lot out of their units, but then again, you know, we talk about this lack of affordable housing, right? We have to dig into
Riot, looking for that to be up at 18, 19. 17 would be near fair values. 18, 19 would be a little stretch, but that's the previous high.
Where the jobs are, whether it's a major city, rather than having someone who's got to, you know, take a train or a bus or however.
Robinhood, don't forget Robinhood. That has earnings tomorrow, right? Robinhood. Boeing, we sold some put credits on that one. Robinhood. They have earnings tomorrow, Robinhood. Okay, last earnings. Robinhood's last earnings.
That's true in some of the places in New York. New York is very specific. Okay. But not in other cities. In other cities, you're not seeing that as much, but you don't have
Robinhood.
like that. Even in places where you do have rent control, we are seeing
Okay, Robinhood. Earnings growth has been pretty interesting. 258%. Revenue growth 100%. They beat earnings last time around. They expected 51% at 51 cents. Consensus, they came in at 61 cents, beat by 10 cents, beat by 600 million. So Robinhood looks pretty good. Robinhood, I might add that to the watch list actually. Robinhood, big reversal. If you took it on Friday, that's a nice one there.
So Southern Ohio, Central Ohio, Northern Ohio. I mean, these are all very different parts.
Sure. Right now, we're heavy in Columbus. We're looking in Cleveland. We're looking in Cincinnati.
Okay, so that's everywhere.
It's a little bit. We're all
ARM Holdings, that was one from ARM Holdings. That was one we looked at on Friday too, right? Thursday, Friday. A couple of people mentioned ARM Holdings. I liked what I saw too. ARM Holdings, weekly range, ARM Holdings. Okay, that's the weekly. All right, so the weekly, looking for ARM Holdings after earnings. Earnings were good. They guided higher. All right, so we should get back at least to 140, I would think. ARM Holdings, I currently have the 140, 145 in that expectation. Expecting ARM Holdings to get back to 140, 145. Okay, we're into the Kirby, that yellow area there between those. That histogram on the left side shows the maximum amount of volume traded in the past. Remember, this is a past, what happened in the past indicator, but there tends to be a memory, and it tends to have people that hold on to shares and want to break even at some point that maybe have bought right here. People that bought here probably going to want to break even. People right here, these two pivot highs, those people will also want to break even. If we push through that, what that tells you is that there's no longer any sellers, only buyers, or mostly buyers, as we push higher. Look at the volume. ARM Holdings. ARM Holdings. Continuation looks good. Kirby.
Thank you. Good to see you. Amy Rubenstein, she's CEO of Clear Investment Group. When we come back, we'll check on the trading day and also some specific stocks on the move.
Bank of England's man says there's not much trade diversion from China to the UK. This is Bank of England's man speaking at the conference in San Diego. This is the video that's already on the feed for you to have a watch of.
ARM Holdings looking really good for the follow through. Okay. Hopefully you took some of these ARM. Okay, so back to Robinhood. Robinhood.
CCHH. Where collarbones crack, where hips break, where ACLs tear. Journavx meets pain where it starts. Journavx is a non-opioid tablet for adults with moderate to severe acute pain.
All right, so that looks good. Robinhood, Bitcoin still pushing. S&P pulling back a little bit, not surprisingly. S&P made a nice move off the low. We're still up over 44 handles.
Do not take Journavx with CYP-A inhibitors. Avoid use with grapefruit or liver problems, as these may increase side effects. Tell your doctor about all your medicines if you're pregnant or breastfeeding. Journavx may make certain medicines and birth control less effective. Side effects include itching, muscle spasms, rash, and elevated muscle enzymes. Journavx meets pain where it starts. CCHH. Ask your doctor about Journavx.
From the world of politics to the world of business.
S&P crossing back up. S&P. Can we get a little pop higher here? Okay, where can we get? I see what you see what you're thinking there. Dollar looks good. Okay, dollar. VWAP. C pivot. C pivot. Can we get D out of this? Can we get a rip to the upside? Okay, watch ARM Holdings too. ARM looking good.
Bloomberg Interactive Brokers studio here on Bloomberg. See, I'm looking at a market where U.S. equity is pretty much hovering near their best levels of the session. S&P 500 up 2/3 of 1 percentage point, a gain of about 44 points. Dow up about 1/10 of 1%. It was a big week last week for the Dow, as we know, taking out a key level. And the Nasdaq 100, those tech names overall really outperformance, up almost 1 full percentage point, up 241 points. Tim.
I'm Tim Steinbeck, along with Carol Master. Let's take a look at some stocks on the move today. With us is Bloomberg News equities reporter and deputy team leader for U.S. equities, Carmen Reineke. Carmen, lots to choose from on the upside and the downside as we get close to the end of the trading day. What's on your radar?
Yeah, so the first one I'm looking at is Oracle. Now you're saying tech shares looking really good today. This is one that we're definitely seeing.
S&P still fading. S&P. Okay, be careful. We've had a nice run up today, so wouldn't be surprised to see some profit taking in the next hour. We want to see institutions give us a signal. Right now, it looks like they're sellers. What's going on here?
Noted that the firm is feeling more optimistic about the company's relationship with OpenAI, so that's something that's
Okay, bulls need to see a MACD cross.
if those deals were going to be beneficial
what's really wild too is you had Bernstein cut their price target on the stock. It's like I thought there were a bunch of fair amount of maybe a few other analysts, but you're right. It's like the street's focusing on what we got from D.A. Davidson and what they had to say. So I just find that I don't know.
Well,
Boeing. Okay, that did dip a little bit, but now it's headed back up to the highs. Boeing. We sold put credit spreads. I posted that in the spreads channel if you're interested. You should be able to get at least as much as I got, probably get more than I got because we had a little dip here. So Boeing, I took this trade here. Okay, so I sold a 225, 220 put. I think you probably could get 1,000 for 10 or $100 per contract per put credit. Okay. Rig, we took a position on rig, started position on rig. Got 5 of the September 4 calls. Okay, rig looking good. 60-minute, 20 MA.
And they also missed earnings today.
Exactly right. Well, that was the first thing I said. You know, that they missed earnings, but there was a lot of other things going on that we left
Exactly.
there.
That's how people are focused on.
Well, I'm like, it's down so much year to date. That's because of the slide today. Yeah.
But this was spun off from IBM back in 2021.
Okay, what else? Micron. Okay, just sitting here, Micron. Okay, Wells Fargo is up 1%. Wells Fargo.
Save 67% on a subscription.
All right, so S&P is watching. All right, it's been a good day. I don't know why I'm exhausted. I ran this morning trying to get my energy levels up. IBIT looks good. IBIT. Let's take a look at IBIT. IBIT. Okay, so this is just starting to transition above the 20 MA. IBIT. All right, so this starts to get going. What's her name? Bren Talkington. She mentioned that she added to their position here, wherever it is that she is, that firm. Oracle made a nice reversal here. It's like the first time we've seen this kind of move to this degree on this kind of volume. Now, we've had a couple of occasions where prices moved above the 20 MA on the 60-minute back here in the first couple of weeks of January, right there. Okay, we did make a move above, but quickly failed. This time, the volume looks a little bit more pronounced or obvious. Now, tomorrow will be key. We need to see this follow through. If this does follow through, I'll probably add to my ORCX. Okay, let's see what else is working at the moment into the close. Microsoft, NVIDIA, Cisco, Goldman Sachs having a good day. The bank's looking pretty good. Bank's working. I have JP Morgan. Do I? I think I only have Wells Fargo, actually. No, I have JP Morgan. Okay, cool. I must have added JP Morgan. Wells Fargo. I sold Wells Fargo. Huh. Okay. Wells Fargo. JP Morgan. Wells Fargo. Looking for these to follow through. Goldman Sachs. Wells Fargo dipped. Goldman Sachs. PNC. Bank of America. Citigroup. Morgan Stanley. Okay, these all look good. The banks look good. Banks are good. Materials. Let's look at Newmont Mining. What's gold doing? Gold, silver. Okay, gold, silver's trying to move back up. I don't know. They're going to suck some people in here. I don't trust it this time. Need to see the volume pick up, not trail off like this. Few people are trying for it. Gold, silver. Let's see what silver's doing. Volume is lower on silver. It's sitting right above the 50-day. And not crazy about it. Copper. This is Friday's close. Let me see. Southern Copper making a move back up to the high. So this is good for the economy. Speaking of the economy, let's go see what the AAII bull bear ratio looks like. Okay, so if you follow the American Association of Individual Investors, or whatever the name is, I think that's what it's called, AAII bull bear. We recently had a turn in 2025. That was the April low. This is still rising. It hasn't hit a peak. It hasn't hit the red zone. So this is more bullish than bearish. As you can see on the pivot lows, these are when bears capitulate. We're watching for this to turn back up. Together with everything else we've been looking at, the New York Stock Exchange, the S&P 500, breadth, junk bonds, etc. This is looking good. Now, this is a monthly time frame, so let's look at industrial production. We want to see this making higher highs, higher high, higher low. It's above the moving average. Okay, so this looks good too. And you can see that this is turning. All right, I don't see anything to be concerned about at the moment. All right, there goes Boeing starting to go in the other direction. Boeing. All right, let's see how those credit spreads are doing. Boeing, I'm up a little bit. Coinbase and other names, those had gotten whacked quite a bit. Coinbase had gotten whacked. Coinbase coming off the low. Okay, CONL. Coinbase. IBIT. Okay, Riot. Nice reversal on Riot. Mara. I like Riot better. Back above the 200-day. Looking forward to get above the 50-day tomorrow. If this gets back to 19, that'd be awesome. If it got back to the highs, that'd be even better. 2350. Riot. It's like a triple bottom along here. Triple bottom on Riot. RIOT. There it is. Riot. Chevron's making new highs here. Chevron making new highs. Oil and gas names. Okay, I've talked about this before. You look at this chart and you probably say, oh, crap, I can't buy this. This is like too extended. Since the January 3rd pop that got everybody's attention when Maduro was extricated by the U.S. military, this started to take off to the upside after an initial dip. But watching the 60-minute gives you a better perspective, right? Even in buying near the highs, I wouldn't want to buy right this minute, but even buying near the highs, you could see where you would have your best advantage if it pulls back and then reverses, starts to move up and volume picks up. Okay, MACD's turning. MACD's trying to turn up. But once it touches the bullish 20 EMA, it's up and to the right. That would be your next entry. It's at 182.64. I have the 181.85 call spread for March, which is doing well. Chevron. Yeah, that's up quite a bit. Chevron. Core Scientific. Okay, Core Scientific is one that Mondo mentioned earlier. That was on a previous watch list. Core Scientific. Big reversal last week. Thursday, Friday into this week. Friday into Monday. Nice Core Scientific. You can see how using the 60-minute is a great tell. Okay, looks good. Core Scientific back above the 50-day, 9, 21, and 200-day. All of those are stacked. The 9 EMA needs to get back above the 21-day, but the 21-day is above the 50. 50 is above the 200-day. Volume looks good. MACD stochastics rising. RSI is pointing north. That's Core Scientific. I'm going to take a 2-minute break. I'll be right back.
Every time I start to worry about it, the market self-corrects. So I think that's a healthy thing, and that's why I don't think we're in the cycle. But what does worry me, Katie, is we have high earnings estimates so far they've come through, high GDP outlook. Wall Street's pretty bullish on the year. That's a dangerous concoction that is ripe for some disappointment at some point. It's not a reason to run out and sell stocks. But usually returns when expectations are this high, that is consistent with late cycle.
Where do you go to hedge, Andrew? Because for the past few years, people have been going into, the growth stocks as value stocks. The hyperscalers had so much cash and they were a reliable source of earnings, but now they're spending that on massive, like $200 billion a piece capex, and they're going out into bond markets to buy tens of billions of dollars.
MACD is starting to turn again.
100%. And this is why, going back to what Katie said, this is why the 493 started to work. There are plenty of other areas where companies reported very good earnings, and I think you take advantage. Financials would be one of them, industrials, and they sold off last week as the market rotated into, kind of staples, energy, the normal defensive. So I think, that creates an opportunity, but you're absolutely right. As free cash flow turns negative for some of these very large companies, markets are not going to like that, even though the multiples will come down. I think that is a wait and see for these big guys.
So what do you make of the SaaS apocalypse then, or the idea that not just in software, that AI can disrupt a lot of business models out there, and a lot of those are companies in the 493.
IBIT at the high of the day, IBIT at the high of the day, Riot at the high of the day.
Doing well, they're performing well, they're beating numbers, and their multiples are reasonable enough that the shorts can go out and kind of sell them off even if they beat. So I think that's I think there's a place in the portfolio. I wouldn't go out and sell them, but maybe I'm not brave enough to step in with a big allocation. I just don't think you need to, when there's plenty of other areas that are doing quite well outside the tech arena.
All right, Andrew, that's a good place to leave it. Always great to get some time with you. That is Andrew Sliman, Senior Portfolio Manager over at Morgan Stanley Investment Management. Now, coming up, Cadillac going full throttle with its foray into Formula One. We'll discuss the aggressive push into the sport and what it means for the brand with Cadillac Formula One CEO Dan Tauris.
Then from engines to energy, a closer look at the commodities world, particularly
As Marlon says, the world is coming around to the idea that tariffs are more benign than thought.
Curry, Chief Strategy Officer of Energy Pathways at Carlyle.
And then we bring it back to Main Street with a check on the consumer. Michelle Meyer, Chief Economist at the MasterCard Economics Institute, joins us to break
In
down
5
what
minutes
she's
time now
seeing
at
when it comes to
3:15
spending.
p.m. Eastern
All
Time,
that and more
as Boss
coming
is
up.
participating in a moderated conversation. There's no text expected, but there will be a Q&A with the moderator.
Voice news disconnected.
There's an overflow lot somewhere in the vicinity. The garage is full.
LIMN.
The garage is full. They go to the overflow. I heard him. I was right here. Just stand quiet.
What's Lumentum doing? Did I put that on the watch list? I don't think I did. Watch list for the week. Okay, here we go. At AAOI, pushing higher. Apple pulling back with buyers at the low of the day, as you can see with the wick. Okay, Bank of America. I'm going to put Boeing on here. Boeing. Save that. Boeing. Caterpillar. Wow. Caterpillar, beautiful trade there. Okay, Campbell's Soup. These are all watch list stocks. Chevron, continue. Dycom breaking out. Diamondback Energy, inside day. FedEx, inside day. JP Morgan followed through, looking for a push to the upside this week. Lockheed Martin back above Friday's high. Nice follow through. Mondelez. Monster Beverages taking a break. Same with Northrop Grumman. Inside day on Pitney Bowes. SCHD taking an inside day, taking a break. Scorpio Tankers, the bulk carriers, maritime shippers. TNK continuation. Taiwan Semiconductor breaking out. These are the watch list stocks, and Upbound Group grinding higher. Wells Fargo, big reversal off of that dip this morning. And Walmart, still looking for a base on Walmart. Okay, so the watch list looks pretty good.
So that was Lawrence Stroll, the billionaire owner of the Aston Martin Aramco F1 team. He sat down with me earlier to talk about his confidence in his team leading the high-stakes motorsports category. But he faces
BAERW.
testing in Bahrain with your
Yeah, so for us, Barcelona was mostly shakedown, so it's testing a lot of new systems. Everybody's talked about the fact that it's a new chassis, so a new set of regulations, new tires, new power units. But for us, for Cadillac, we're building everything for the first time, the fuel system, just all the pieces on the car. And so a lot of it was just reliability focused. As we go into Bahrain this week, we're very excited to now start to push the limits of the car and to see what we have.
You have incredibly experienced drivers, right? And Valtteri Bottas and Sergio Perez. What did they make of the car? And, what kind of feedback did you get from those superstars?
Well, I think some of their feedback is similar to the other drivers. There's a lot less load under the set of regulations on this car, which just means there's less downforce. The car's going to feel a little slippier to drive. And it's going to be a whole new technique as they figure out how to use this power unit with the electrification piece and the combustion piece, combined. So again, it's a very different car to drive this year, and so everybody's in a big learning curve right now.
And I mean, to that point, to that learning curve, you're a newcomer in this space. I know that you said previously that you want to be America's team in F1, and I wonder, what you see that looking like if your vision is actualized.
So it's really leading into a new fan base. If you think about the success that Drive to Survive has had, or F1 the movie, which just crushed every record, it's created a lot of F1 curious fans in the U.S. And that was really the thought behind the Super Bowl commercial. It's a big stage. We wanted to get to people that don't maybe consume F1 every day. If I want to speak to the diehard motorsport fan, it's very easy to. That media ecosystem is very developed. The Super Bowl let us create a conversation about Cadillac Formula One to people who, like I said, saw the movie, thought it was interesting, and said, "Wait, this team's going to be on track in 30 days. I need to check this out."
Well, that gets a little bit to what I was wondering, which is why is Super Bowl commercial?
All right, we're dropping off here.
On average, I believe Super Bowl ads were $8 million. We heard some reports that they got to $10 million for 30 seconds. I mean, why was it important to sort of have your debut at the Super Bowl, so to speak?
Yeah, it's really just that big audience. I think it's also just,
it's this cultural moment in sports. The Super Bowl has become so much of, about the ads as much as the game, depending who you talk to. And again, so this let us have that platform to reach the F1 purists, to reach a new fan base for Cadillac Formula One, to say that we're coming. And it lets us kind of put that American spin, this bold American team. I mean, what's more American than announcing showing your first ever livery than at the Super Bowl?
Talk to us about the business of Formula One, and really the business of racing, because you've been involved in motorsports for a solid decade now, with Game Ridge, Andretti, now TWG. So how do you make money in this sport?
Well, it starts with growing a fan base, which was job number one with the Super Bowl commercial, building up the fan base, and then, taking those metrics and reaching out to sponsors and building up that piece. And so it's you have a marketing machine. I mean, really, when you think about today's modern F1, you've got the team, maybe you have a power unit company. You need to have a media company inside your Formula One team as well, because you're marketing to the world, you're creating content, you're drawing in eyeballs, interest, you're storytelling, you're doing all those things to create commercial value for the team, and that's essential in today's Formula One.
By the way, Checo and Bottas are perfect for that. I mean, absolutely. Valtteri is an amazing storyteller in his own right. What was your strategy when you grouped these brands together? Because I see like an American heritage line here through Jim Beam and Tommy Hilfiger, for example.
Yeah, absolutely. I think as we think about what does it mean to be, American, we want to have these iconic American brands, these American originals, and really create a foundational pillar in our sponsorship ecosystem. And I mean, Tommy is fantastic, Jim Beam, Cadillac. These are iconic American brands. And so Formula One's a global business, so we're going to want to have non-American brands on the car as well. But we definitely want to have those bona fides set up where we're anchored in these iconic American brands.
What do you make of the sort of win on Sunday, sell on Monday mantra from the 50s and 60s? I mean, GM is getting in a big way back into racing, not just in F1. I went to Le Mans with Mark Royce and crew and watched their hypercar there, which was amazing to see. But they also have, vehicles that nobody else can produce right now. They have a supercharged V8 with a stick and a CT5B Blackwing. So I'm really pumped about their offerings.
Yeah, no, the product line is spectacular. It was actually after one of the F1 board meetings, Cadillac, they brought out every car in the lineup, and we just spent the afternoon driving them. And so the product lineup is so strong. And so there's this upward mobility from a market share standpoint in Cadillac. It's the perfect time to bring Formula One and the Cadillac car brand together.
All right, Dan, great having you here with us. Really appreciate you joining us. Dan Tauris, there, the CEO of Cadillac Formula One. Coming up, it's No from Novo on those obesity drug copycats. We'll discuss how the drug makers' legal battle of hims and hers could impact the competitive weight loss market with Rajesh Kumar, Senior Global Life Sciences and Healthcare Analyst at HSBC. This is The Close on Bloomberg.
At Veeam, we believe resilience isn't hidden in code. Real resilience is about you, your team, and the moves you make when the stakes are high. That's why Veeam builds the tools to sharpen your instincts, accelerate your actions, amplify your impacts in real time. CCHH. Only time that matters. Because without you, your grit, and your determination, resilience is just a buzzword. Real resilience is personal.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making. That's what we cover each week on our podcast, The Deal. I'm Alex Rodriguez, former baseball player turned business.
All right, so we're just kind of cruising here. Pretty decent day. We're still up 40 handles on the day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Monday, February the 9th. We got about 40 minutes to go. 40 minutes in this trading session.
It's beyond just paint. It's saving time, money, and effort. So we can dream big, even bigger results.
That out of whack. So maybe I should try to be buying the market on pullbacks. if you hear the news that's out there, you'd be going to cash and be sitting there missing when it moves. So I'm one that I think the VIX is a very good information. It's 1 day, so you got to watch that. I like 1 month or like 20-day moving average on volatility, and I think that's very informative, or at least gives you maybe some calm that hey, I can hang in here while we
Wells Fargo moving back up to the highs. JP Morgan pulling back a bit.
should have been 8 or 9% of the S&P 500. Energy's talked about all the time as one of the drivers for sure on inflation, and yet I think the S&P is like 3 or 4% of the weighting right now. So because technology got so large, maybe financial services and other, it weighed down the energy. And yet, if you think of, I like to study what I call tabloid research. What all the tabloids talk about. Everyone talks about the oil trade and what's the oil going to and how much does it affect inflation. And yet we just don't think, why is it only 3 or 4% of the S&P 500? I would argue most people are underweight energy, so I think energy is one you want to be watching, or if you had opportunities to buy. It's not because I think oil's going up. I think oil may stay in these 60s for a while. The U.S. oil market, and for sure with Venezuela, we can make money at 60. The rest of the world can't, and it's probably a great trade to defund some foreign actors that maybe like wars. There's some side benefits.
Yeah, I mean, they've been talking about the fact that this is going to be a commodities bull market very much across the space. I'm just wondering, getting back to what we're seeing as far as this value rotation, which has been particularly aggressive. I mean, if you take a look at consumer staples, if you take a look at industrials, I mean, Tran, for instance, regional banks even, all at a record this year. I mean, no doubt that's what's been obviously helping things out. But I mean, if you take a look at consumer staples ETF, it looks like on a 14-day RSI, the most overbought on record. Does any of this concern you as far as the value rotation we're seeing looking stretched right now, Ben?
It's been short-lived. I actually love seeing it. I mean, value was, maybe we could argue it was in depression for a long time. But the momentum trade, I mean, last week we saw heavily break down momentum and then it bounced back. So you saw the recovery. But I think this inversion of, who's going to win and is value going away, I don't think so. But I think there's going to finally be a tug of war where there was no tug of war for a long time. I think value and buying it at the right times is good. Momentum's going to bounce around, but last week was really interesting. You see the momentum trade definitely broke apart in the last couple of weeks, and then it recovered. So I like that trade. I think value is something to be looking for. Sustainability, just like we talked about sector rotation, the problem is these things may have a short life.
So, but if they have a short life, and with this tug of war that we're seeing going on, leadership now changing in weeks instead of quarters, like we've historically seen, how should investors think about exposure in an environment where the trends are seemingly so short-lived?
Yeah, I think looking for sure broader investments, I think are better. I have a little bit of problem with. Especially when you get into some of these, I'm an ETF person. There's some of the levered single stock products. I think people could just get, unfortunately, almost wiped out. So I think broader based is better.
S&P is still fading.
Value again on a pullback, or if you get an opportunity, or momentum. If momentum drops, some great.
Daily still works pretty good. We got the S&P, the New York Stock Exchange, IWM, all of these making highs. IWM moving back up to the highs. IWM, nice follow through. New York Stock Exchange, Riot. Okay, looks pretty good. Riot, IBIT, IBIT, coming off the low. What's GE doing? I haven't looked at GE today. GE off a little bit. GE. Google. Google Hims and Hers. A big gap down on Hims.
IBRX. HIMT. HIMS.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market Flows. I'm Marley Kate alongside Sam Bottis in New York. We are seeing software names stage a comeback today, and Wedbush's Dan Ives could have something to do with the gains that we are seeing in a couple of the names. Salesforce and ServiceNow have been added to the Ives AI 30 list. He said that the Armageddon sell-off the last few weeks assumed that software and tech themes are structurally broken, and he strongly disagrees with that theory. Roblox and Baidu were removed from the list to make room for these new names. But let's take a look at the software names who've been really beaten down over the last couple weeks here, showing improvement pretty much across the board. Now, a couple of them have their own headlines too. AppLovin has a headline contributing to its move to the upside. Oracle has that bullish note from D.A. Davidson. But we are seeing Palantir, Microsoft, and CrowdStrike all move higher. Software having a good day after being beaten down so far in 2026. But Dan Ives says that they're not fundamentally or structurally broken, at least in the two names that I just mentioned. Do you want to shift gears here, though? Welcome our next guest. Joining us now, Suresh Krishna, the president and CEO at Proto Labs. Suresh, thank you for being with us this afternoon. For our viewers who are not as familiar with Proto Labs, would you mind telling them what it is that Proto Labs does and where you sit in the manufacturing ecosystem?
S&P is still fading. Previous pivots. VWAP is right here, so it looks like price action is moving right back to VWAP.
Almost all the startups and most of the Fortune 500 companies, helping them innovate. We are the backbone of innovation for America, and we work with almost all the companies that are pioneering innovation in the United States, irrespective of what sector it may be, whether it's satellites and drones or robotics and med devices. We are there in every industry, and we are helping companies accelerate innovation and make America the winners of innovation every single day.
So you recently reported earnings. Congratulations on the quarter. You raked in $136.5 million in revenue. That was 11% growth year over year. Just wondering, how you would characterize the quarter and what drove
I'm CEO for the last 8 months, and our company had not grown for several years, even though we were a pioneer in this particular space. Fourth quarter of 2025 was our best quarter since 2018, the highest quarter, both and the best quarter from a top line and bottom line perspective. We grew 11% on revenues. We also grew our margin 140 basis points, and our EPS was up 17%. So we had a record quarter, and it was primarily based on what we're seeing in the marketplace around innovation. A lot of companies, whether they are in rockets or satellites or robotics, are looking to drive innovation in the United States. And being a U.S.-based manufacturer,
All right, we continue to fade here.
with our fast turnarounds, we can make custom parts same day. In some ways, we are the Amazon of manufacturing.
And Suresh, question, speaking here with revenue here, but your revenue per customer contact, saw that jump 23% in the quarter as well. What's driving that increase? Is it more services per project or a deeper customer relationships? What are the trends that you're seeing?
Marley, that's a great question. We are absolutely driving deeper customer relationships. We have an e-commerce storefront, and that allows for transactional volume as we see more innovation happen. But we're also building a sales force that is building deeper connections with all our.
All right, starting to see a little bounce here.
Focus on every customer we have. We have thousands of customers every year, but we are also very focused on supporting the top customers with deeper customer relationship, helping them find the right solution. We offer 4 different service lines: injection molding, 3D printing, CNC machining, and sheet metal fabrication. So working closely through our account teams, we are able to provide the best solution for these 4 customers, and that's driving our revenue per contact higher year over year. 23% is the biggest growth we've seen so far.
265 stocks advanced on the S&P 500, 54 on the Qs. Decent day today. Microsoft. Nice reversal day on Microsoft, day 8.
You talked about data centers, which is one part of what we support, but we support all industries. So we are far more broad-based than being exposed to just one industry. So we are seeing a
Energy stocks doing well. Financials. Some of the industrials look good. We sold some put credits on Boeing. Nice follow through on Boeing, end of day. Continuation here. Boeing looking good.
We pioneered digital manufacturing. So for us, the way manufacturing left the United States several decades ago is not the way it's going to come back. It's going to come back the way we do manufacturing. We run over 1,250 machines in the U.S., and it's run by software, not human beings. And we use a lot of AI in how we are accelerating and providing speed to our customers. That's the way we see manufacturing come back. And
all right, S&P is still fading. S&P.
Our business model, because we are leaders in this space, and the way we do manufacturing is how we expect manufacturing to come back when it reshores in the United States.
You've talked about some of the challenges, however, Suresh, in Europe. I see that actually your revenue was down, and you talk about
I know, but aren't they gonna have to go back up?
That's an interesting point. FanDuel has not really invested anything on customer acquisition for the prediction platform. They say it's coming from states where sports gambling isn't legal. So there's a big yet for it. It's
Like
coming from-
California, right?
Yes, California.
Where the Super Bowl just was.
So frustrating for them. And
Guess where the Super Bowl's next year?
CCHH may resume in less than a minute.
California.
Yeah, LA, right? Got back in LA. Boy, LA got lucky with the number of Super Bowls they're hosting. Are the tribes going to revisit trying to get this in the books? And does it really cannibalize sports books? It doesn't look like that right now.
Good stuff. As
Yeah.
always.
NSC.
All right, we continue to drop off here, S&P.
Peak uncertainty in software stocks feels like it's a Ashley McNeil. He'll tell us more next.
VRLS.
Spent most of the day up in the higher part of the range. We've got sellers coming in end of day.
CCHH may res in 10 seconds. IBRX.
As well.
But you need an enormous number of tourists. We got to be rotating capital out of the
CCHH.
new economy into the old economy. Let's take the hyperscalers.
CCHH.
They're investing, hundreds of billions of dollars into data centers that are going to consume power. How do you produce that power? Is with commodities. You need the copper to produce the grid, the transformers. You need natural gas to produce the
Riot.
power in the United States, and then you need
Nice trade today on Riot.
resources elsewhere in the world. So
Near the highs of the session. Bitcoin. Bitcoin trying to push higher. Bitcoin back above 70,000 today. Okay, let's see if we can follow through tomorrow. Futures starting to see some short covering with 21 minutes to go. 21 minutes to go.
Well, Jeff, we only have a minute left, but that's actually exactly where I want to go. The fact that, you think about what we're seeing right now, this new profile of investor coming in. I won't call them tourists anymore, but can you draw a parallel between any other periods of times, given your experience covering commodities? What time period does this most remind you of?
2001, 2, 3, and 4.
CCHH.
That was the end of the dot-com boom. We saw
VRLS.
that's when we coined the term the revenge of the old economy. It swung out of the new economy, which was the internet, and into the old economy. Yeah, I saw a great comment earlier today.
Nice little bounce. All right, Riot, Bitcoin starting to bounce. S&P starting to bounce.
CCHH.
What was it last night in the Super Bowl? It was all about
CCHH.
We'll see how long this lasts. But I think the key point this time around, those internet guys weren't putting steel in the ground. These AI guys this time around, they're putting steel in the ground, and they're going to hit those constraints, and we'll likely see that rotation.
All right, Jeff. Never enough time. Really appreciate it. What a great conversation. That is Jeff Curry. He is Chief Strategy Officer of Energy Pathways over at Carlyle, talking about the start of a new commodity super cycle, Matt Miller.
And when he talks, people pay attention. I had a number of viewers and Bloomberg clients writing in. Jeff Curry is killing it, and he is quite good. I can't wait to go back and listen to his conversation with Tracy and Joe.
Oh, I know, but you want to keep the sound on when you're listening to the close because we have some great guests.
All right, got a MACD cross coming potentially.
HIMS.
External CEO. This is Sappy Hour, and it's up next.
VRLS.
HIMT.
Welcome, New York Network, to the brief from
Bloomberg Media Studios.
Thank you.
Great to have you.
Thank you.
So we're at Davos, the convening of business leaders, policy, economy.
UHG.
What is Apollo Tyres hoping to accomplish here?
So Apollo Tyres is one of the leading tire manufacturers in India. We have operations in Europe, specifically in the Netherlands and Germany. We've been coming here for the past 50 years.
All right, nice little bounce. Looks like somebody was just closing positions, maybe dealers.
Is in every part of that ecosystem. The teams and the mature women's leagues, we plan to invest in those just how we have at Denver FC, Denver Summit FC, where we sold 8,500 season tickets and over 40,000 tickets for our home opener, which is amazing. We also see it in the real estate and real estate related businesses that surround it. Unsexy things like janitorial and parking that have great cash profile to balance out the returns that come from the team. And also make sure that you have world-class guest experience at these facilities. Also the leagues that could be next in high participation women's sports like volleyball, softball, track and field, flag football, and some others. Youth sports, which many are structured like private equity roll-ups with great economics that create the fans and the talent for what's coming next, and the technology businesses that surround it and make the P&L more profitable or the players more healthy on the field, court, and pitch. We're investing in that whole ecosystem because it's best for our LPs. We get real private equity quality returns, and it's great for the athletes and the fans.
Jason, I'm also curious about the sort of player
CCHH.
on the women's side. We
CCHH.
right now are watching the
IVRX.
WNBA players union, the negotiations with the players union. And we've seen some quite contentious women's sports negotiations on that front. Do you think that the leagues are recognizing what they have, recognizing the worth of the players? Do you think that the players, sort of where does the power reside at this point?
Yeah, I'm actually very excited
You
to
okay?
see challenging CBA negotiations going on in the WNBA because to me, as a former NFLPA rep who was our representative for the Cardinals during the
All right, let's see what we do here. Does S&P continue to consolidate right here, or do we pop back up? Got 16 minutes to go, 16 minutes to go in this session. It is Monday, February the 9th. MACD's trying to cross, coming into the closing bell.
BLSH.
Hedge flows hooking back up.
IVRX.
Have the ability to zero in and figure that out. I want you to listen to what Brad Gerstner told me out in California last week and get your reaction to it. Here's Brad. I'm not penalizing them because they're missing their numbers today. I'm just putting it in the too hard bucket because I can't predict those future numbers. So the only way that reverses, Scott, is those companies have to accelerate their core revenues and show that they are beneficiaries of AI. The companies that do that, Databricks.
Okay, futures starting to rise as well.
IVRX.
Snowflake, ClickHouse, these are companies that are accelerating their core revenues because AI relies on them. I think they'll do fine, but application software where I can't see into the future, they're going to have lower multiples. Show me, right?
I mean, this is the messy middle part. This is part of the J curve where we move from the
We're starting to move a bit higher now.
the layer that embeds that intelligence across the organization. And then there's going to be workflows that don't need agentification, that don't need that intelligence layer. And those are software companies that become your rule of 40 going to rule of 60 or 70 because they're embedding AI within their own organizations. And then there is a bucket of workflows that are generic or commoditized, or ultimately the software company has not innovated fast enough to keep up with the pace of change. And yes,
A
these are
VRX.
companies that are going to see declining revenues.
If we're witnessing this taking place in the public markets, where you guys, Vista Equity, you guys play huge in private markets, where the majority of software companies exist. If multiples are correcting to the degree that they are now, and if you believe Brad will continue to do until you can
IFBD.
show me behind it, what are they doing in the private market?
IFBD.
The uniqueness of the private market is the ability to incorporate this change without having to be in the public eye.
Without the scrutiny.
Without the scrutiny. At Vista, we have 90 portfolio companies. We have a third of them are deploying agentic solutions or agents out in the field. And you're able to collect data and trial and error from those deployments to understand which workflows really benefit
IFBD.
this intelligent layer, this thinking layer, and which ones ultimately don't need to be identified and can continue to provide services without needing these changes.
You talk about what you call competitive differentiators for agentic enterprise solutions. First on the list is context moat. I feel like
All right, MACD cross. We've got 12 minutes to go. 12 minutes to go.
and maybe the hardest to figure out, because what we thought could be the moat has been busted to some degree. Now there is no moat. Maybe there is, but we're not sure anymore who has the moat. Is that true?
I think a way I think about it is that like we are going through a seismic shift in software. It's similar to what happened in 2014 when we saw software having to adapt from moving on-prem within an organization to the cloud. And that's similar to what we're going through now. The incumbency mode, I think, is being overlooked in this most recent market pullback. And that incumbency mode comes in three parts. First is like the contextualization of the data. Data is a transitory mode, meaning your customers own it and you have domain and sovereignty over it as a software company. Your ability to contextualize that data, if you are a trusted partner, which if you have collaborated with these enterprises for the better part of 25 years, and I'm talking about hospitals, insurance companies, government agencies, these are highly regulated industries that can't take the chance of the agent only getting it 93% right. It is a deterministic outcome. They must get it right. And that is where software, the incumbent software, provides that certainty. And then finally, it's the platform. If you look at these very large software companies, and some of them that Brad even mentioned, they're embedded within an organization at several different parts. They have several different features and products within an organization. Adding the agentic layer to those different, they will understand how to add those into each of the different workflows.
I feel like we get smarter on the topic every time we
All right. Nice little bounce off that level there. A little profit taking into the 3 o'clock hour. Did bounce. Not a bad day. Look for a follow through tomorrow.
IBRX.
Thank you, I appreciate it. D.A. Davidson getting bullish on Oracle, upgrading that stock to a buy as its ties to OpenAI and TikTok pay off. Here discusses no other than Gil Luria, D.A. Davidson's head of technology research. Gil, always great to see you. So let's dig into this, Gil. You're upgrading your view on OpenAI and its
IFBD.
orbit. In plain English, explain why, Gil, and why public market investors who are listening right now, why should they care?
Well, yes, this really is about OpenAI. And if you look at the stocks for the last 6 months, what you've seen is that the market has decided that Google is the only winner.
IBRX.
And then the whole OpenAI complex orbit is lost, right? So that's why Google has outperformed Microsoft, NVIDIA, Oracle so much over the last 6 months. What we're arguing is that Google is a winner, but the race is not over.
VRLS.
And while OpenAI was meandering a little bit a few months ago, they are now far more focused on what they should be, which is ChatGPT and good frontier models. They're also now
All right, Chevron still pushing. Chevron. Nice day today for the oil and gas names. Energy. Energy keeps going. Bitcoin, nice turn on Bitcoin. Riot, turning the corner. Microsoft turning. Okay, looking for Microsoft to start building some higher highs and higher lows over the next few days. S&P is starting to move here.
IBRX.
When you say state of the art there, Gil, I'm just curious, better than Google, how are you judging that? You know, by what variables, by what metrics?
Well, we benchmark it internally. My company looks at the public benchmarks, and then he also runs
Chevron.
to see how they compare.
Chevron looking for a push. Nice push off the low there. That 3 o'clock low pushing higher. Chevron, ConocoPhillips, Diamondback Energy. Okay, all of these looking good. ExxonMobil. New highs of the day. Boeing. Nice little pop. Boeing, a little fade, a little profit taking end of day. Exxon still going here. ExxonMobil.
What about those, Gil, who say, I'm interested in your take on this, and we've had tech analysts on the show, they look at Google and they say, Gil, Sundar Pichai, he just has certain advantages over Altman. He's got that full stack. He's got the chips. He's got the cloud business. He's got the distribution.
We are in the market zone. Mike Santoli and Truist Keith Lerner here to break down these crucial moments of the trading day, plus Brandon Gomez on what has shares of Hims and Hers tanking today, and Christina Partsinevelos standing by with what to watch for from On Semi's report in OT. Michael, to you first. What are your thoughts?
I mean, the market is trying to make the case that it's back in rhythm a little bit. Maybe, kind of overdid it in terms of walking away from some of the mega cap names. It really is NVIDIA, Microsoft, Broadcom protecting the S&P today, although it still is, again, broad enough that it sort of, earns the market a little bit of legitimacy for this move. We still remain stuck in this zone in the S&P. The VIX has had a nice spike peak from last week's, little bit of a shakeout, and that often it shows you the market has found its footing again after it sort of goes up and mostly gives up that gain. So I think it's all to the good. I still think we kind of are lucky to have gotten to this point 5 weeks into the year without too much more payback at the index level, but I guess that speaks to the underlying resilience.
Okay, S&P pulling back. Still up 29 handles on the day, pulling back.
IFBD.
A little bit, but I'm not sure that we're back to the days, when we just sort of, allow those stocks to carry things higher.
All right, I suspect we will hear much more about this top of the hour with you and Mel. We look forward to that in overtime. Mike, thank you. Brandon Gomez, tell me more. What's going on here with Hims and Hers?
Hey, yes, Scott. Always an update. Hims taking after Novo Nordisk filed a lawsuit against the company, asking the court to permanently ban Hims.
ExxonMobil still moving here. ExxonMobil. S&P 500 pulling back and just bounce there. Okay, not a bad day. Not a bad day. We got 4 minutes to go. 4 minutes to go. Coming into the closing bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, February the 9th. Oracle had a nice day as well. Oracle. Looking forward to more upside in Oracle in the short term. Next few weeks would be nice to see Oracle move back towards the 50-day. IBIT, shorts covering, pushing it back up. Coming to the close, we got 266 stocks advancing today, 54 stocks on the Qs, 266 on the S&P 500. IWM just off the highs, had a nice day as well. IWM. Texas Instruments, number 2 on the SCHD. High dividend ETF, SCHD. They're talking Texas Instruments at the moment. Okay, Robinhood, we got earnings tomorrow. Robinhood's got earnings tomorrow. Got 3 minutes to go. Robinhood, nice bounce so far going into earnings tomorrow.
If you burn that out, we're seeing global markets break out to new highs. The EP index, Japan making new highs, emerging markets making new highs.
2 minutes. 2 minutes to go.
We're seeing some money come back into the technology sector. The technology sector is bouncing off that 200-day moving average. And Scott, let's remember how much this sector has been re-rated by moving sideways because the earnings momentum for this sector is still the strongest among all the sectors.
Apple had a nice turn off of the low. We identified that earlier. Apple, nice turn off the low during the 1 o'clock period, turning back up. Apple looking good. Apple, nice follow through. Back above VWAP and rising volume increasing, coming into the close. With 1 minute 40 seconds to go. 1 minute 40. Coming into 1 minute to go. And that's a wrap, folks. I have a hard stop. Hope everyone has a great evening. We'll see you first thing in the morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell, Monday, February the 9th, 2026. I'll see you guys early. Take care.